and Infosys ADRs were up, and rupees at 96. So I think from here on, the TCS is trading at 15 times trailing earnings, and with a very good about 3.5% dividend yield. So I would say that there are some pockets of safety. Pharma has done very well, for example, but I would say that kitna bachoge. So you have to be careful, but I think 4.63% US 10-year, I think it is time for Techo to play out now.
Can they make it play? I think it's the question. You know, I think even if midterms around and yields so high, and therefore, even if you want those rate cuts to happen and the Fed can't do it, can you engineer a lower inflation print by ending the conflict and bringing crude prices lower? I think these are questions above my pay grade for sure. I don't know about the other 4 people on the table. But Kush Bora, let's try and figure out if the charts, which are definitely in our pay grade, tell us a different picture than the slight skepticism that the market seems to have this morning.
So first step, and I want Alex to say whatever he's thinking of saying, and he's just held back.
No, of course, I completely agree. I held back for a good reason.
Of course, just prodding.
Because I don't know how much you earn. So I was not sure.
Just prodding,
what
just
you saw
prodding.
in my face was the uncertainty. Should Kush be able to answer this question or should he not?
My apologies if I assumed something. No, but independent of that, this is more about.
Yeah, that's how you want to start your Monday mornings, right? With a wide smile, no matter what the markets are doing, right? So no, there is pressure, no doubt about it, right? And the Nifty broke the 2-week winning streak. Now, while technically you can say, there's a positive with the Nifty making a higher high, higher low candle, on the daily charts on Friday. The price action just does not inspire confidence, right? So I wouldn't really trade Nifty on the long side right now. The 50-day moving average, as you can see, there has proven in the last month or so to be a bit of a resistance level, which it has not been able to cross convincingly. So until we get above the 24,000 mark, close there for a session or two, I think the trend is going to remain sideways to bearish. Even the indicators, by the way, are neutral to negative. You look at PCR, you look at RSI, a lot of these indicators are neutral to bearish. 23,200, 23,400, there's a gap around those zones that can be filled if this pressure persists, and then we see where do we go from there. But amidst all this, there are 2 data points which are weak but still have a hint of silver lining. So first is the FII short positioning on the index futures. They are still heavily short with about 88%, on the short side. But for the last couple of sessions, they've been reducing their long positions. Friday, it could well be the Friday effect. They want to cover, some of it. That's fine. But at least the fact that as a trend for the last couple of sessions, they've been reducing their short positions. So that's something to just, keep a note on. And secondly, the breadth of the market. If you remember, last month, we discussed that the number of stocks below the 20-day moving average on NSE 500 were just 30. Clearly indicating overheating, and that's when we said that you have to be a little cautious on the market. Now it's gone to 310. So the number of stocks below 20-day moving average on NSE 500 is 310. When this number goes to 350, 400, that's when the oversold nature of the market comes in, and you could have another rebound. So if the markets open where they are, opening, perhaps even slide further, we could head to that mark and perhaps play or make a case for rebound. Not just yet.
Okay, there is a case for rebound, not just yet. What about your stocks?
Yeah, have to go with a mix of long and short given how the market is set up, right? And being Monday, the weekly pick, Markson's Pharma. I mean, if you've noticed, we've had a pharma call practically every day, if not every second day, on our list. So that, that trend continues because that's the safe spot right now. So Markson's Pharma for a target of 216,225 and a stop loss at 198 is the weekly pick for today. And then Genus Power, this is one stock that we've been discussing, for a while. Along with the markets, it's seen some correction, but the bias remains positive. So, on the long side, 324, 333 are your targets. 304 is where you keep that stop loss. And on the short side, Ereda, again, not doing much. The rebound rally fizzled out rather quick even before the market started to head down. 125, 123 are your targets on the downside. 129 is where you keep that stop loss.
With these interesting names, when you mentioned about pharma as well, you have Gland Pharma, which has reported numbers today. Strong growth coming in there from the pharma pack or healthcare pack. You have Kim's. Again, your revenue growth has been very strong. Aarti Drugs Aurobindo Pharma has received an approval. Dr. Reddy's has launched the generic version of semaglutide. Acum Drugs as well, where their, Haridwar operations have resumed, now resumed over 70% capacity. So almost 7 to 8 pharma companies that will be in focus today. Parag bhai, any view in any of these names?
No, so basically, I would also, so Aurobindo we have discussed in the past, around 1200, 1250. Dr. Reddy, of course, semaglutide is the thing, but I would say that what replaces the earning traction of Revlimid is a key thing to watch in some of these generic companies, because Revlimid is now going out of the base. So now you will have to see the real new product launch driven growth like semaglutide and all. So I would say that of course pharma has been one of the good hiding place of, and it has proved to be like that. So even for example some companies like Granules, they have also reported very good numbers. Even Cipla on the result day was doing well. So I would say that but in pharma one has to be very careful of one thing, that if it is a complete generic company, the price erosion which takes place sometimes can take you off the guard. So that is my caution in pharma, because the earnings sometimes cannot be recurring.
Let's talk about the charts as well in the pharma space, because as Parag bhai has pointed out, this is a pocket that has done okay in the recent past. Would you hazard to get into these at this moment, or would you avoid?
Yeah, selectively I would. So Aurobindo, by the way, has run up quite a bit. So I wouldn't be surprised to see some sort of a pullback, maybe about 3 to 5%, if not deeper, on Aurobindo for sure. But the 3 stocks that we've discussed on the channel as calls are doing reasonably well. Senoris Pharma, by the way, this had a fantastic move on Friday, right? So Senoris Pharma continues. Ajanta Pharma, after a good run, has seen some pullback on Friday. So these are the 2 that you can definitely keep on your radar. And then Alembic Pharma, APL Limited, this is one more stock that has been consolidating in a market which is correcting. So if I were to pick along with Marksons, it would be these 3.
Okay. Well, a lot of pharma names and a lot of chemical names, like we said, have actually come out with numbers which are interesting, and we'll talk about some of those. Okay, but it's 8:45, so before we move any further, let's go across to my colleague Somit Sarkar with all the chatter from the dealing room. Somit, what did you find today?
The first stock on the list is actually Acme Solar. Now, dealers are expecting that very soon an announcement regarding an OFS or a fundraise could come in at a lower price, and hence this sell flows coming in when it comes to Acme Solar. For Shilpa Medicare, if you look at, there are buy flows on the large HNI desk. There is a buzz of some drug approval that is expected to come in anytime soon when it comes to Shilpa Medicare. For NRB bearings, there is a prominent large HNI who has been accumulating this counter in trade, and dealers are also expecting some positive corporate development that could be announced very soon. For Samvardhana Motherson, there are buy flows on the institutional desk. Dealers are expecting a strong Q4 numbers to come in here, and that's the reason the stock was also up nearly 3% on Friday.
So quite a few stocks to talk about. Somit, thanks so much for that. And some of these stand out, right? But before we get to a conversation about some of these, Somit, while you're with us, let's talk about Vodafone Idea, because there's so much to talk about with regard to the implications of the AGR dues that were just adjusted, right? Because that was what led to that profit number, the exceptional item that came through. Can you take us through those numbers and what stood out?
Well, for Vodafone Idea, if you look at the profit number was largely because of this accounting adjustment, which we did highlight even when the AGR announcement had come in. So given the fact that the AGR amount is going down by around 27% and the payment period is quite elongated, they had to adjust that amount, and it's just an accounting entry and not a cash that is coming into the books. It's just a accounting entry, and hence this profit number is coming in. If you remove that, then the loss number would have been close to around 5,515 crore rupees. Overall, the numbers are pretty much in line, but if you go into the details, firstly, on the fundraise, I'll highlight a preferential allotment to the AB Group. Aditya Birla Group has also been announced. 430 crore shares will be given at a price of around 11 rupees per share, which translates to close to 4,730 crore. But do remember, it's a warrant, so around 25% will come upfront, while the 75% will come in a staggered manner. Now, what were the good parts in the result? Subscriber dip was negligible and in fact flattish on a sequential basis, and this is after a very long time that we are seeing that there has not been a meaningful subscriber dip in Vodafone Idea's number. ARPU rose 1.2% on a sequential basis, and this is much better because Bharti Airtel had reported a drop, while that for Reliance Jio was largely flat. So a good number coming in on the ARPU front, which means that customer monetization process has started in Vodafone Idea, and that is showing on the ARPU number. And despite network expansion, expenses grew lower, which also led to more revenue coming into the EBITDA, and EBITDA margins also increased because of this for Vodafone Idea. And churn rate reduced in the fourth quarter of FY26, which also reflects that the company is clearly now focusing on quality subscribers. So these were the good parts in the result. Now on the negative side, if you look at the allotment, firstly the fundraise, it's being done at a discount of nearly 15% and Street was expecting a large external investor to come in. At this moment, what is happening here is that there is some dilution that is happening, which will keep valuation growth or earnings growth under check for minority shareholders. And given the fact that this dilution is also happening at a discount of around 15%. Now, capital expenditure, that continues to remain low, on the lower side, 2,300 crore rupees. And this is quite obvious given the fact that the fundraise is still not happened in the company. So post this allotment, and if the company is successfully able to raise debt, we'll have to see what kind of capital expenditure the company does going forward. Now, when it comes to the subscriber number, yes, it looks flattish, but that is largely because of the M2M net adds. M2M are B2B SIM cards that the company adds. An actual prepaid subscriber number would have been actually lower for the company. It would have been around 1.4 million subscriber losses on the prepaid side is something that we would have seen if we remove the M2M numbers. So yes, the subscriber numbers look stable, but that is largely aided by the M2M subscribers that are B2B subscribers. The prepaid numbers continue to decline for Vodafone Idea.
Yes, indeed. Okay. So Amit, thanks for that. Thanks a lot for bringing us those updates. And you know, on Friday we were talking about how telecom has some optimism because of various factors, including Airtel, and with the Vodafone Idea board meet slated on Saturday and the possible fund infusion. Now that has happened, but Parag Thakkar, it's happened at a price of 11 rupees, right? So in some sense, not exactly all gung-ho. What's the view, therefore, on Vodafone, if at all, tactically, and on Indus Tower as a result?
No, so the point is that you're right that the dilution has happened at a lower price, plus the amount is also small, and plus it is warrants. It is not direct equity, so it is 25% of 4730 crore will only come right now. So going into the event, Vodafone Idea went up, so I would say that it might cool off a bit. Same applies for Indus Tower. But I think the case for Airtel even strengthens furthermore. So if Bharti Airtel falls because of 4,730 crore coming in Vodafone, and so Vodafone becoming more, I would say, live and kicking, if somebody sells Bharti Airtel for a lower price of 1860 or something, I would be a buyer.
Okay.
Because I think, see, if you see Vodafone's result, 4,900 crore is a EBITDA. And you know the interest cost is also same now, and they have got a 1,50,000 crore debt even after doing all this. So you know the 20,000 crore EBITDA, 1,50,000 crore is a net debt even after doing all this AGR thing. So they need a tariff hike for sure.
So that is the need of the hour. But on the charts, are you seeing pressure because you're talking about a 15% discount to the current market price in terms of the promoter infusion right now? So short term pressure today?
Yes, my views on Vodafone Idea, I think, are pretty well known by now. But you know, very interesting and very surprisingly, from a near-term perspective, once the rebound came in a host of stocks, Vodafone, you know, surprisingly, like I said, did not crack or did not give that up, right? So from a very near-term perspective, technically the setup is positive. 11, 11.5, 11.25, that's the zone. Incidentally, ties in with the number that you know when you mentioned. So until that number is held, I think the near-term trend for Vodafone remains positive. I would keep a stop loss at about 11 if I'm going long, you know, at these levels, or maybe even at declines, you know, once the stock opens.
Okay, all right. So that's the word on Vodafone Idea. So watch out for it at the start of trade today. Now, in a major move after the government approved 100% FDI in insurance sector, British insurance giant Prudential PLC is set to acquire a 75% stake in Bharti Enterprises. We spoke about this just a short while ago. It has implications for ICICI Prudential as well. Let's bring in Sharad to talk about some of the details here. Sharad?
Well, rightly pointed out, Alex, regarding this important deal, but just wanted to give you a heads up of what does actually Prudential PLC hold in India. First and foremost, they're having a 70-30 JV with HCL Group promoter entity for a standalone health insurance and 35% stake in ICICI Pru AMC and 22% stake in ICICI Pru Life Insurance. Remember, ICICI Pru Life Insurance, it's likely to be sentimentally negative, and the company has stated that there's a regulatory norm. They have to get their stake below the 10% mark. Right now it's at 22%. The company has also come out with its view in the exchange filings. Now Prudential will seek appropriate time frame from this divestment, and the Prudential's health insurance operations, these are expected to start in 2026 as well. But a lot of interest has come in the Indian markets, especially with the foreign exposure in the MNCs. We had rightly discussed about the Alliance JV with Jio, but there are a lot of other setups also. Of course, AIA Group is having with the Tata AI Life Insurance, they have a tie-up, while Sun Life Financial, which is from Canada, they have a stake in Aditya Birla Sun Life Insurance. And if you look at the other names also, there is PNB Paribas with SBI Life Insurance and HSBC with Canada HSBC and Alliance, of course, having earlier with Bajaj Alliance Life Insurance and Finserv, and now moving towards Jio as well. Generally Group, interestingly, with Central Bank of India, they have a tie-up, and Aviva Group with Dabur Investcorp, and lastly MetLife with PNB as well.
Got it. All right. Thanks so much, Sharad, for that. Parag bhai, your views on this and what you think about the implications for ICICI Pru? The expectation is that it will be under pressure today. Does that present an opportunity, or would you wait for the dust to settle?
I will wait for the dust to settle, because it is 12% holding which they have to sell, right? So minimum. So it's a big overhang, I would say. So of course the stock is at a very attractive level. That I agree. But there's a big supply coming in, and it will keep on coming, right? They'll have to do it in phases. So I'm not in a hurry to buy.
You know, the other thing, Parag bhai, is that because Allianz has done this move wherein they have broken from Bajaj and moved into a new player. Now Prudential is doing this move as well. Does this place, whether listed or otherwise, the other players which have got MNC life insurance companies as their JV partners under a bit of a cloud? Maybe,
it might be a trend that these guys want to move out of their old JVs and enter into new JVs with new people. Yeah, better terms. Yeah. So this might be a overhang.
Where does ICICI Pru Life come in a sweet spot? We know that it's going to be under pressure today. And what valuations does it come under a sweet spot?
I think at 475, 480 levels, it becomes attractive from intrinsic value perspective.
Okay, so I have.
Of course, it is attractive today also, but this is a known overhang. So
I hear you. Okay, so this is about what, 10% lower. So effectively, Parag Thakkar is saying that if it kind of falls down to those levels, then it becomes attractive. Not that life insurance companies have created tremendous wealth, Kushbora, but ICICI Pru had a great listing, created wealth on listing in some fact. Actually, no, that was
SBI Life.
SBI Life, yeah. ICICI Pru hasn't quite done that, right? So therefore, what do the charts suggest here?
You know, I agree with the line that you mentioned, which they've not been great money spinners, they've not been great wealth creators, so hardly ever fall on my radar, from that perspective. In fact, when I was looking out for short calls, for today along with Irida, LIC was one of those stocks that, could have been, a short call. The only reason it's very close to 800 levels, right? So there a few psychological factors come in, option writing comes in, all of that, and hence that did not qualify. But while this is not a short call, ICICI Pru has supported 500, by the way, just to close that conversation out. There may not be a very big and a very sharp upside. So I wouldn't really be buying into this dip, even if it comes about, even at 500 odd levels or maybe just under.
One other stock that Hiral highlighted, Parag bhai, and that's Godrej Industries. Very strong. Actually, there's a set of names which had some good numbers, right? So let's figure out which one do you like the best amongst the lot. There is Hind Copper, great numbers. Godrej Industries, very good numbers. Azad Engineering, not so bad a set of numbers either. Park Medi, very good numbers. Tattva Chintan Pharma, very good numbers. 4 or 5 names. And there are more, by the way. But let's talk about any of these 5. Do you like any of them?
So Godrej Industries is a holding company,
Yes,
right?
exactly.
And so if you see the numbers of Godrej Properties, they were very good. Godrej Consumer was decent. So I think Godrej Industries is the outcome of those results. Plus,
Okay, so leave that out.
Yeah, so that is okay. So that is accepted. And plus, I think Mr. Virosha Godrej has given very positive comments on Godrej Industries. So that will continue to do well. Amongst the others which I saw, one theme which is coming out is, which I would like to highlight is that, for example, I saw the result of Sobhani Ceramics. Again, good, decent results. Of course, Q1 might be impacted because gas availability, gas prices and all that. But I would say that because in every industry there is energy shortage, energy prices are going up, raw material prices are going up, I think the listed bigger companies will gain market share.
Got it.
That is happening in FMCG, that is happening in building material segment like Greenply, Sobhani Ceramics. I'm hearing so, even one of our portfolio company, Voltec Packaging, also highlighted that. So I would say that this is happening across the sectors, which is actually good for listed companies with high market shares. But let's see how it goes. Q1 might be weak for many companies, but.
Okay. And by the way, there's news on Gujarat Gas as well. We'll get to that. But just very quickly, as the markets open up, hear out the management of Alembic Pharma, which spoke on the numbers and the outlook ahead.
Thanks for having me on the call. Let me address the margin point. So we had good underlying operations growth for the year, and then that has translated into the operating margins. And if you look at the EBITDA margins before R&D expenditure, we are at 25% for the quarter, and that is similar levels to what we had in the previous year, same quarter previous year. So year on year, the underlying growth in EBITDA is about 8%. So that broadly reflects the revenue growth. Now, if you look at the R&D spend, yes, we have had a higher R&D spend than what we had in the previous year. And that is specifically attributable to some of the R&D projects that we are doing, especially on peptides and certain one-off items. And if you look at for the full year, we have been at about close to 10% of revenue has been spent on R&D projects, and we've been at the similar levels in the past, and that's specifically towards projects that are driven towards medium-term growth quality and strategic positioning for Alembic. So overall, we see that for the FY26 financial which has gone by, our EBITDA margins for the full year has been at about 16% after R&D, and which has been at the similar levels in the previous year as well. So we've been able to maintain the EBITDA margins despite higher R&D spend than what we had in the FY25. So that's primarily driven by good core margins improvement, core operating profit improvement, and we expect that momentum to continue in FY27 as well, where we expect margins to stabilize and improve, driven by better capacity utilization from some of the existing facilities that we have got, and also we've lined up pretty good product launches in the first quarter of the year, and similar to what we had in the previous years as well. So we will see pretty good product launches that we expect to drive better margin profile in FY27.
Okay, so margins is something that will be on the management's radar as well. But let's just quickly address the rupee. It's hit a fresh record low of 96.2. Record low opening is what we are seeing as well. It hit the 96 mark on Friday itself. But that pressure does continue when you talk about the dollar-rupee pair right now. But 96.18 is what you're tracking so far. Moving on, a bunch of other stocks that will also be in focus on the back of their earnings. Mahima joins us. Mahima, we've addressed a couple of them. What is on your radar?
Right, so Hiran, I'll start with some positive names. SAIL, tops that chart because overall strong realizations have taken place. So strong numbers coming in where Q4 numbers are concerned. The next one is Godfrey Phillips. Now, all of these cigarette manufacturers have done well on the back of cigarette price hikes this quarter, and that has aided the top line number for a lot of them. Godfrey Phillips has also seen a strong Q4 on the back of that. Deepak Nitrite is the other one where overall EBITDA has kind of seen a beat on account of better phenol spreads, and that's why thumbs up for this one as well. Solar Industries is the other one where Goldman Sachs has maintained buy. On the flip side, you have something like a Cochin Shipyard and Case International, where around weak execution has impacted Q4 numbers. And you have Symphony and VIP Industries, where you've seen yet another weak quarter for both of these companies. So these are some of the names on the back of earnings that could see some buzz in trade today.
Okay, so interesting names there. Let's also get in Milan Vaishnav, founder and technical analyst at Gemstone Equity Research. Milan, good morning and welcome to the show. This is Hiral on the side. You were seeing that pressure which has continued to build. There is that tug of war which is continued, because last week as well we saw 3 days which were good, 2 days which were bad. What are charts indicating right now?
Yeah, well, good morning, Hiral. Actually, from a technical standpoint, one negative thing has occurred on the chart is violation of 23,800. So earlier, the resistance that was between 24,300 and 500 has now been dragged lower to 23,800. And that means that as long as we stay below 23,800, we will continue to see some selling pressure. And the extension of the attempted rebound would occur only after the market crosses about 23,800. So 23,800 is the most immediate short-term resistance for the markets now. On the downside, we continue to see that 100 to 200 should stay defended as such, because that will amount to filling up the gap that was created in the first week of April. So now I see that the entire 600-700 point range that the Nifty had created has now shifted lower, with 23,800 acting as an immediate resistance.
Okay, so that's with regards to levels to watch out for. Milan, what would your top picks be?
Mine would be conditional buy today, because we are likely to open a bit lower. So one can consider Tata Motors passenger vehicle above 356. By above means only after it crosses 356, and then with a stop loss of 365, one can expect a 372 on that. Another would be Colgate Palmolive. Again, this is a conditional buy. Only after it goes above 2165, we can target 2200 on it and put a protective stop at 2145.
Okay, so that's a conditional buy coming in when it comes to a Colgate as well. But very quickly, let's just address what's happening in terms of pre-open. If you have to look at the pre-open rates right now, pull up Nifty 50, you're talking about 120 points down, take on Nifty 50, Sensex as well, 400 points. It is going to be a downturn that we are continuing to see in terms of markets, but let's actually head to our big brokerage call of the day, where Sharad has picked up Jefferies on data patterns. Sharad, welcome back. Jefferies on data patterns, what's standing out?
Well, Jefferies has turned bullish on the brokerage itself, but of course the market sentiment might see a bit of reversal in the stock price. They have maintained a buy rating, and the target price has been significantly increased from 3,710 rupees to 4,500 rupees per share. Of course, the margins have beat street estimates, and overall strong outlook continues. Apart from this, the medium-term order pipeline that has actually increased when it comes to the guidance from the company, and the growing defense buy is something which the street is bullish on, and this could reflect in profits rising almost 2.5 times over the next 4 years. Management has reiterated their FY27 guidance of 20-25% of revenue growth and 35 to 40% growth in the margins. 24% earnings CAGR is visible over the next 4 years, and that is why the brokerages are bullish on data patterns.
Thank you so much for that. So that's with regards to where data patterns go. Kush, let me come to you in terms of data patterns, or even in terms of any of the IT stocks. How are you looking at it? Because it's interesting to see that seesaw that the IT sector has been playing over the last couple of days. Today, what are charts indicating?
Yeah, not so constructive, I would say. I think on Friday we discussed कि जो Friday का move था, that was also profit booking, but more of a short covering profit booking. कि इतना short हो गया कि Friday को वो position भी नहीं ले जानी है. Otherwise, if you see, the trend remains squarely, on the downside. Now, here's my concern. Like I've mentioned in the past, the issue with the markets, particularly Nifty right now, is leadership. IT not doing well, banking not doing well, and Reliance, which was doing well, has given way. So what's going to hold it afloat, right? So until that changes, I think there could be pressure. So IT, like I said, there has been massive downturn on IT, even banking. Any positive trigger could lead to a sharp short covering rally. So maybe that's what you want to watch out for. I wouldn't really go short. Data Patterns completes a rounding top formation at about the 3,800 mark. That's the support. If that is broken, then there is a possibility that the slide could actually deepen a little. Medium-term structure still bullish.
By the way, some news flashes on your screen just a minute ago, and there's a block deal that has happened in JSW Steel. JSW Energy is offloaded about 2.5 crore shares, if I'm not wrong. That's comes to somewhere around 1% stake. So JSW Steel and Energy both in focus. Because it's a block window deal, there won't be too much of a price impact on JSW Steel, I reckon. But for JSW Energy, for a business which is capex heavy right now and needs the capital, this might actually be a good capital sourcing move that has happened. So watch out, maybe some optimism out there, if at all, on JSW Energy. Okay, the pre-open rates would have settled or have settled. Let's just see what's happening to some names. Cupid, fabulous set of numbers. I wonder if the stock is reacting positively. Tattva Chintan, very good set of numbers. So Cupid is not. Tattva Chintan, very good set of numbers. Actually, well, flattish, interestingly. Park Medi, a decent set of numbers too. The margins expanded. Let's see if that one is doing okay. No, nothing much as of now.
Neeraj, what I've spotted is all of the good numbers are not really seeing any takers. All of the bad numbers are getting whacked today a little bit.
Hin Copper also?
Hin Copper is okay. Yeah. And among the ones that are working, Genus Power has actually done okay, seemingly. I wonder if it's held on to. Somani Ceramics is reacting positively, and Gland Pharma is okay or thereabouts. I think Gland Pharma pull up and see where it's at. Yeah, 14% or thereabouts. VIP Industries, Power Grid, Rolex Rings, Ratnamani Metals, Bajaj Electricals, Symphony. These are all stocks that are getting beaten down in trade. So I think the market seems to be in the mood to focus on the negatives today.
Well, maybe with reason, but yeah, some of the cooling solution names have had a terrible one, right? Voltas was a case in point, very weak set of numbers. Symphony not doing anything otherwise. Operating profit margins down 710 basis points. So no, not a great going for this one either. Okay, yeah, chemical names. Interestingly, Finiotech had a decent quarter. Tattva Chintan, I thought Tattva Chintan Pharma had a decent number. Operating profit margins expanded meaningfully, but maybe it's temporary and the market is seeing through some inventory gains, if that is indeed the case for this one. But Park Medi, Parag Thakkar, yeah, okay.
I don't track it.
Okay, good number. But some of these hospital names, right? Hospital diagnostic names, and I know we mentioned it the other day that the diagnostic chains have actually gone up in valuation quite steeply, and therefore you need to be careful there. Is the same thing in hospitals? They're expanding beds, prices are moving up, ARPOBs are moving up. What do you do here?
See, these are the sectors which are insulated from current geopolitical turmoil. So they should logically do well, and that's why we saw Dr. Lalpath Lab, Metropolis, and they reported good numbers also. We saw a good rally. Hospitals can repeat that, but I don't track particularly this name. Park Medi.
Okay, but decent numbers for Park Medi, guys. Revenues up 30%, operating profit margins at 27.7 versus 25%, and I believe one or some expansion plan for that company has actually come forth, so which is actually interesting. I don't know, Hiral, you track sugar very closely. For Balrampur Chini, the bioplastic plant operational in the third quarter, they're aiming for 2,000 crore revenues from that one. Very interesting.
It is interesting, it is positive, but the thing is, I think why the street is not recognizing it so far is because the timelines is something which have gone a little haywire according to me. Initially, when we had spoken to the management as well, they had mentioned about these plants. However, the visibility in terms of when they were going to start is something.
But they're saying third quarter now.
Third quarter, no. But initially, when they had spoken to us as well, it was supposed to be slightly earlier.
Yeah, which is fine. But now, if
it comes in the third quarter, it will be positive. Number one, and number two, when you're talking about the kind of margin pressures that get eased from them because of this versus the other companies is going to be a key positive over here.
But for a sugar company which is a cyclical business, ethanol was a big shot in the arm. Now they are diversifying into something which is not necessarily as many seasonal vagaries, right?
Correct.
Is this constructive for Balrampur? Do you track this one by at all?
Yeah, so this company is one of the best companies in the sugar pack. They've always done well. They've always expanded out of internal accruals. They have never been over leveraged. In fact, they have done buybacks in the past. One of the sugar companies which has done buybacks. And ethanol narrative is very positive as of now. Plus this new diversification. Yeah, so I would look to, see typical sugar issues like MSP prices of sugar cane, export ban, all those things one has to be worried about. But of course, this company is excellent and balance sheet is very strong. And of course, this new expansion will take away the volatility of earnings.
On earnings, Premier Energy is another stock that posted numbers, right? What did you think? Because 38% odd uptick in top line, positive?
Yeah. So they have executed it beautifully. Even there's hedged their silver and all those raw materials also they did procured very well. So revenue growth was very good. Margin reduction was anyways expected, but it was contained.
Yeah.
So I would say the numbers were very good. One has to see because stock has rallied significantly from the bottom.
Got it. Milan, Vaishnav, we're just about 30 seconds away. Anything that stands out after the pre-open session?
Anything standing out, I would keep a key eye on HDFC Life. And this would also be a conditional one that if we see it moving above 616, then that should be a good point of entry for HDFC Life.
Well, a life insurance name in the trading bets, that is very interesting. And we'll come back. I mean, watch out for ICICI Pru and let's see if that one has a bit of a downtick today. But here come the first rates this Monday morning. Expect pain. Whether the quantum of the pain is a lot more than otherwise envisaged is separate. 1% lower, nearly 1% lower. So quickly falling off the cliff. Mid caps too down. Advanced decline looking very weak. Nifty Bank down. Small caps would be lower as well. It is not a good start because there are a lot of talks over the weekend of a conflict escalation imminent. Crude prices have gone up. Donald Trump has also threatened about time being very less for Iran. So it is not a good macro to be in. US yields, and in fact yields all over the world, UK, etc. too have jumped up. Let's get the heat map up on the screen. Show you what's moving and what's not. A lot of red, very little green. What is in the green? JSW Steel, the block deal. One overhang out of the way maybe. Some bit of uptick for IT. Parag Bhai spoke about how some of the ADRs did well. Well, that is that lone ranger of sorts, and that too ever so marginally. Look at what is cracking. Big gashes here. Power Grid, Tata Steel, the results impact for this one. Shriram Finance, high beta name. HDFC Bank, another 2% gone for this one. You know, on good days, HDFC Bank is not rallying except for one last week. On bad days, it's cracking. There is a bit of a technical pressure on banks right now. But it's the life insurance names. HDFC Life down, SBI Life down. Both of them have looked weak. Bajaj Finance is down in trade today as well. Financials taking a bit of a stick and consumption of all sorts taking a bit of a stick. Alex, there might be ATF relief, but crude price uptick means that Indigo sulks yet again.
Yeah, it's not a pretty picture, Neeraj, as you pointed out at the start today. Let's pull up the sectoral heat map just to see if that also reflects this. In all probability, it will. Only red on the screen. And even the IT space, which you're seeing a little bit of green with regard to the frontline IT counters, not really carrying through at the benchmark level, just about 0.1% of a downtick. What else is okay? Pharma is losing about 1/3%. Healthcare is down about 0.5% or thereabouts. FMCG as a pack is down about 0.7%, and that's at the top of the list. What is not doing well? It's consumer durables, it's realty that's down about 1.7%. It's the PSU banking pack and the financials that are not doing well. It is auto as a pack that is not doing well. So quite a few sectors that are really bearing the brunt of selling, and there will be several individual counters that are reacting. In fact, I'm probably going to highlight only about 20% of the big movers today. But let's take a look at some of the stocks that are reacting to good earnings, and some stood out in the pre-open session as well. I wonder if that carries through. Genus Power, as well as, so that hasn't carried through, even that has gotten sold into. But Somani Ceramics doing okay, numbers are good, up about 4%, 11% gains for Gland Pharma. And this is pretty much in the way of the good earnings reactions. Bad earnings reactions, there are quite a few. And VIP Industries, one of them, losing a further 6%, 7th quarter in a row of declining revenues and loss widening. You have Power Grid that is reacting. It continues to lose ground. Worst performer on the Nifty 50. Rolex Rings losing 4% at this point. Let's pull up the rest of the list. Ratnamani Metals, Bajaj Electricals, not the best set of numbers. Symphony losing about 7% or thereabouts. And even a stock like Amber was under pressure, but we'll get to that in just a bit. Beyond earnings, you look at Vodafone Idea, because of course it's reacting to the numbers, but there is also the fact that the subscriber base is stable. It's still losing a tad bit of ground, 2% or so at this juncture. We warned you about that. ICICI Pru, remember, this is expected to be supply pressure. We spoke about this, and this was anticipated, down about 8%, as well as AFCONs. You've had 2 large orders that have gotten cancelled and a pretty substantial amount. So this is 4% down. And pull up Amber Enterprises just to see what the reaction is, because it wasn't the worst set of numbers, but the street not looking at it very positively. Hiral, it's taking it on the chin today, like several other stocks.
Absolutely, I mean, it's interesting to see with the kind of pressure that's building up on that one, but you have ICICI Prudential, as Neeraj has highlighted, that that overhang of PLC exiting continues to remain, and that's the reason why you're seeing that stock under pressure. Gland, you've already mentioned. Godrej Industries, Premier Energies, GE Shipping, few of the other ones which are in the positive. What else is not looking good is the SJV, and that stock is down nearly over 7%. KC International also reacting to numbers. Cochin Shipyard is another one, as well as NCC. These are a few of the names, along with the Alembic Pharma. We did speak to the management, is down nearly 4% in trade. Kush, with the way markets have opened up, anything that you still like on the charts?
So just a quick word on the indices. I mean, this is actually in line with what should have been and not what the GIFT Nifty was indicating. So like we said, 23,200 and 23,400. Those are the, that's the gap zone that you have to watch for on the downside to get filled. For Bank Nifty, that level is 50 to 700. We've come very close to that, so maybe it could get filled this time around. Hence, there is a possibility of a short covering rally, but like I said, right now that is more of a hope rather than an actual technical indication. One space of stocks that is actually doing well is the shipping names. GE Shipping, we saw on Friday, did fabulously well, right, and just gave way towards the end. Today it's starting off on a strong footing, so is SCI. So maybe the long trades could be in this pack, with the day lows being your stop losses.
Okay, so that's with regards to where shipping companies are concerned. Milan, let me come to you as well. Few of the names, the way markets have opened up, what are charts indicating specifically with counters like Gland Pharma, GE Shipping, Godrej Industries, anything that you like?
Gland Pharma, I think it is bit now overextended, and it has tested its year-old resistance that was around 2130. So in Gland Pharma, I think it's time that we take some money off the table now.
Okay, a few more reactions, right? And Milan, the financials stand out because you have HDFC Bank that is losing ground at the start today. You have ICICI Bank, but it's really the whole pack, the entire banking pack. And so therefore, how do you play this? Do you wait for lower levels, or are there opportunities that present themselves even at these levels?
No, I think I would wait for lower levels because, see, despite some kind of up move that we may see in form of technical rebound, it is ultimately the relative performance or the relative strength in those stocks also matter when it comes to including them in the portfolio. So even if we are gaining a bit, but if they are not performing in line with the other pockets, one should not be including them into portfolio. So I think that I would wait for lower levels because I feel that the entire financial services space, private banking space, they may likely to relatively underperform the markets for some more time.
Premier Energies though, 3.5%, so really good going for that one. And I use the term really simply because the market is looking slow, dull, that some of the good performers also haven't been rewarded, but Premier is kind of holding out. 1013 currently and counting. Kush Bora on the charts, Premier Energies, and of course anything else that you may have spotted.
So out of the calls that we gave this morning, Marksans Pharma's opened strong and holding strong. Genus Power isn't, by the way. It's just given that opening gains rather quickly. So I would focus on Marksans Pharma, the stock that is doing well, and on the short side, Areda that we discussed. Now, as far as Premier goes, see, the medium-term structure and the recovery on this one is fantastic. The only thing is, for the last 1 year, it's found difficulty to cross this 1,000 to 1,050 threshold. Even for the last 5 weeks, if you see, that's the resistance band that it's hit every now and then and retraced. So I think there will be some supply pressure, because for the last year, like I said, that's been the threshold. Anyone who's got a position around those levels will come in to sell and exit, at cost right now. Once this selling pressure is taken out, I'll not be surprised to see this head towards 1,200, even 1325 kind of level. So this has still got good momentum. The selling is not on the back of very high volumes, so I remain very constructive. If you do have a position, continue to hold on. 950, 965 support zone, that should act as your positional stop loss.
Parag bhai, I do want to ask you about delivery, because it stood out to me. Numbers weren't that bad, right? You had improvement in EBITDA margins, and their PAT number is flat on account of the higher depreciation charge.
Yeah, depreciation was very high.
So it's just that it's expensive.
Yes.
Right? So would you, from that lens, say you don't want to get into it right now, but it's a good business?
At some point, definitely. I saw the numbers. There's a structural improvement because of their technology scale and network impact. I saw the numbers. Numbers were looking good. So I would say that there's a stock which I will keep on radar, because here I'm seeing that actually company generating cash based on technology, and a lot of this technology plays actually right now don't generate even profit at the EBITDA level. This company is doing a good, I think, 220, 230 crore EBITDA this quarter for a 34,000 crore market cap. So I think, and it was a good jump, as you rightly pointed, YOY. So I would say that this a company will be on my radar if it, and it has rallied significantly. So let it cool off, then definitely it is worth a...
But quick question here, since its PAT numbers are not really, and maybe that's something that it will have to contend with. What is the metric that you will use to judge valuations?
I'll use cash profit. So as you rightly said, depreciation number is, I think, 180 crores for this quarter. I not 180 crores and 73 crore PAT, if I remember.
72.3.
Yeah. So around 220 crore of cash profit is generated, right? Yeah. So if they can generate 1,000 crore cash profit, and still continue to grow at this rate, then it will be worth
Okay. Well, as we speak, I think the one stock that is really charging up today is, and trading at the high point of the day, is Premier Energies. So bear that in mind. Is IT giving a chance to initiate a trade on the short side at all? I heard Milan Vaishnav say earlier in the day that IT is maybe out of favor. Milan, did I hear you say that? And if so, are you taking a trade on the short side on any of the IT names?
No, Neeraj, in fact, I never mentioned IT on the short side.
I may have misheard it. So maybe Kush Bora did. Okay, but Milan, since I've come to you, do you trade any of the IT names?
IT names, you'll be, I may not be one of the many people who are saying it, but IT is now in a major process of bottoming out, although it is still in the lagging quadrant of the relative rotation graph, but I am seeing a very strong improvement in the relative momentum in this space. So it may not be a buy absolutely now or at this point in time, but it's certainly in the bottoming out process. Maybe over the next 2 to 3 weeks, we may find IT completely bottoming out, and then it may, in more likely a manner, start its phase of relative outperformance. So no short trade on IT now.
Okay. Got it. All right. On that note, gentlemen, thanks so much for taking the time this morning. Pleasure speaking with all three of you. Now let's talk about... Our pleasure entirely. Let's talk about KRBL. It's reported a subdued fourth quarter performance with weakness in exports impacting the overall business, and revenue growth remained modest as lower shipments to Middle East weighed on the company's international operations. We're going to be speaking to the management about the outlook going forward in FY27. But before we do, let's set the context with Mahima. Mahima has looked at the numbers very closely. Mahima, what stood out to you?
Right, so Alex, as you rightly mentioned, Q4 exports, of course, were impacted because of the Middle East crisis, plus gross margins also did see pressure on the back of that because of cost of goods, being higher, and overall lower other income has also impacted, that number. But in terms of segments, India business, on the contrary, has done very well, saw a growth of 22%, of which they've seen a good volume growth also coming in, along with realization growth. International business, however, did see a degrowth of 33%, again on the back of Middle East crisis. They are launching India-grade classic masala meal mixes. It's kind of interesting to understand as to how this will pan out. What's the overall TAM for this one, and what is the aim that the company has for this one right now? Middle East, interesting because 71% of volumes in FY26 has come in from Middle East. So I think the next important topic to discuss would be about this as to how FY27 looks like when it comes to the Middle East exposure. So this is the overall view of how Q4 has panned out, and what do we want to know from the management?
Thank you so much for that, Mahima. In terms of the stock as well, let's just pull up what the stock counter is doing in trade as we speak. Down a little over 3.5% in today's session. Ashish Jain, CFO at KRBL, joins in. Ashish, good morning and welcome to the show. This is Hiral on this side. My question to you is, overall, if you have to look at the quarter and what's happening, yes, there are concerns when it comes to the Middle East, and exports become an issue because your international revenues are down 33%. 71% of your volumes come in from the Middle East. What is the impact that you've seen in this quarter, and what are you taking forward in FY27?
Morning, happy to be here. Sure. So if you look at the quarter, our domestic business, like you mentioned, continues to do well. That quarter saw 22% year-on-year revenue growth in that side of the business. On exports, of course, Middle East continues to be the major market for basmati export from India and also for KRBL. So to that extent, the set of events in that part of the world have had an impact. From our point of view, we, when we entered the quarter, we had significant orders which could not be shipped. So therefore, that has impacted on the export side of the business. However, we do see this situation as a temporary situation. And the rationale for that is that basmati continues to be the mainstay as far as rice is concerned for the Middle East. When we speak to our customers, we do understand that they are at low stock levels as compared to the normal levels that they like to maintain. So we are very hopeful that as soon as the whole shipping situation normalizes, we should see a revert back to normal levels of export.
Okay. Ashish, a quick follow-up to that in terms of, exports. Now, the question is there any inventory loss that you're sitting on, number one? Because initially when everything started off, there were containers which were stuck. And number two, whatever surplus that you have which has not been exported, what happens to that? Are you redirecting it to the domestic market? And is there a price differential coming in there?
No, so first, we've not faced any loss because of the situation in the Middle East. The goods that we had in transit were either recalled back to India or were delivered, through alternate means. So we've not faced any inventory losses. As far as a larger inventory is concerned, we maintain an optimal level of inventory, and we don't see any stress on the inventory side from the Middle East situation.
Got it. Okay. So, Ashish, hi, morning, Alex here. You've had a decline in the gross margins on account of the cost of goods. Do you expect that input costs pressures will sustain going forward? And how much of this is on account of the conflict and supply chain issues?
Yeah, so, so from our top line perspective, we have two segments, exports as well as domestic. Exports is a segment that gives us higher realization. So in a quarter where export is impacted, it's fairly natural for the margins to be impacted. And that's how I would explain Q4. From a, cost of goods sold perspective, we don't expect any significant increase during the current year. And as soon as the revenue normalizes, we should see margins restoring to the normal levels.
And what is that range guidance? Is it dangerous to put a number out there? I understand that these are all moving scenarios, but what is ideal in your opinion, Ashish?
Yeah, so, we are very hopeful of FY26 levels or levels slightly higher than that in the current year. But I think it's important that the revenue gets restored because the sales have to happen for the margins to come back to normal.
So Ashish, good morning. This is Neeraj here. A good barometer for us to understand this better is that for you to be able to maintain FY26, by when does the disruption need to definitively end, beyond which there could be issues?
See, the way we look at it right now, I think if the situation normalizes maybe in the next month or two, we should be okay in terms of margins. But if it drags longer, then to that extent, it'll be it'll be a bit of a challenge to get back to the FY26 margins level. But like I said, I think that's really a timing question. I mean, we are very positive in terms of sustaining margins on a long-term basis.
Certainly. So, Ashish, by the way, sorry, just to reflect this, I know usually we like to talk long term, but currently the times are such that it's important to distill what could happen in the very short term as well. So, just that question followed up with on the revenue front as well. If I missed it, excuse me for that. But do you match FY26 revenues as well despite the conflict? Or even for that, the conflict needs to end in a month or two?
No, so right now we are fairly hopeful that I think if the situation normalizes in the month or two, we should do, FY26 levels or better. That's what we are hoping for right now.
Got it. So, okay, now just one more question from my end, and that is the slightly medium-term question. Let's assume that it does happen, that it gets over in a month or two or thereabouts. What happens over the course of the next, let's say, 18 odd months? We talk to many industries trying to now put structural drivers in place which might be beyond their core operations of business or ancillary revenue streams in order to diversify and have a parallel income revenue margin stream as well. Is that a possibility that exists in the business that you are in? Are you guys trying to think around that?
Yes, but not in response to the immediate situation on hand. Diversification, in my view, is a long-term strategic play. But, just to talk about that, so if you've tracked us, you've seen that we've been constantly launching new products. So FY26 saw the launch of edible oil. In the last quarter, we've also gone further in terms of masala. So we already had biryani masalas in the play. We've launched more products in the so diversification is it's a continuous objective, not necessarily in response to what's happened over the last 3 months or so.
Okay. So not in response to this, but you're certainly looking out for that. Last question, sure. Would you need any capital for any of the things that you're wanting to do in FY27? Whether it's expansion, whether it's to deal with this issue at hand right now, so on and so forth, or a combination of things. Would you need to raise any equity capital?
No, so I think we have adequate internal accruals to manage foreseeable expansions.
Okay. Just one quick question I have is in terms of, you did mention to Neeraj and Alex as to what you're looking at in terms of FY27 when you talk about top line, bottom line margins. However, in terms of the way freight rates have been panning out right now, there has been an escalation on that front. Are you also pricing in for these escalations right now, at least in the short term? Let's just talk about the first quarter of FY27 or maybe just the first half of the second quarter of FY27. How are you looking at freight rates, number one? And two, if you have to look at the inventory valuation, how is it actually carrying the paddy inventory lineup against the prevailing market prices?
Yeah, so in case of freight rates, see, the customers are well aware of what's happening in the shipping market. So to that extent, the current freight rates get built into our pricing and in agreement with the customers. As far as the inventory is concerned, like I mentioned, so we don't see an impact of the current rates on our inventory. I think we are very comfortable there in terms of both valuation as well as the volume levels of our inventory.
Got it. All right. Ashish, on that note, here's wishing you all the best in FY27 and hope things are resolved soon. Thanks so much for taking the time. I know. Policy meets demand in the cooling market, and the government has capped compressor imports targeting the mass sub-2 ton segment that drives over 85% of demand. And at the same time, Blue Star is seeing strong traction and healthy order book. Before we get the management in to talk about the implications of that, we've got Mahima joining in with all of the details. Mahima,
Right, so Alex, what has happened is, the Department of Promotion and Industry and Internal Trade has kind of passed an order that curbs imports of compressor. Now, the order particularly says that under the new policy, refrigerator compressor imports are capped at 40% of FY25 volumes. AC compressor imports are capped at 30% of FY25 volumes, and these restrictions mainly apply to units below 2 tons, which account for over 85% of the market. Now, in terms of so this is the first, of course, the recent development that has come in, and this could impact both EMS companies as well as AC companies. But Blue Star overall Q4 was, a stable quarter overall. In terms of where the segments go, electromechanical projects saw strong inquiry momentum from building, data centers, etc. Commercial air conditioning order inflow also gained momentum during the quarter, which was supported by government, industrial as well as retail segments. And lastly, room air conditioner business saw reasonable growth. I think summers being stronger and harsher this time is definitely going to impact the company. So these are, some of the things that we would want to know from the management as to how, of course, firstly, this order passed by DPIIT impacts them, and secondly, in terms of how summer trends are looking like.
Yeah, well, thanks, Mahima, for that. The summer trends remain the biggest, variable, if you will. And Mr. B. Thiagarajan, who calls a spade, MD of Blue Star, joins in right now to talk about that. Mr. Thiagarajan, good morning, Neeraj here. If anybody that I speak to right now says, कि AC के बगैर तो बाहर रहना थोड़ा tough है. So my question is, sir, if it's such a harsh summer, but in an El Nino year wherein the vagaries of monsoon might come in sooner rather than later as well, how predictable is production, dealer inventory and business after what has been a mixed Q4 for the industry at large? Are you on mute, sir?
Good morning, Neeraj. It is a pleasure interacting with you. Yes, the summer has been active from April 13th. It was a delayed onset of summer season. By and large, it is active. Some places, indeed, intermittent rains are there. But having said that, the secondary, tertiary movement are very good in West. It was very good in South till last week. We will wait and watch what is going to happen the rest of the May, and the North is picking up. The primary sales is somewhat slower than what was anticipated because the dealers had inventory, and I had told you that they bought it in anticipation of energy label change. Subsequently, fearing huge price increase, they stocked themselves up. With the secondary movement very good, the primary sales have begun. I would say not to the expectation of the industry or Blue Star for that matter, and I would still think that it is not very bad, but it is not easy walk at all. The important factor being our ability to pass on the next level of price increase. As you're aware, 13% price hike is supposed to be affected. In fact, some 5 to 8% has happened. The balance 5 will have to happen. And furthermore, cost increase is happening due to exchange rate as well as components which are based on petroleum derivatives like plastics, etc. Therefore, it is not an easy summer. The volumes will happen, the margins will be under pressure, and it will be definitely better than last year, but I don't think we are yet celebrating anything at all.
I'm guessing we shouldn't. The other small question is this hiccup because of compressors and the import curbs, I believe, that are in place. Does it hamper production enough to meet demand, or that is not a current problem?
Is not the issue. See, this is about going forward. But my comment about that is the new policy framework, which is linking imports to the previous year imports. So we all do understand it is very important for India to become self-reliant. It is important for us to reduce imports. It is important for us to enhance or grow our exports or international footprint. Now, compressors is one last part which is left out to be indigenized. I'm certain that by 2028, every compressor that is used in India would have been, at least for room air conditioner segment, will be manufactured in India. There is no doubt about it. Today, it is in the order of around 50% of the requirement is made in India. The key question is between now and 2028, linking it to previous year's import. I am not happy about, because you are incentivizing the people who imported more. That's not the intention of the industry at all. This would have crept in inadvertently, not through intention. I do understand we have to restrict the imports. There is a very clear roadmap with the industry how this indigenization will take place, including Blue Star. Therefore, I am not happy with the policy, but I'm sure the government always consults and takes corrective measures. So that's not an issue. There are enough material that is available. The key issue is how to protect the margins in a very inflationary trend, number one. Number two is with the petroleum price hike already announced, there will be consumer sentiments which will dramatically change. And in the process, the demand will come down. So the summer is not the excuse. There is summer happening. But unfortunately, the war, overall macroeconomic environment is not good.
Tyagarajan, good morning. This is Alex here. And you mentioned the need to possibly take further price increases. You've mentioned the increases that have already taken place. I'm trying to understand specifically with inputs like copper, which are so important for your industry, and the fact that the prices are continuing to go higher. If you look forward in FY27, what are the kind of increases that must take place from this point on? If you can quantify that as things stand right now.
Alex, good morning. 5% more minimum is required in order to protect the margins at last year level till now. For the summer season, enough raw material had been bought and at old exchange rates or the old commodity prices. So that 5% increase will take care of it, but that itself is looking difficult. But every month or every week, you have got additional challenges that are coming up in terms of input raw material as well as the exchange rate. Therefore, if I am to fast forward from today's level, additional 3% more minimum will be required for a festival season. So what I'm trying to tell you is 5% has to be passed on in May last week and June, plus 3% more has to be passed on by the festival season. And then you have got consumers who are going to tighten their spends, and they are not going to be affording this kind of increase once again. That's where I am.
That's a good point. And so therefore, the follow-up to that, Mr. Tyagarajan, is that if sales at the primary level have not been as good as anticipated, and if there could be further price increases and demand destruction there, then despite the high temperatures, you must be worried about top-line growth.
I am worried, but worry will not help. You have to act actually.
Yes.
Some are in your hands, some are not. So Blue Star is clear. That's we indeed we will be disappointed if the plan is not working out, and the industry will be disappointed, I suppose, equally. But you have to make use of this opportunity to invest time and energy in improving your operational efficiency, in improving specifically the product design, how you can become more and more competitive. You have to look at alternate materials, for example. I have been talking about this. The copper heat exchanger is not the solution. We have to migrate to aluminum. And we have to keep the options open. And we have to participate in the movement to indigenize as much as possible, because you've seen how the Indian rupee has depreciated. And therefore, helping those who are indigenizing, we have to work with them to ensure their quality standards are improved. And this is the period to do that. So worry is true, but it has to convert into action so that we are growing in a sustainable manner going forward.
Mr. Tyagarajan, good morning. This is Hiral on this side. Absolutely point taken in terms of, that's one part of the business. Now, the other part of your business as well, when you're talking about the data center side of it, industrial again is stagnant, but if you have to look at data centers, do you think a scale up over there is something where you could, probably look at diverting energies there and arrest the kind of downtake that you could see from the majority of the business?
Kiran, good morning. Indeed, we are fortunate that we have businesses that are complementary to room air conditioners business, and it can help us to protect us in situations like this. So data center indeed is one of the segments. The other segment is also the manufacturing. Those orders which are under finalization or we have just received, commercial air conditioning space, electromechanical project space. The other one is the commercial refrigeration part of it, which is not connected with consumer behavior, like ice cream or QSR. These segments can impact that business too. But there are cold chain related businesses that are available. The only thing is this entire thing will not compensate for 35,000 crore room air conditioner market. The rest of it all addressable. If you look at it, it will amount to some 12,000 crores market, and where we are leaders, but it will not. So you are right. It will protect us to some extent. We are accelerating our efforts to become larger there. Say, for example, data center. I have told you by 2030, I think close to 15% of our revenue will come from data center segment alone, and we are investing there.
Okay, so data centers, 15% revenues by 2030. Thank you, Mr. Tyagarajan, so much for joining in. Always a pleasure to speak to you. It's always a candid conversation that we have. But very quickly, as Alex was just pointing out, the kind of downtick that you're seeing in terms of markets as well, that's interesting. If you pull up Nifty 50, almost 300 points is the kind of cuts that you're seeing. But the broader markets are bleeding further right now. Let's pull up the mid-cap and the small-cap index, because both of them, mid-cap 150 down nearly 1.6% in trade, and you have the small-cap 250, which is down over 2%. Let's just pull up NSE 500 components to see in terms of individual counters, because there are a couple of companies, even in spite of a decent set of numbers, have been seeing a downtick. But Gland Pharma, Raymond, GE Shipping are the ones on the positive side. Amber Enterprises are 11% downtick that's coming in there. A couple of reasons that we've been looking at in terms of what's happening. The key over here is where the expectation is that the margins are expected to be weak in FY27. Let's listen into the conference call which is ongoing with Amber Enterprises management.
Amber is not producing or manufacturing compressors. We buy compressors from outside. We have a long-term agreement with GMCC, who is supporting us on the compressor, and we also buy from other manufacturers like LG and other compressor manufacturers. So we don't see any shortages on the compressor front, but to just give a brief on quality control order, which was in the news. So there were quality control orders imposed on the compressor industry, and we have seen, because of the production linked incentive scheme, 5 investments have kicked in India in last 3 years, which is basically LG has put up a plant, Daikin has put up a plant, Mitsubishi has put up a plant, GMCC has increased its capacity, and Haili is also thinking of increasing its capacity. So these are 5 manufacturers who are catering to room AC industry at the moment. Whereas coming to commercial air conditioner division, there are companies like Copeland or Danfoss who are manufacturing compressors for those category of compressors, and you don't need only 2 ton, but you need 3 ton, 4 ton, 7.5 ton, 5 ton, 8 ton, 11 ton, 12 ton capacities of compressors. So right now the manufacturing capacities which have been built in country are below 2 ton. And that's why the quality control order says that, but there is still a shortage in terms of the capacity built up versus the growth in the country for the room AC. And that's the reason why government has allowed to import 30% of last year imported volumes to cater to the shortage. Coming on the 2 ton in front, that they have extended it for 1 year. So the complete compressors can be imported from outside India, because right now we don't see any big capacity coming up for the commercial air conditioner sector. Then come to refrigerator compressor model. I mean, there are some very specific compressors which are not getting manufactured here, just like dispensers and other categories of refrigeration compressors. But on an overall basis, there looks to be adequate capacity. But still, some industry players feel that some particular compressors are of shortage. And hence the QCO order was released to clarify and extend the imports. I believe that the way things are moving, we will see that further capacity increases will also come from new players also, and existing players will also expand. So we don't see any big problem coming out of this place because of compressors.
So just one follow-up here. So can we say at least for this calendar year, or rather FY27, there will still be a shortage of about 40%, given industry will grow at 12% in terms of volume?
No, we don't think so, because if you map each and every manufacturer's capacity versus the requirement in the industry, looking at a CAGR of about 13 to 15% growth, I believe it is adequately placed. The capacities are adequate enough. I mean, of course, there is the shortage part has been addressed by the 30% allowance of import of compressors below 2 tons. So that bridges the gap.
Understood. Thank you so much, sir, and all the best.
Thank you.
The next question comes from the line of Samit Sinha with Macquarie. Please go ahead.
Yes, thank you very much. So, 2 questions. First one on the inventory side. So, from my understanding, you're talking about inventory that's built up, that's basically the components and the parts, not the finished products, because you said the demand was strong. So, on that front, by front-loading this, what sort of benefit do you think you got in terms of, if you could quantify how much savings would that be in current component prices, that would be appreciated. And my second question is just in terms of, whenever we've spoken, you always mentioned how, and we've seen the progression about going towards higher margin businesses. Does that still stand, or do you think at this point you'd be open to going towards high volume, low margin, but high ROC business? If you can talk about that. Thank you.
So coming on the first question on the inventory built up, yes, we proactively increased our inventory level looking into the supply chain constraints. And we are not getting a very big advantage on the pricing side, but we are getting advantage on the supply side, that we are able to fulfill our contracts on timely basis to each and every customer. As far as our endeavor on going towards the higher business model goes, I'll just give you a brief of what we have done in electronics. We had acquired Ilgin in 2018, when this was a 300 crore company with about 3% of EBITDA. Now this last year we have crossed about close to about 8.8% of EBITDA in the electronics division, and we have crossed 3,200 crore of top line. We expect a 40% growth while getting closer towards a double-digit EBITDA numbers. So our endeavor on going towards the value side of the businesses, because in B2B business, what we are trying to attempt is we are trying to balance the left and right. So left side is the volume side business, which are equally important to bring scale and to have a leverage on the purchase side. On the value side, they are more sticky businesses. There are entry barriers in those businesses like industrial electronics, industry automation electronics, power electronics, or aerospace and defense going forward, medical electronics. These are more sticky businesses, more entry barriers, and high margin businesses. So we will continue to balance both volume and value play while attempting to build a very strong, diversified B2B company. On the railway side also, we are doing the same things. We started with small company, 157 crore with about 13% EBITDA. Now EBITDAs are more about 17-18% type, and we are growing in that on more value oriented products. We've gone into metro side, we've gone into doors and gangways, we've deep dived more into the BOM of railways, and now we are developing data center cooling solutions. We've cracked almost 4 customers there, and we've already executed 3 projects, very marquee projects in India on the data center, in-rack and in-row cooling side. So those are all value propositions which we are doing. But as a B2B company, there are 2 pulses which we feel. The 2 pulses is basically scale, and second is efficiency. And the scale team is responsible to balance volume and value play. While the efficiency teams are the operational teams which have to bring in efficiency on the plant side, on the purchasing side, on the R&D side, and so on and so forth.
Got it. Thank you.
Thank you. Our next question comes from Dhruv Jain with Ambit Capital. Please go ahead.
Hi, thanks for the opportunity. My first question is on CapEx. So, I think last quarter you had said that your CapEx would be about 800 crores, but, this number has been much higher. So just wanted to get a sense that is it some front-ending of CapEx that you've done, and how should we look at FY27 CapEx as of it?
Yeah, hi Dhruv. This is Sudhir. So, rightly said that there is some front-ending of our CapEx. If you see our overall CapEx, out of the overall CapEx, capitalized CapEx is only 550 crores. The balance is under CWIP, which is under process and which will get operational in the current financial year. So, the overall CapEx is around 1,070 crores.
Okay, so and how should we think about FY27 CapEx then?
So FY27, we are expecting that one is Ascent and one is the other than Ascent. So Ascent will be around 1,200 odd crores, including the capitalized portion out of this 547. And apart from that, there will be around 700 to 800 capex in all the other entities put together.
All right, so several factors that are playing through for Amber Enterprises. The circuit breaking actually at this point, and the stock at the low point of the day down 13.8%, and perhaps one of the biggest laggards in trade today. A few reasons that actually Hiral pointed out, and Hiral, if you want to comment on any of them, please do so. FY27 guidance weaker than anticipated. The management is seeing margin weakness in FY27, and the stock actually went up in the run-up to the earnings, and those valuations might just be a little challenging compared with the peers. And we were talking, Neeraj, also about the space as a whole, and the fact that maybe Syrma is the one exception, along with Dixon, to what has happened and the reactions that we've seen. So
at least this quarter, yeah.
At least this quarter.
And I think maybe for these two companies, with the way the stock has run up since April 2026, the markets were not anticipating these kind of numbers, and I think that's the reason why you're seeing this kind of a reaction come in for both of the names. You have Keynes Technologies, which saw a similar move last week, and today you have an Amber Enterprises.
But it's not a pretty picture for the markets as a whole. You have cuts of 1.3% for the benchmark Nifty 50, and the broader market's losing even more ground at this point. Pull those up, and you have the mid-cap index that's losing quite a bit of ground. We have to slip into a very quick break, but we've got a conversation lined up with Sandeep Tandon of Quant Mutual Fund. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो बंटवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Back with India Market Open right here on NDTV Profit. Sandeep Tandon, our big market voice for the day and for the week. Sandeep Tandon, founder and CIO of Quant Mutual Fund, with us on the show. Sandeep, great having you. Thank you so much for taking the time out and being with us. And it's an important juncture, Sandeep, simply because while April and some part of May have seen a bit of a recovery in the market sentiment-wise, it does seem that the conflict is not going away in a hurry. At least that's what it seems right now, despite the fact that the yields are higher, and that should have been a natural precursor for the conflict to end. How are you piecing together the macros and the sound bites that come in and deciding your investment strategy?
So Neeraj, let's understand the larger picture first.
Sure.
See, I have been saying for a long period of time, we are in structured bull run as far as yields is concerned, inflation and yields. Okay. And the structured bull run can last till end of this decade, So which means maybe you can get cyclical corrections here and there, but broad trend is up globally, okay? And developed market yields will spike more than the emerging market in the years to come. So that's the background which we are mentally prepared. And second thing, we have said that geopolitical volatility will remain elevated maybe till 2032-33. So you are living in a high volatile geopolitical environment, and you have to live with that. You can't say that, okay, now things will settle down, then I will participate. If it's the period, this is a period of like 10 to 15 years. If you're looking at this period, which started from the end of 2019 and still going on, then you can't say that I'll stop investment, I'll come after that, let the settle down. So I think you have to find opportunity within this sort of chaos. Like we are living with the Ukraine-Russia battle. We are still living with the Israel side for a long period of time. I think even this Iran battle, if you ask me, it has peaked out. Small noise here and there will continue for a longer term perspective, and it helps a lot of Gulf country also to maintain the oil price on higher side. So they are also party to it, irrespective of whatever claim the narrative can be very different, but reality is that they also want this noise to continue so they can take the benefit of the elevated crude prices. So I think it's the environment which we are living in. You have to take it in your stride and then design your strategy rather than getting too much worked out or what is happening.
Sandeep, could we therefore have a scenario wherein, structurally higher yields is not necessarily great news because interest rates may be higher, but could we therefore have a scenario wherein, let's say in a market like India, we might have the benchmark index, which is the Nifty or the Sensex, stay very, very range bound, maybe a downward bias, maybe a slight upward bias, but essentially range bound. And people have to configure their portfolios to what works. So the portfolios may work independent of what the benchmark index might do, which might remain flat. Could that happen for a longer period of time?
Very high likelihood it can happen. And in fact, what I said in our April 1st week letter, that worst is behind us, but best is yet to come. Okay. So which means the worst is over. And when I say worst, is largely we are referring for small cap, nano cap, mid cap, where you have seen some of the stocks and some of the sector have completely butchered. So those are the areas which you can look into it. But what is very important, Neeraj, to understand that it's not US for the first time is hitting the 5% mark. You know, if you go back in the history, 4-5% yield was very common. For whatever reason, it went into negative territory of such a low vol, such a low yields structure for a long period of time, and hence we have started making them as a benchmark, which was not the case. So if you look at 100 years average, we are not far away from that number. So and hence I'm not too much disturbed about it, because we are very clear that this is the phase we have to live with, and you look for opportunity, milk or opportunity. And we talk about dynamic style of money management, because you can't take a call. This is my 5 years call. This is my 10 years call. This I will hold on. That easy phase of bull run is over globally, including US also.
Sandeep, very interesting. And good morning. This is Alex here. If I look at asset management strategies, in broadly, you can classify fund managers who do one of two things. They protect the downside and they allocate portfolio accordingly, and so they can't capture the most of the upside. On the other end, you have the possibility of a more aggressive strategy, and you generate a significant amount of alpha. Do you think that, based on what you're seeing right now, the downside is protected, and so the second type of fund manager can really amp it up in the months to come, or do you think that it's still time for caution?
Alex, is an interesting question, because if you really look at world is now in last maybe a decade or so is moved toward passive style. But if you ask me, this decade belongs to active money manager, and all passive or most of the people who manage in a quasi passive style, they will have 70-80% of the benchmark, and 10-20% or 25% they will try to see overweight or underweight and try to generate outperformance from average 20%, and hence you are not far away from the indices, but you will never able to generate massive alpha. Okay. Now I don't call it we also practice a similar style, but we don't call ourselves aggressive. We always say we are in the business of risk management, returns a byproduct. So if you have to manage risk and you have to generate superior risk adjusted return, our mandate is not to beat the just benchmark, which is the mindset of a lot of people. We have to just beat the benchmark. If I'm able to beat the benchmark, then I deserve the fees or appreciation. Okay, that's not the way I define it. If market is falling 10% and we are also falling 8%, then we should not be celebrating about it. My only point which I'm trying to make, obviously, beating benchmark is also not going to be easy, and it's not the case in the past also, unless you are in a decisive bull run, what I call it EC phase of bull run. That's very easy to do that. But given the context which we are talking about, you have to align your portfolio based on the environment which is prevailing. Let's say example, today we are in the challenging phase from the manufacturing sector point of view. We don't know which raw material will be impacted. We don't know where you are stuck. You are unable to distribute, the logistic challenges. Okay. So their uncertainty, March number was still decent because the impact was only felt much later. But the current quarter can be horribly bad for some of these companies. Now, we all understand this is a challenge. Now, there's no compulsion for me to hold some of these names. I can't cut down completely. So if you look at our portfolio, we are skewed towards energy big time. We are skewed towards telecom in a big way. We are skewed towards asset management or wealth management company in a big way. We are skewed toward NBFC in a big way. So what is important, we have diluted the manufacturing sector. Okay. We are playing a data centers themes through multiple routes. So it's up to us how you look at that opportunity, and when, let's say, things settle down and you have to shift from these so-called defensive name in the current environment. A lot of people link me with IT pharma as a defensive name. No, they were not. So what is on in the current context, these names are more defensive, and then maybe appropriate time when things settle down and you see earnings can come back in a big way or they have ability to bounce back, maybe you can switch. So I think the way we look at market is all about actively managing. Okay. Now, actively money management is all about you will generate extraordinary alpha sulfur. Sometimes you have to go through some amount of pain because you are early in a call, or you have taken a call which may or may not materialize on immediate basis. But that's our job, to identify some of these opportunity and live with that.
And that was showcased, I think, Sandeep, in the month of April, when at the benchmark level you had significant gains, but some of your funds actually did particularly well. But I do want to ask, in the sectors that you mentioned, the fact is that while Q4 numbers for some of these sectors and companies looks okay, a lot of them are going to go through significant pain in Q1, possibly in Q2. How much of that is in the price, Sandeep? Do you have to brace for impact in terms of the market realizing that things are worse than perhaps it's seeing right now?
See, only thing I can say, nobody can gauge, even promoter can't figure out what is happening because things are relatively fluid. Okay. So instead of trying to see what is priced in, what is not priced in, I don't want to get into that debate. I said then things will settle down. We will do a switching strategy rather than getting a debate. Let me average it out. Let me rebuild my position. Now, this thought process, we have seen how much damage happened on the IT side. People talk about certain level of dividend yields happening. This is the minimum P which we have seen historically. All those theses has not worked when something got changed in industry and stocks got butchered. Okay. So what is very important to understand, when we know these sort of headwinds are there, why to speculate and say this could be the bottom or this could be opportunity when we know there is uncertainty? See, market never reward uncertainty. Market always rewards clarity. So if there is a uncertainty, or if I have to say the picture is slightly hazy, then we will like to play safe rather than try to become aggressive at this point in time and taking a contra call, which may not help us actually.
So, yeah, Sandeep, so that's an interesting point that you make. However, one aspect I want to consider, good morning, Hira here, is you have majority of your global brokerages who've gone ahead and cut their, either downgraded their outlook, cut their target prices as well in terms of Nifty 50 for 2026, if you have to talk about calendar year. HSBC, you've seen a double downgrade. Goldman Sachs, they've slashed the GDP outlook. JP Morgan, Citi, Nomura, you name any of them. With that stance, there comes a point where there is fear amongst retail investors that if, brokerage houses are going and slashing their target prices, if there is a downgrade coming in there, what happens? Does that mean that probably you should read between the lines and say, okay, the bottom probably has been made, and from here on, you're going to see some hopes of, green?
So let me just clarify, when you talk about a negative sentiment among retail, it is not. There's no negative sentiment from a retail investor. As per SIP data is also endorsing the same, there's no negativity from retail side. That's the first myth, let me clarify. Actual negativity is there in the most of the smartest people, okay? Because when you read too much about global market, when you read too much or you're too connected with the global market, we are all human beings, okay? And we typically give up at the bottom of the cycle. That's the way, as a behavior house, we try to identify this inflection point. I distinctly remember when we downgraded India in July 2024, they were till December 2024, we have seen massive upgrades coming, multiple organizations, global firms have upgraded. Now, we are not trying to make fun of them. I'm just trying to only highlight that ultimately, who are the people who are writing? They don't have a God status. They're ultimately all are human beings, and they also do get capitulated. Okay. And that's the reason I'm saying when you are more connected with the global market, and for them, it's a relative opportunity call. That's very important to understand when any foreign firm looks at the market. They have option to invest in Korea, Taiwan, China, or any other market. So their call is not about absolute return. They're also about relative opportunity. So when they are finding it better relative opportunity because of our own challenges of the macro front, the rupee front, crude front, they will look at. So we have to keep that aspect also in mind. But when it comes to bottoming cycle, this sort of phenomena of downgrade typically happened either exactly at the bottom or when a bottom is about to make or form. That's a time when people actually give up. So we are in that capitulative phase where not only positions have been sold up, even the bullish thought process which people were holding on for a long period of time has been capitulated now. So these are signs of bottom. That's the way we define it. And that's the reason I said worst is behind us, best is yet to come. So I will go with that thesis and I will look for opportunity in the market rather than cribbing about what is happening globally. When the time was there, people were overconfident about it. When time has come to rebuild your exposure towards India, and if yields are indicating discomfort in the global equity, I think it's a great news for India. If US market correct or Korea, Taiwan correct sharply, I think we will be the biggest beneficiary because on relative basis, money shifted out of India to these countries. And if whatever reason they correct, we also have similar view of deep correction in the US market semiconductor space. I think that's a great opportunity. So you have to look at not only an absolute, it's also about a relative thing. When somebody is going to have affected who was enjoying the party till date, then you will get the see ultimately is all when we look at our money flow analytics, how money shift from one asset class to other, one region to other, or one stock to other. That's the way our money flow indicators are indicating. So I'm very happy to see global markets correct sharply.
Okay, so global market should correct sharply. If that happens, you're happy. But Sandeep, my point being over here is, I mean, yes, probably the bottom has been made over here, but what happens from the commentary that we've been listening from the corporates where there is uncertainty in the first half of FY27 because of supply chain concerns? Let's not talk about a sentimental, impact that we could see from global markets. We're talking about actual impact on ground for a lot of companies which are dependent on imports. If that has to be taken into consideration, which are the segments of businesses or sectors that you would say you would avoid for a short period of time right now to ascertain what the kind of pain that could come in, and which are the segments where you would find opportunities?
This I said in the beginning of the call, when we talk about that we are underweight on the manufacturing sector in general, okay? Whether it's auto, whether it's chemicals, or whether it's any other industry, because clearly from this uncertainty, okay, now for us also it's very difficult to visualize how exactly it will play out, but it is very clear these headwinds are there, and hence I will like to avoid these names, and hence service industries should do well, telecom sector should do well, power or energy stock should do well, renewable within that part should do extremely well. So I think this is the data center is a new theme which is building up. Defense should be opportunity. Okay, they also can be impacted because of raw material challenges. And we have seen some amount of euphoria getting built in some of the metals name for last 1.5 years. So there I like to be slightly cautious. Okay, so it's a call which we have to take on. See, you cannot avoid manufacturing completely and say, I don't have any manufacturing stock in my portfolio, which is impossible to have. You can't have 100% portfolio towards services sector. But if we have challenging on this thing, then I will say, let's say pharma manufacturing side, I will go for export centric, I will go for generic companies. So we have to keep on identifying every crisis brings opportunity. That's the advantage, Either you look at as a opportunity or you get capitulated along with that. So the call which we have taken, we think there's enough opportunity in the market. Yes, it's a challenging environment, and more from a psychological perspective also, there's a tremendous pressure on every money manager and investor right now. But if you believe India thesis, which we believe is a few decades opportunity in India, and obviously we have done extremely well in the past. So we went for 2 years of correction and consolidation. I think we are just coming out of that. So I think I will look as a opportunity to buy rather than getting capitulated now.
Sandeep, just one on that energy transition, because that seems to be the real awakening out of this conflict. Now, some of the stocks were maybe overvalued as well, but the capex plans are real, capacities coming on stream are real, and there seems to be estimates of fairly strong cash flows over the course of the next 24 to 36 months. Are you constructive this cohort from a fresh investment perspective, or would you want the valuations to settle down a little bit?
See, I always talks about on a relative basis, this still looks attractive. may not be on absolute basis. So let's say when it comes to our portfolio, we were very early to identify power sector. We are holding it for last many quarters. And we have only increased our exposure, not cut down that. So we are constructive. Now, somebody comes and participate very aggressively, then obviously you run a risk, okay, that you are participating. I'm not saying the peak of the cycle, but you are participating at higher levels and hence your return of could be lower. But if I look at what is happening in the world, I think this is the area where I will like to park my money. My safety is fairly good. Okay. Dependency on outside the world is limited. Yes, you might have some challenges here and there also on the coal related issues or some logistic related costs moving up, but we have to live with that because they are in the position to do it because growth is in their favor. And this is very constructive from the sentiments point of view, and valuations are not at all expensive. Okay, on relative basis, they have moved up, but as compared to whatever is happening in new age company or so-called growth names, they are putting at absurd valuation. So where the valuation has moved up in the power sector, I think it's a good beginning to have a sizable allocation in your portfolio towards power sector. But we all always say is look at for next 3 to 5 year perspective. Don't add for 3 months perspective and say, oh, you were talking positive, but I bought and I'm stuck now,
That is a fair point, actually. It's good news, though, Sandeep, that some of our viewers remind us to talk about the long term and not just the winners over the 1 month or 3 month time frame. So I'm looking at that as a very positive development. Thanks so much for taking the time today. Pleasure having you.
Thanks for calling us.
All right, now let's focus on a stock that is doing particularly well, and that's Gland Pharma. A robust performance on both domestic and global front has aided the company to deliver a pretty healthy Q4. Varsha joining in to talk about what's working for the company. Varsha?
Well, strong US traction, which was led by new launches and GPO contract wing. There was a higher contribution from CDMO projects as well. Favorable product mix supported margin expansion for the company, and the operating leverage, of course, worked in favor of the company. Now, onto the geography-wise performance, US was up 24% year-on-year. Revenue, Europe-based business was up 15%, and India was up almost 28%. Talking about the Cenexi business, that's the turnaround or the key highlight when it comes to Gland Pharma. Just do note that Cenexi was acquired by Gland Pharma in 2024, which was up 4% year-on-year in Q4, showing gradual recovery. Improvement was driven by better utilization, new product ramp-up, and of course FY27 revenue growth overall is expected at around 12 to 13%, which has been guided by the management, which will be driven by launches and of course the CDMO ramp-up. Growth is expected to accelerate to 15% in FY28 and 20% in FY29. And margins are expected to sustain at around 25 to 26% at consolidated level, and the base business margin was guided at 33 to 35%. So US business, Cenexi, and good outlook are some of the key reasons why we are seeing that buzz in the stock.
Hey, all right. Thanks so much, Varsha, for that. The stock is at the high point of the day, but well, it might just be that stock. The rest of the market losing ground, unfortunately, and we're down about 270 points or thereabouts for the benchmark Nifty 50, 260 points. Well, from Neeraj, from Hiral, and from myself and the team that put the show together, thanks so much for tuning in. And stay tuned. If you've got questions on individual stocks, then keep them ready. Up next is Ask Profit. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani, and with me is Soumit Sarkar. And before we start taking all your stock-related questions, which, by the way, you can go ahead and ask us on the numbers that are flashing on your screen up there. You can either WhatsApp us or call us. But before we start doing that, let's take a quick look as to how the markets are doing. The sentiment, of course, is weak right now. The Nifty 50 right now is down by about 1%. Below the 23,400 levels is what we're seeing with regards to where the Nifty 50 goes. Let's try to pull up the heat map as well to see as to what counters are putting that kind of pressure. You have Power Grid losing the most ground, down 4%, followed by Tata Steel, down 3.7%. Eternal Trend, Shriram Finance, SBI, Titan are some of the other names which are down in that range of 2% each. On the flip side, Coal India is doing fairly well. Just one counter which is holding above that 1% mark is Coal India, up 1%. Infosys doing slightly better today, up by about 0.8 odd percent, and ITC and Tech Mahindra up by about 0.5 and 0.6 odd percent. Let's quickly pull up the Bank Nifty. The Bank Nifty is hovering around the 52,800 levels, down by about 1.6%. The pressure here is more as compared to where the benchmark Nifty 50 goes. Let's try to pull up the sectoral heat map as well to see as to what sectors are doing at this hour. Only the Nifty IT slightly in the green is what we're seeing, but media losing the most ground, almost down 3%, followed by defense, which is seen a couple of profit booking sessions down 2.8%. PSU Bank, Realty also down in that range of 2.5 odd percent, and Nifty Auto as well as Metals also seeing a downtick of around 2% each. So that's with regards to where the sectors go. The broader end of spectrum, the mid cap 150 is down by about 1.8%. The small cap 250 is almost down 2.6% as we speak. So more pressure in the broader markets as compared to where the benchmarks go. The BSE 500 quickly, if we can try to pull that up, because most of that action is either news specific or earnings specific there. There you go. You have Amber Enterprises now down almost 16% on the back of weak FY27 guidance and commentary coming in the management with regards to where margins go. KC International also down 8.5%. Symphony again on the back of numbers. Alembic Pharma also on the back of numbers. VIP yet again a bad quarter for them. But on the flip side, you have counters like Gland Pharma, GE Shipping, Raymond, etc. doing fairly well. So that's with regards to where the markets go. But let's quickly start taking all your stock-related questions, and to answer them, we're joined by Saurabh Jain, who's the Equity Head Research, SNC Global Securities, and Gaurav Sharma, Associate VP Head of Research at Globe Capital, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. The first question that we have is on Canara Bank. Lalita from Bengaluru is holding around 2,000 shares at the levels of 139. Wants to know if she can book loss, hold, or average at the current levels. Gaurav, I'll come to you on this one. Your view on Canara Bank?
Some more, first of all, yes, very, very good morning to you, Mahima, and to all the viewers of NDTV Profit. Some more profit taking is pretty much likely in Canara Bank alongside with other PSUs. I'll advise our viewer to hold on to their position, and they can consider averaging it slightly closer to 115 odd levels.
Query is coming in from Lokesh from Bangalore. He has bought few shares of Indraprastha Medical Care at a price of 408. He has around 600 shares. Should he continue to hold this or book loss and move out? Saurabh, any view on Indraprastha Medical?
Hi, good morning. See, we like the hospital space, but Indraprastha Medical is a smaller player in the domain. We like Apollo Hospital, so my recommendation would be better to switch money from the Indraprastha to Apollo.
That's the view coming in on the hospital space. The next one that we have is on Gallant Espat. Now, this is from Yogesh. Says that he's currently holding this counter at the levels of 890 and wants to know if he can continue to hold this from a short-term perspective or not. Currently, the stock is trading at 690. Gallant Espat is what we're talking about here, Gaurav. Any view on the charts right now? Down 7% today and trading at this day's low point.
More pain is expected here. 625 is the level that I'm eyeing at in the near term. So I think if that suits the investor, then he can hold on to the position. Otherwise, it is better to get rid of it. More decline likely here.
Okay. The next query is coming in from Vimala Nanda from Mysore. 30 shares of Tata Power. She wants to know whether should she continue to hold this counter or exit. Saurabh, any view?
We like the utility space, and we expect that the demand for power this year would be higher. And also the lower rainfall expectation will actually boost the consumption of the energy. And with now more EVs coming to the picture and people migrating to the electric stoves and all would actually boost demand for energy. We like this space. We like the Tata Power. And apart from this, if you want to invest in this space, we also do like NTPC and JSW Energy.
Okay, so that's the view coming in on Tata Power as well as the entire power space. By the way, just a gentle reminder for viewers who are watching us, you can also call us on the number that's flashing on your screen up there. Call us live and ask your queries live as well to our guests. The next question that we have is from Chanchal, who is writing us from Mumbai, asking about Kalyan Jewellers. She wants an outlook for this particular counter from a 6 months perspective. Gaurav, your view on the charts for Kalyan Jewellers?
Jewelry stocks were adversely impacted after the recent news piece by the government. We see more pain coming in. Kalyan Jeweler has not been able to perform well in the past. I suggest from a long-term perspective, Titan from the large cap space and Thangamalai from the mid cap space can be considered.
The next query is coming in from CM Naidu from Hyderabad. He's holding 50 shares of Zensar Tech, bought at a price of 505. Should he continue to hold this counter, average or exit? He's a long-term investor. Saurabh, your view on Zensar Tech?
Our view remains negative on the IT stocks, specifically on the mid-cap and small-cap themes, because the outlook is quite blurred today. We expect the lower revenue growth and compression in the margins going forward. And what we are seeing is that, the valuations are also getting compressed. If you see in the last 1 year or 2 years, especially after the recent quarterly earnings, there has been a quite amount of selling in all the IT stocks. We recommend to get out of this space and maybe look for the shelter in the capital goods or in the power space.
Okay, all right. So that's the view on Zensar Tech. But the next one that we have is from Vinod, who's writing us from Surat. He wants to know whether to buy, sell, or continue to hold SBI. He's not mentioned the quantity as well as the price, but he says that he's looking at this from a short-term perspective. So Gaurav, I'll stick with you for this one. SBI, what is the outlook like on the charts?
From a shorter term perspective, I see the stock heading towards 900, 880 odd levels. But we do have a longer term view on SBI as we have a buy rating on the stock. So if anything, the holding period is beyond 6 months, I think a buy on dips is suggested here.
Okay, all right. The next one that we have is from Ms. Javeri, who's writing us from Bengaluru, asking about CAMS. Her buying price is 734, 50 is the quantity. Wants to know if she can go ahead and book profits in this one or continue to hold. I believe she's a long-term investor. So Saurabh, your view on CAMS?
See, even after the correction in the last few quarters, the valuations are still expensive in contrast to the earning growth that company is witnessing. It is trading around 15 times to its book value and around 40-45 times to trailing earnings. I expect further moderation in the multiples and in the earnings going forward. So my take is better to take money from the table.
Okay. The next is a caller query coming in from Mumbai. Tarun, you can go ahead and ask your query.
Yeah, I have Anand Rathi shares in stockbrokers at the rate of 550, 500 shares.
And you can hold this for long term?
Yeah.
Saurabh, your view on Anand Rathi shares in stockbroker?
The continuous moderation activity in the what happening in the capital market space in the last 1.5 years, people haven't made money, and in the F&O space the regulator has put up quite a lot of restrictions, which has given drop in the volumes. So we expect the earnings would the growth that was there will taper off, and maybe in some cases we may see nil growth or negative growth. So take is a bit negative on the broker side. My take is better to get out.
Okay, all right. Saurabh, the next question that we have is on BSE as well as NSDL. Our viewer bought BSE 1 year ago. Says that now he's sitting on some profits and wants to know if this is the time to maybe sell or continue to hold from a long-term perspective. And the second one is NSDL, which he's been holding since IPO. Should he wait, being a patient investor? What's your view on both of these counters?
I think in both of the cases, I find valuations quite expensive. You will find nowhere stock exchanges trade at such high valuations, especially when there is a moderation in the capital market activity. My take is better to take money off the table because valuations are scorchingly high.
The next query is coming in on Amber Enterprises, the stock is down nearly 16%. Chandrasekhar from Chennai has around 45 shares, bought at an average price of 7,550. Should he average at today's fall, or should he wait for further correction or exit? Saurabh, any view on Amber Enterprises?
See, these companies are working on a very thin margins, and last year we saw demand-related issues also. And with the rise in the material costs, these companies may expect further erosion in their margins, leading to lower profitability, and that is what the market is showing concern of. I am expecting that the valuations are still high, and which may correct further going forward. So my take is better to book small loss and exit from here.
Okay. Gaurav, any view on the charts for Amber Enterprises? Because just very recently it did hit its 52-week high, and today trading around 16% lower.
From a chartist perspective, some more decline is possible. Charts are overall fine, not too great, because again the stock has entered the consolidation zone that lasted for nearly 2 years now, and the breakout has failed. So I completely agree with Saurabh. Maintaining a cautious view and taking your money out is a prudent approach here.
That's the view coming on Amber Enterprises. The next one is on JBM Auto. Praneeth says that he wants to go ahead and enter into this counter at the current price, and his view is for the next 6 months. What are the charts indicating here, Gaurav?
JBM Auto, relatively a good stock. We are bullish on overall automotive and ancillary pack. One should hold on to your position, utilize dips to add more. 550 is a very good, attractive level.
Okay, the next query is from Manvi from Bangalore. It's on Anthem Bioscience. He has 200 shares, bought at a price of 721. Wants to know whether should he continue to hold this counter for the next 1 year. Saurabh, any view on Anthem Bioscience?
I guess it is a new listing. Would not be able to give you.
Okay, all right. All right, the next one that we have is on Godrej Industries. Srikanth from Bengaluru wants to know if this is the right time to enter the counter or not. Saurabh, I understand that this is a holding company and results were good because, Godrej Properties did well. There was Godrej Consumer, which also did, give out a decent performance. Plus, the commentary that has recently come in from Piroj Shah has been a very positive one. Do you think that it makes sense from a long-term perspective to make an entry into this counter right now, considering that it's run up quite a bit now?
My view is little different. I am expecting real estate activity to moderate further going forward. If you look, there was a high ticket value sales growth which was happening in the past few quarters, but now that is also tapering off. In the consumption business, I think some kind of a volume growth can come to hit these consumer companies because of the lower rain forecast and the increase in the material cost. So since it is a holding company and has already seen some kind of a bounce from the lows, my take is better take money off the table.
Right. The next is a caller query coming in from Hyderabad. Anjali, you can go ahead and ask your query.
Hi sir, very good morning to all of you, and thanks for taking my query. I wanted to buy Tata Steel, sir. So after Q4 results, is a right decision to buy? What is the price to enter? What is the short-term and long-term view? I want to know that, sir.
I'll get to the short-term view on Tata Steel at this moment. Gaurav, on charts.
Tata Steel is looking good. Any further decline closer to 200 is a very attractive level to buy. 200 period exponential moving average is placed around that level. One can take a stop closer to 185, hold your position, and I think in a 2 to 3 months kind of a perspective, we can expect the stock testing 235 to 40 odd levels.
Okay, all right. So that's the view coming on Tata Steel, but it's time to take a look at the F&O space, and we have Sharad joining by to give us some perspective as to what the cues are indicating. But Sharad, it's not a very positive one today.
Exactly, but that's right, Mahima. Very weak technical setup coming in for the indices. We had earlier mentioned in the morning itself that after the gap down opening, there won't be much to sustain, and that's what's happening right now. Power Grid, Tata Steel, SBI, Maruti, all of them falling in trade more than 2%. Only Tech Mahindra, Bharti Airtel, Infosys, and a little bit of ITC in the green. But overall, the sentiment in the market is towards the negative side. And of course, we are seeing some good build-up also happening on the indices, especially on the shorts front. The VIX also going up. And stock specific, let's see what's happening here. Long build up, I see it's not that convincing. Uno Minda and Coforge, both of them up 1%. Not major trade to be made here. Short build up, of course, Amber Enterprises, that's down 16%. Of course, weak set of earnings coming in. And ICICI Pru, we had mentioned earlier that stock had fallen almost 7.5%. Slight increase coming in. A long unwinding for delivery, another weak set of numbers from this segment as well. A lot of adjustments were there. If you look at the numbers in fine print, and Keynes Tech, that's also down 3%. Short covering happening for Oracle Financial Services and Infosys. A little bit of respite coming because already there was a massive sell-off in the IT space as well. But interestingly, whenever this happens, Oracle sees a good buying. So that's a trend we have picked up. And these are the stocks which should be on radar in the F&O space.
Thank you so much for getting us those details. I think we've got our next caller waiting back. Karthik is calling us from Bengaluru. Karthik, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning. So actually I have a query on one stock. I bought an Avanti feed stock at the price of 1,500. So I'm holding it 300 shares. So currently I'm in loss. Should I hold it or should I further? My perspective, like I planning to hold like 6 months to 1 year.
6 months to 1 year. Okay, okay,
Yeah.
Karthik. Got your question. In fact, we have one more question on Avanti Feeds, which is from our reviewer Kondia, who's writing us, and his buying price is also around that 1479 mark. And he also wants to know whether he can continue to hold this or what is the future perspective of the stock. Gaurav, I'll come to you on this one with regards to where charts go for Avanti Feeds because, this is one of that counter that gets impacted with global news, right? Tariff, Middle East crisis, etc. So your overall view on Avanti Feeds right now with regards to where charts go?
Certainly, it is an export-oriented player. Gulf and United States, both are their clients. Directly impacted with all the disturbance that has played out, but the charts and the price is reflecting a complete different story. The price has not corrected at all. It is into a sideways mode, signaling strength. Therefore, I'll advise the viewer to hold on to their position. I think even in an eventuality, I'm not expecting more than a 10% cut on this stock. So hold with the stop at 1020.
The next query is coming in from Charan from Bangalore. He wants to know the long-term view on Morpin Labs. He can and what price should he buy at the current price because he can hold this counter for the next 5 years. Saurabh, any view on Morpin Labs?
It is a smaller pharmaceutical company. The stock has done nothing in the last 1.5 years, I guess. If you correctly remember the numbers were not that great, but at the same time, they were not equally bad also. So I think I'm not aware if the March quarter numbers are out, but on the valuation front, it is on the lower end of the trajectory. So my sense is better to wait for the quarterly earnings and management guidance and then take a call.
Okay, all right. So that's the view coming in on Morpin Labs. I think we've got a caller waiting by Datta is calling us from Bengaluru. Datta, very good morning to you. What's your query about?
Hi, very good morning. Thank you for having me. I have query regarding BEL and Canara Bank. So I have purchased BEL for 430 and Canara Bank for 25,000 each. I'm looking for a long-term perspective. Is it good to hold or can I start looking for SIP on these two stocks?
Okay, so Datta, generally we take only one query per viewer, but this time I'll allow you to ask two questions. Saurabh, BEL and Canara Bank are the two counters that Datta wants to know about from a long-term perspective. Your view?
See, both counters are from the different domains. If you talk about the Bharat Electronics, the quarterly numbers were good enough, and if compared to their peers, there was no margin compression compared to the other stocks in the defense domain. So the stock is much more stable, and from the long-term perspective, looking good. If you talk about the Canara Bank, it is also one of the good bank in the PSU space. Yes, there has been a pressure on the PSU banking space, especially because what is happening in the global arena, and especially the 30-year yield rising to 5%, putting more pressure on the PSUs because FPI generally hold more banking stocks. So, looking because he's asking for the long term, I think both stocks looks good.
The next query is coming in from Satish Sharma, and he wants to know whether should he continue to hold Sheela Foam. He has bought around 100 shares at a price of 630, currently sitting on a loss of around 10% odd. Gaurav, any view on Sheela Foam?
Just give me a second. Not someone on our radar as such, but little sideways, good amount of resistance around 650 odd levels. So I think a further slip towards 540 would get into a trouble time. So hold with a stop at 540. I'm not expecting too much from the stock till it is trading below 650 odd level. That's a breakout point. If that level is taken out, then only this stock has potential to rise up towards 700, 720 odd zone.
Okay, all right. So that's the view coming in on Sheela Foam. The next one that we have is on Vedanta. Sonali from Delhi wants to know if this is a good time to buy from long-term perspective. Saurabh, your view on Vedanta?
I think we are quite positive on the metal stocks and positive on the Vedanta after the demerger also. So from the long-term perspective, we expect that the metal space would continue to shine, and so Vedanta should shine. My take is positive.
Okay, the next query is coming in from Sagar, and it's on Gland Pharma. He's holding 2100 shares at a price of 992 to 993. He's saying that the results were quite strong. Should he continue to hold Gland Pharma for long term, Saurabh?
Yes, the results were fantastic. The stock did nothing in the last few quarters, but after this good results showing good growth in the US, Europe, and in fact in India also, we expect the company to do well. Our take on the pharmaceutical and the ancillary space is positive. My take is better to hold Gland.
Okay, all right. The next one that we have is on Marksans Pharma. A lot of pharma-related queries we're getting. Shankar from Tamil Nadu wants to know if he can buy Marksans Pharma at the current level and what should be the target price that he should be watching out for on the charts. Gaurav, your view on Marksans Pharma?
One of the better placed, better positions pharma players. It has rallied from 160 to close to 210 now. Still looking good. I'll advise the viewer to hold on to the position, keeping a stop at 190. Levels close to 240 are expected in the immediate near term.
Okay, all right. So that's the view coming on Marksans Pharma as well as the entire space. But Gaurav and Saurabh, it's time for our rapid fire round. Try to keep your answers as short as possible. The first one is on KSA International. Can I purchase KSA International at the current rate of 500 rupees is what issuer wants to know. Gaurav, on the charts?
Better to avoid.
Next query is for you, Gaurav. It's on IFL Finance. Vedant wants to know whether should he continue to hold IFL Finance. He has bought few shares at a price of 506.
Hold with a stop at 440.
Okay, Apollo Hospitals 150 shares bought at the levels of 8,000. Can I continue to hold from a long-term perspective, Saurabh?
Keep on holding.
The next query is for you, Gaurav. It's on SBI. Jashimuddin from Assam has around 185 shares bought at a price of 979. Should he sell or hold?
From a short-term perspective, sell. Otherwise, one can hold with a stop at 880.
Okay, Sharda Cropchem, our viewer has bought 15 shares at the levels of 950. Can I accumulate more of this? Saurabh, from a long-term perspective, any view?
Hold, but do not add more.
Saurabh, the next query is for you. It's on Aether Industries. Jay from Prayagraj has around 5 shares of Aether Industries bought at a price of 5,982. He wants to know whether should he continue to hold this counter. I don't think the price is right at what he has mentioned, but should he hold Aether Industries?
My take is a hold.
Okay, Yes Bank bought at the levels of 21.5 thousand shares is what our viewer is holding. Wants to know if he can continue to hold this for the next 5 years. Saurabh?
Better switch to Maharashtra Bank.
The next query is for you, Saurabh. It's on Repsol Energy. Chris from Bangalore has around 70 shares bought at a price of 120. He wants to know the long-term view on this counter. Should he hold?
Hold.
Okay, Akums Drugs bought 100 shares and wants a 6 months view. Balaji from Chennai wants to know on the charts what's the 6 months view indicating. Gaurav?
Hold, take a stop at 450, hold your position, breakout likely above 560.
The next query is for you, Gaurav. It's on Emphasis. Harsha from Vijayawada has around 45 shares of Emphasis, bought at a price of 2,700. Should he hold or sell from short-term perspective?
Sell.
All Cargo Logistics, our viewer wants to know whether to hold or sell at the current levels. Gaurav, any view?
Reduce your position.
The next query is for you, Saurabh. It's on Bata India. Venkat from Chennai is holding around 100 shares of Bata India, bought at a price of 800. Should he sell, hold or accumulate?
Hold till Diwali.
Okay, Venkat Ramani wants to know about Geo Financial. She's bought 600 shares at the levels of 296 from a 6 month perspective. Gaurav, what are the charts indicating?
Stock is looking big. A breakdown below 220 will take it towards 200.
The next query is for you, Gaurav. It's on Muthoot Finance. Nagesh is holding few shares. He wants to know the short-term view. Should he hold or exit?
Hold.
Okay, Praj Industries, from a long-term view, does it make sense to enter right now? Manoj from Bengaluru wants to know. Saurabh?
Yes, you can.
Next query is for you, Gaurav. It's on Garden Reach. Mahesh from Maharashtra has 292 shares, bought at a price of 3,074. Is there an upside here?
Hold. Shipping stocks are doing good. Hold your position.
ITC Hotels bought at an average price of 182. 600 shares is what Suman from Kolkata is holding. Long-term view on this. Saurabh?
Hold.
Next query is for you, Saurabh. It's on L&T Tech. Krishna from Hyderabad has 48 shares, bought at a price of 3,854, currently sitting on a loss. Should he continue to hold this counter?
Exit with marginal loss.
Okay, Transrail Lighting, 480 shares, bought at an average price of 653. Hold, average. Hemant wants to know. Gaurav? Okay, I think we've lost Gaurav's connection. Saurabh, any quick view on Transrail Lighting?
Exit.
All right, okay. Okay, so that brings us to the end of this rapid fire round. But viewers, it's time to slip into a very, very short break, but we'll be right back answering more queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screen up there with all your stock-related queries. On this side of the show, we're also, by the way, joined by Ajit Mishra, SPP Research at Renegade Broking, who's joining us now. Ajit, a very good morning to you. The next question that we have is on National Aluminium Company, and this is from Harish, who's writing us from Karnataka. He wants to know whether he can continue to hold this or sell. He's got around 3,000 shares bought at the levels of 186. So he's sitting on a huge profit of over 6 lakh rupees. Ajit, what would you recommend? Further steam left, or should he exit and book profits?
Yeah, good morning, Mahima. So, Mahima, we have seen a tremendous run across the metal pack, and National Aluminium is also among the top performing names. But off late, we have started seeing a bit of a cool off, in the stock prices, while the metal prices are still holding strong. So what we feel that at least partial profit booking, because he has already witnessed considerable profits, in this position. So at least partial profit can be booked at current levels. And for the remaining position, also 365 is the base where we have the 100 EMA placed. Below that, the bias would change from positive to sideways, in the near future. So partial profit booking with the trailing stop loss at 365, we can continue to hold this remaining position.
Okay. The next query is coming in from Bhavani from Chennai. He wants to know the long-term view on KPIT Tech. Saurabh, your view on KPIT Tech?
View remains negative on the IT stocks and also on the mid-cap IT stocks. Better to take money off the table.
All right. The next one that we have is on... I think we already did answer on NSDL. The next one that we have is from Dr. Lavanya, who's asking about Welspun Corp, if I'm not wrong. She's holding 350 odd shares at the levels of 1373. Wants to know whether she can continue to hold or sell. Ajit, what should she do? She's sitting on a loss of around 28,000 rupees.
So Wellcorp, after this sharp surge, we are now seeing a bit of a profit taking. So possibly close to around 1230 is where we have the immediate support. So with that as a stop loss, you can continue to stay put. In case of rebound, 13 and 1350 will be the first area of resistance. So around that area, she may consider reducing her position.
Okay. The next query is coming in from Prashant, and it's on KFin Tech. He's holding 152 shares, bought at a price of 930, currently sitting on a loss of 15%. Should he average or hold on to this counter? Saurabh, your view?
My take is, even after the correction, stocks looks expensive to me. It is better to get out.
Okay, the next one that we have is coming in, and this is from Piyusha Kanodia, who's writing us from Jaipur, asking about Godfrey Phillips. She's got 50 shares at the levels of 2360. Wants to know whether to exit at the current juncture, and she's been holding this from a long-term perspective. Saurabh, your view on Godfrey Phillips?
View remains negative because of hike in excise duty. Better to get out.
The next query is from Piyush Kanodia from Jaipur. Okay, that query has been taken. The next one is on from Venkat Reddy from Hyderabad on NBCC. He has 5,000 shares purchased at a price of 995. He wants to know the outlook for the next 3 months on this counter. Ajit, any view on NBCC?
NBCC, Somit looks sideways to us, means there was an attempt of recovery or rebound above the long-term averages, but it couldn't sustain. So now we are again seeing pressure emerging at higher end on every attempt of rebound. So short term, maybe around 85, 88 is where we have the immediate support, but long term support is at around 80. So it looks sideways to me. So if the view is short term, you may consider reducing his position at current levels. For re-entry, let the stock break and decisively hold above 100 mark.
Okay, all right. So that's the view on NBCC. The next one that we have is on Vishal Megamart. B. Somya from Chennai wants to know whether from a short-term perspective, is it the right time to enter into this counter or not? Ajit, on the charts?
So Vishal Mega Mart, we are seeing volatile swings of late. Means the stock made an attempt of rebound of late, but again we are seeing that sellers are aggressive around 125, 130 zone. So let it sustain above this mark for fresh long positions above 130 mark, and for the existing position 110 is where we have the immediate support. So that should be the stop.
Next query is on Shivalik Biometal. Lokesh from Hyderabad is holding 100 shares. He wants to know the short-term view on this. Ajit, any coverage or any type of view on Shivalik Biometal?
Samit, it's reeling under tremendous pressure, means on every rebound. In fact, the stock has been trading in a decisive downtrend for almost nearly 1.5 years now, and still there is no sign of recovery or rebound. So the prudent approach is to accept the reality and exit from the current levels in case if you have any, and avoid any fresh position or adding to your loss-making position.
Okay, all right. The next one that we have is on HDFC Bank. Shankar from Dubai says that he has position in HDFC Bank of around 130 shares, bought at the levels of 883. Wants to invest another 50k in the private bank space. By the way, he also has holding in ICICI. Wants to know from a 3 to 6 months perspective, what could be a better bet to go ahead and invest another 50k? Ajit?
Within the private banking space, if the view is short to medium term, Axis looks comparatively better because in this entire decline, it's holding strong, closer to the record highs. The dent is minimal. In fact, during the recovery also, we are seeing that Axis is outperforming. So Axis looks comparatively better within the large cap IT space if the view is short to medium term.
Next is a caller query coming in from Bangalore. Yogesh, you can go ahead and ask your query.
Yeah, hi sir. Good morning. So actually, I'm having share from Gallant Ispat for 820 rupees. I'm having quantity of 800 shares I'm having now, and currently it's going in a loss. Actually, it's 694 per share value currently. Can I hold it or like for some time or like?
Can you hold for long term or short term?
Long term is like next 6 months maybe.
Okay. Ajit, for the next 6 months, do you expect a recovery in the share price of Gallant Ispat?
Samit, the way we are seeing stock witnessing correction, volumes are comparatively low, but still means it indicates that the kind of momentum that we were seeing in the stock earlier means from 500 to 900, it was almost a vertical rise, and we have almost retraced the 50% of that move. So this area close to around 660, 665 is where we have the immediate support, the 100 EMA mark. In case if the stock manages to hold this area, then probably we may see an attempt of rebound. So since his view is short term, I would recommend him to utilize any recovery towards 800, 820 levels to reduce his position.
Okay, the next one is on Dixon Technologies. Sanjit Pavaskar from Mumbai wants to know if this is a good counter to kind of invest in for the next 5 years. Saurabh, your view on Dixon Tech?
See, what happens, these companies are working on a very thin margin. Today, what we have seen in the Amber Enterprises can also happen to the Dixon because of the rise in the material cost, and the valuations are fairly high. So my sense is better to avoid it.
The next query is coming in from Sahil from Haryana. He is holding 20,000 shares of Bank of Maharashtra, bought at a price of 82 rupees. Current price is 77.5, so sitting on a loss. Any view on this? Saurabh, from long term, should he continue to hold this?
From the long-term perspective, yes, it is a good hold. The bank's balance sheet is quite clean and pristine. They are able to maintain their margins, and the NPAs are also within control. Provision coverage ratio is quite excellent, and the bank is above all growing above industry average growth. So it's a good hold.
Okay, so that's the view coming on Bank of Maharashtra. The next one that we have is on Bandhan Bank. Ram from Maharashtra is holding around 100 shares at the levels of 194. Wants to know whether to hold or sell from a long-term perspective. Saurabh?
I think the last quarterly earnings, the bank surprised with the earnings. The street was surprised, and in my sense, I think better to wait for one more quarterly earnings. And if bank continues to surprise the street in a positive manner, then continue to hold. Otherwise, exit.
Next is a caller query coming in from Hyderabad. Aruna, you can go ahead and ask a query.
Yeah, hi sir. Good afternoon to all of you. Thanks for taking my query. I wanted to buy Quality Power, sir. So what is the view on after Q4 results? What is the price to enter? What is the long-term and short-term targets for this?
Okay. Saurabh, any long-term view on Quality Power? Should Aruna buy at this level?
I think it is a recent earning, the recent quarterly earning, the company showed good growth, but at the same time, the valuations are quite expensive. Since this is the most sought after space, and all the stocks in this category are running like anything. So I expect valuation may sustain going forward also. So I think you should review your holding every quarterly earnings. So as of now, it is a hold.
Okay, all right. The next one that we have is on Bank of Baroda. Jashimuddin from Assam wants to know whether to hold or sell. He's holding around 550 shares, bought at the levels of 256. Ajit, your view on the charts for Bank of Baroda?
So Mahima, off late we have started seeing profit taking in the PSU space also, and post the SBI numbers we are seeing that the pressure has increased. So Bank of Baroda is also gradually drifting lower. Now this area close to around 250 from where last time we had this breakout, which helped the stock to inch toward 320, the record high zone. So maybe around that area we might see consolidation again, but the recovery is going to be gradual. Means around 265, 268 is something where we have the next support. So in case if you have any existing position, you may continue to stay put with 250 as a stop and use recovery to reduce if the view is short term.
Okay. The next one is a caller query again from Hyderabad. Anjali, you can go ahead and ask a query.
Yeah, I'm holding the MRPL at 190 rupees, 300 shares.
Okay.
So the stock corrected around 23%. So what I should do, I should add more or exit. What would be the price?
And you can hold for long term?
Yeah, maybe 6 months, 1 year.
1 year. Okay. Saurabh, should Anjali buy more shares of MRPL at current levels or exit this counter completely?
Would not recommend to add more shares, but yes, the valuations are on the lower side. And since she has a view of 1 year, I think the current upheaval which is happening should subside in the next 3 months. And again, if we are talking about 1 year, then things should improve from here on. So my sense, it is a hold.
Okay, the next one that we have is on United Spirits. 100 shares bought at the levels of 1283. Bablu Sharma from Chandigarh wants to know from a short-term perspective if he can go ahead and continue to hold or sell maybe. The stock is currently trading under pressure, Ajit, but overall, Q4 it did well. It's one of these counters that benefit from the new Karnataka policy as well. But overall, your view on the charts?
So Mahima is stuck in a range. It means we are seeing a corrective trend almost 1.5 years, and the good part is that at least downside is capped. Means it's more of time-wise correction in this range of 1200 to 1450. So we are currently in the middle of the band. Possibly we may see further consolidation in the coming weeks. So in case if the view is, let's say, at least 3 to 6 months, you may continue to stay put with 1200 as a stop. And in case of recovery, once we surpass this 1400 mark, then probably next leg of up move would trigger, which could help the stock to inch towards 1550, 1600, the record high zones.
The next query is from Madanlal Shroff, and he wants to know whether is it a right time to buy Voltas from short-term perspective. Ajit, any view on Voltas?
So again, Samit, we are stuck in a range in Voltas too. It's been almost same 1.5 year of consolidation, 1200, 1550. That's the broader range. The good part is that we are retesting the lower band, and there are sign that there could be a rebound attempt, at least if not a decisive recovery. So with strict stop at 1190, one can look for a rebound trend with the 1300, 1320 being the immediate target.
Okay, all right. So that's the view coming in on Voltas. We've got our next caller, Kumar, I think is calling us from Andhra Pradesh. Kumar, a very good morning to you. What's your query about?
Good morning, madam. This is the right time to buy Punjab National Bank at current level.
What is the time horizon that you're looking at, Kumar?
Long term.
Long term. Okay. Saurabh, your view on PNB?
I think the view is positive on the PSU stocks and PNB too. From the long-term perspective, it is good to add, but you should add in a staggered manner. Or any other alternative, if you are wishing to add in your portfolio, could be Indian Bank.
Okay. The next query is from Padma, it's from Warangal. She has around 3,000 shares of Ashok Leyland, bought at a price of 170, currently sitting on a loss. Can she hold this counter for the next 3 months or exit? Ajit, your view, Ashok Leyland.
So after this, corrective phase, Amit, we are seeing that the stock is struggling to witness any decisive rebound, while the other auto counters have done well. Means comparatively, they are still holding above the long-term averages. So probably we may see the underperformance at least in the near future until we break this 175 barrier. So if the view is short term, my recommendation is to exit from Ashok Leyland or switch to TVS or iShares.
The next one that we have is on City Union Bank. Ashwini from Karnal is holding 500 shares at the levels of 285. Currently, the stock is trading at 249 and wants to know whether to hold, book loss. Please suggest is what he's asking. Ajit, I'll stick with you for this one. Your view on City Union Bank?
So Mahima, after this recent consolidation, still, it looks like that the consolidation might continue in the near future. So 263, 65 will be the area where it has multiple resistances, both in terms of price data and the long-term averages. So, but the good part is that downside also seems capped because close to around 240, 235, we have multiple supports from the area where last time we saw the stock witnessing a rebound. So it's a hold, but for any fresh buying or any momentum, we need a close above 265 levels. So as of now, with stop at 235, they can continue to hold the position. For fresh buying, wait for a breakout above 265.
Okay, the next query is coming in from Shamlal and he's holding 70 shares of Hindustan Aeronautics, bought at a price of 4,200. He wants to know, should he continue to hold this counter for the next 3 years? Saurabh? Okay, Saurabh, any view on this?
See, the company has continued to disappoint on the operation side. Albeit the order book is quite good, but conversion to the bill is where the company is lacking, and also there is continues to be pressure on the margin side. And now with the rise in the cost of material, I expect that the margin pressure would continue to be there. See, you if you have a 3-year horizon, then you can surely keep on holding the stock, but otherwise I am expecting pressure in the near term.
Okay, the next one is on MCX. Whether our viewer, Dipen, can go ahead and buy MCX today from a long-term perspective is his question. Saurabh, your view on MCX?
My sense is better to miss it.
Okay, all right. The next one that we have is on CET. 15 units bought at the levels of 3575. Our viewer Ramdar is looking from a long-term perspective at this one. Whether to go ahead and invest or continue to remain invested rather. Saurabh, your view on CET?
Do not add more. If you want to add more stocks in the similar space, then you may add a company like JK Tyre.
Okay, the next one that we have is on Premier Energies. Our viewer wants to know if you can go ahead and buy Premier Energies at the current levels and what should be the target price. Ajit, this is one of those mid-cap stocks that has done very well despite of markets seeing the downtick, right? And plus the numbers were good, plus the company is around fundraise. Your overall view where charts are concerned right now?
Rightly, my mark means in terms of the recovery means from 660 to 1040, it was almost a vertical rise. And now also we are seeing that the stock is trying to stabilize above the long-term averages, which is a good sign after this strong up move. For fresh momentum, we have this hurdle close around 1050, 1100. But once, let's say we surpass this, then probably we are set for the new record highs. So in case if somebody is okay having like a time horizon of 3 to 6 months, they can continue to accumulate the stock during this consolidation phase with the stop at 900 and the positional target of around 1250 to 1300 in next 2 to 3 months.
Query is on Vari Energies. Uma from Bangalore is holding 16 shares, bought at a price of 3,197. Her holding period, she can hold this counter for the next 2 years. Saurabh, should she continue to hold?
I think expensive of valuation, exit with the marginal loss.
So that's the view on Vari Energies. The next one that we have is coming in on Garden Reach Shipbuilders. Our viewer Mayur wants to know whether to continue to hold or not. He's holding 75 shares at an average price of 2,800. Ajit, your view on the charts?
So very volatile, Mahima, means from 1900 to 3400, and then again now we are again at 2600 mark. So the supportive thing is that we are closer to the long-term averages, so it might give the cushion on the downside in this range of around 2400, 2500. So with that as a stop loss, you can continue to stay put. But in case of rebound, if the view is short term, 2780, 2800 will be the first area of resistance. So until we break that, the sideways tone might continue. So if the time horizon is less than, let's say, a month or two, then utilize recovery to reduce your position.
The next query is from Arun from Kerala. He is holding 200 shares of Jupiter Wagon bought at a price of 410. Should he hold or sell, or should he average? Any target on this, Ajit?
Sumit, we have had these kinds of rebound attempts across the railway stocks, but majority are still struggling to cross the major barriers of the long-term averages. So same holds true for Jupiter Wagon also. After this rebound attempt, again, the stock is witnessing pressure. So sideways to negative trend might continue. So if the view is short-term, it's prudent to exit.
Okay, all right. The next one that we have is on Inox Wind. Our viewer Rohit from Mumbai has bought it at the levels of 97, wants to know whether to hold or add more. He's already holding 5,000 shares, by the way. Saurabh, your view on Inox Wind from a long-term perspective?
I think the stock has done nothing in the last few quarters, and the valuations have subsided. But in contrast to the earnings, it looks still expensive. My take is better to exit.
Rapid fire round. Saurabh as well as Ajit, you both know the drill. The first one is on HFCL. Our viewer Subodh is holding 500 shares at the levels of 111. Hold or exit, Ajit?
Book profit.
The next query is on Welspun Corp, and it's for you, Ajit. Dr. Lavanya from Iluru is holding few shares, 350 shares at a price of 1,373. Should she continue to hold?
Use recovery to reduce.
Okay, the next one that we have is on BPCL. Is this a good time to enter from a long-term perspective, Saurabh?
Miss it. Avoid.
The next query is for you, Ajit. Sangeet from Sangeet is holding few shares of Oberoi Realty bought at a price of 1,687. Should he continue to hold?
Yeah, hold with stop at 1,500.
Okay, Eternal 488 stocks bought at the level of 179. Hold or sell, Ajit?
Reduce.
The next query is for you, Saurabh. It's on HPCL. Varun from Hyderabad has 400 shares bought at a price of 377. Should he hold this counter for the next 2 to 3 years?
Hold.
TCS bought at the levels of 2730. 5-year plus view on this one, Saurabh?
Exit.
The next query is for you, Ajit. It's on Marksans Pharma. Sabita from Hyderabad wants to know the short-term target on Marksans Pharma.
So Marksans look positive. In fact, today also we are seeing that up move continuing. Close to around 230, something that she can consider as a major target with stop at 205.
Okay, TVS Supply Chain Solutions. This is a good time to enter. Shankar from Bengaluru wants to know if he can do that. He's trying to add 1,000 shares. Ajit?
TVS Supply, hold.
The next query is for you, Ajit. It's on Fortis Healthcare. Surya Prakash from Chennai wants to know whether should he buy or sell Fortis Healthcare.
Buy above 980.
Okay, RR Cable from a 1-year perspective, what should be the target that one can expect and stop loss on this one? Shivakumar from Bengaluru is asking. Ajit?
Stop should be at 1680. Upside potential 2300.
The next query is for you, Saurabh. It's on Reliance Industries. The viewer, his name is Darshan. He is holding 500 shares bought at a price of 1,440. Should he hold or sell?
Hold.
IRCTC, can I continue to hold from a long-term perspective? Shrikant from Bengaluru wants to know. Saurabh?
Sell.
The next query is for you, Ajit. It's on Texmaco Rail. Prakish Kosh wants to know whether should he hold or sell Texmaco Rail at current market price.
Exit.
Samvardhana Motherson bought at an average price of 110. 2,000 shares is what Harijit from Mohali has been holding. Continue to hold or sell, Saurabh?
Hold.
Next query is for you, Saurabh. It's on Tejas Network. Venu from Hyderabad is holding 135 shares of Tejas Network, bought at a price of 479. Should he continue to hold this counter?
Hold.
Canterbury is the next one. Anil Bhalla from Jalandhar wants to know if he can continue to hold this for the next 15 days. He's bought 1,000 shares at the levels of 254. Ajit?
Canterbury looks weak to me. Exit.
Next query is for you, Ajit. It's on Coforge. The viewer is holding 50 shares, bought at a price of 1,500. He can hold the counter for the next 3 months. Should he do that or should he exit?
Better to exit. IT still looks weak to me.
Moschip bought last week at the levels of 228. Satyan is already sitting on a loss of 14% from a 6 months perspective. Can he continue to hold or shift to something like a Shilpa Medicare? Ajit, your view on the charts?
Rebound possible, but upside seems capped. So close to 194. Maintain a stop and use recovery towards 210 to reduce position.
Next query is for you, Saurabh. It's on Apollo Microsystems. Viru is holding 1,000 shares, bought at a price of 190. Should he continue to hold or exit?
Hold.
Okay, Hindustan Zinc bought at the levels of 700 rupees. Continue to hold from a long-term perspective, Saurabh?
Hold.
All right, okay, that brings us to the end of this rapid-fire round. Saurabh as well as Ajit, thank you so much for helping us answer almost over 90 queries today on this edition itself. So thank you so much, of course, for that. But viewers, like I said, completely out of time on this edition of Ask Profit, but do stay tuned because KYC is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies, interesting small caps, some interesting mid caps, and also some hidden gems. And today also I've got you a good, interesting company after a strong quarterly numbers. But wait, try to guess the company. The first one is it's a Bengaluru-based company. I would like to give you some more hint. Try to guess it. The company deals with AC generators and electric motors. It's been buzzing of late a lot. Of course, last week there was a big jump in the numbers also, as well as the stock prices. And it's a very big multi-bagger. The stock is up 27 times. I'm not joking. The stock is up 27 times in the last 5 years. Try to guess the company. It's been buzzing all across. And of course, it's a quite powerful company, and that's also a pun. The company in focus is TD Power Systems. That's what we like to talk about. And interestingly, the important thing is the Q4 numbers. That's where we'll start our talking points. Also, a little bit of margin pressure is there in the industry or in the company. We'll try to understand that from the management. And why are we calling this company? We'll try to understand that as well. The order momentum, we need to look about that. Is that changing now from Q1? Will it be on the higher side? A lot of orders coming in, but when a lot of orders comes in, try to understand there's an execution risk also at play. So we'll try to understand this for the industry perspective also. Apart from this, the key question to be asked would be the demand trends, especially on the gas turbine segment, because this demand is showing a really strong revenue visibility. We have seen it across the industry. The margins and the top line guidance, are they giving this time any? We'll try to understand because they had given in FY26. So we'll try to get those numbers out and the investment plans for the large generators. Of course, will that happen in the next 3 months or because of geopolitical tensions, will the company step back? And the capacity utilization and capex plans. This is an important question to be asked and we'll try to get those numbers for you. Apart from this, the geopolitical stress, what kind of impact is happening? We are already seeing a little bit of it in the margins. Will it impact the supply chain also? That's a big question to be asked. And the outlook, of course, for the advanced automation and robotics and which are the new areas which their orders are coming in. That's what we'll try to understand. And we'll be joined in by Nikhil Kumar. He's the MD at TD Power Systems, where he'll try to answer most of the queries sent by you and by me as well. But let's try to understand, what does the company actually do? Is it a very simple product for you to understand? I'll try to make it more simpler for you. Of course, it's a Bengaluru-based company, but let's get into the details about it. This company karti kya hai? They makes AC generators and electronic motors. Of course, this is a type of we could say a current, alternate current. That is what we talk about. The company makes generators for turbines, जिससे energy generate होती है, and this is where the engines also come in, and there are special applications now because of new industries is there. That's what we'll focus on. They make motor induction and synchronous, and traction segments also. These are basically your motor segment which to talk about. Totally, they have around 8,055 generators across 113 countries. So definitely it is a global company. Company delivered a very strong Q4, and also there's an interesting corporate development, and the company announced a 1:2 share split as well. The stock already near its lifetime high levels to increase the retail participation. They have done that. 80% of orders comes just from exports, and that's what we have been talking about. These are the key details about the company. But what does a generator do? It's a very simple question, but I'll try to make it more simpler. It's an electromechanical devices. What does this mean? This means that it takes energy from one segment and then it creates the energy which can be used as electricity. This is what it is. It's a bit technical, but I promise you I'll make it very easy for you. This is their core product, and based on that, other industries, there are applications also. If you would like to show the other applications, what happens in the industries, there can be steam, gas, water, and internal combustion as well. But enough of science. Let's now talk about the order picture. The order inflow growth, that is what the market wants to look at. Look at that. It's up 51% on a year-on-year basis. And this is, of course, we are looking at the FY26 kind of numbers. The Q4 numbers, even if you look at that, that's also up 61% on a year-on-year basis. And the overall order to look at, that stands at roughly 1973 crore rupees. So that's a pretty interesting take, right? But how does the order book breakup looks like? And of course, we have broken it into domestics and exports, largely exports and deemed exports. माने कि SEZ से अगर जो जाता है उसे deemed exports भी कहते हैं. This is 64%. 21% is largely your domestic, and the smaller ones includes rail exports, domestic rail, spares, and also the Turkey segment. They have kept it separately. That's pretty interesting. So this is the entire order book coming in. But what's working for the company? It chal kyun raha hai stock? The reason is strong operational and financial parameters. The second positive reason is FIs are increasing stake in the company. Of course, apart from this, there is an improvement in the order win rate. पहले 600 करोड़ था और अब मैनेजमेंट बता रही है 650 करोड़ होगा. That means there is an increase in the order flows. This application is happening across the new age applications, be it nuclear, data center, railway, and also hydro segment, and that is where the bullishness is coming in. And also it's a beneficiary for industry-wide high demand for generators. That is what we are seeing, the entire sector getting re-rated. But what may not work for this company, higher valuations, pretty high, and this is for the entire industry I'm talking about. And remember, when you get a lot of orders, the execution risk keeps piling up as well. And a couple of times this happens on the quarterly earnings, and the delay in the investment for larger generator, the large size generators, that's what the management has spoken about. They've given 3 months in their outlook, but that delay might be a concern. So this is the entire picture for TD Power Systems, but the entire picture for KYC in our show is via 8 parameters, and generally we of course take the usual ones, the income statement, balance sheet, cash flow. These are the holy grail of financial accounting. Apart from that, we also have the ROC to understand how that has panned out over the last 3 to 4 years. We have shareholding, street cred, about how much money has been made, and of course this has been a multi-bagger, so I'll try to get you all the other details as well. Valuations, we'll try to compare it with its peer like ABB and CG Power, and the outlook, what the company is talking about. What are the numbers to look at? This is what we look at. So the first one, let's start with income statement. Let's see what's happened here. Last 3 years CAGR has been decent. You should be looking at the bottom line numbers as well. That has done well at 21% CAGR. Seems decent, a good growth trajectory coming in. And let's look at the Q4 numbers also. Largely the numbers have been strong. The only concern for me, apart from a very strong top line growth and a PAT growth, are the margins. Margins seems to have taken a pressure hit. Let's just show you how the margins have panned out to see the entire setup. Largely it has been stable, it has been going up. It peaked at 20% in FY25, but it has come down, not a lot, but still nevertheless it has moderated to 18%. So that's one question to be asked. Will this pressure continue going ahead into the first or the second quarter of FY27? So as of now, let's give this a neutral rating when it comes to the income statement. Let's talk about the balance sheet, and largely it is well capitalized. There isn't much to actually look about. A minor increase in the borrowings. The company is having decent cash levels of roughly around 199 odd crore rupees. So net, there isn't any fault in the balance sheet. So I'll be giving this a neutral rating as well. So we spoke about income statement, we spoke about balance sheet. Let's talk about the third one, that is cash flow. And remember, execution happens. They have a lot of foreign clients, so the cash flow cycle might be much better than compared to a government company related orders, and that is why the numbers are looking very strong. Cash flow from operations has significantly gone up. The net cash flows are also decent. It's in the positive, and the conversion is also strong. So for a company like this at the current juncture, the cash flows are strong, so I'm going to give this a thumbs up. Let's talk about return ratios, and I have taken ROC numbers here, and look at that, the progression which has happened in FY22. It was of just 16%, and then the increase started coming in, and it has held its ground also, and now it's a 33 plus ROC business, and that is where it lies, that the company is generating a good capital employment and the returns to the investors as well, and this is a very good side, to be honest, and that's why I have given this a strong thumbs up. Let's talk about shareholding and try to understand. And yes, FIs, you look at this number, that was just 13% in March 24. In the next 2 years, this has gone up to 27%. FIs ने अपनी stake double से ज़्यादा बढ़ा दी. Promoters, on the other hand, have been selling. But remember, promoter stake is not as high as other companies here. And remember, there are some MNC competitors with them as well, and that's why maybe the FI interest is coming in. DIs have reduced their stake, so it kind of balances it, and promoters sell their stake. So net, there are mixed trends when it comes to the shareholding, but as of now, I'm going to give this a neutral rating as well. Let's talk about the street cred, about how much money has the stock made for the investors, and the data seems like the story is very good. From March lows, the stock is up 63%, एक साल में 150% stock ऊपर गया, and then look at it year to date. This year itself, the stock is up 82%, and if you are holding this company for a really long time, maybe 5 years, you have made 27x of this total returns. Imagine, that is a very big multi-bagger sign coming in from TD Power Systems. But net, it's a strong thumbs up when it comes to the street cred. Always remember that if the stock has run up, the valuations will be under the question. Let's see what the valuations are. And to the entire sector, they have seen a run up, and largely TD Power, still cheaper than its peers, but just look at it. It is 78 times its 12-month trailing P. Same story goes for ABB and CG Power. Look at the valuations. ABB India is 79 times. CG Power is 104 times. So you see the valuations, they are on the higher side, and to enter right now might not be the good time unless some dips come in. That's what the analysts say me. So right now, for the peer comparison of valuations, doesn't make sense. So it's a strong thumbs down when it comes to TD Power. But outlook, that is where my interest comes for the stock. A strong demand coming across all verticals. That's what the management had stated, especially on the generator segment, and of course the company is focusing much more on that. The order inflow is approaching 650 crore per quarter. Earlier it was 600. So yes, there is an increase happening. There's a push happening in the larger generator segment, and this capacity addition is something which the management has spoken about, and largely they are expecting this to happen in the next 3 months. That's a date to look at. We will also be trying to understand much more about this from the management as well, and the outlook for FY27 and 28 remains strong. But number kya hai? We need to understand that as well. So that's the outlook looking like. So overall, the outlook remains pretty strong as well. But let's revise the entire KYC ratings for you to give you the entire picture of what we have done over the last 12 to 15 minutes. Income statement and balance sheet have been largely neutral. Cash flow, the money is coming in. Return ratio, the ROC numbers are going up each year. Shareholding, there are mixed trends, but street cred, it has been a multi-bagger, and over this year itself, or from March lows, the stock has given good returns as well. Valuations, because of the stock run-up, is not attractive at all for the entire sector, but the outlook, that is where the bullishness lies for the analysts and the street as well. But final rating kya hai? Final rating is 5.5 out of 8. That's what's largely in line with the numbers which we gave in to the companies in our KYC. And to decode more about this company, we'll be joined in by Nikhil Kumar. He's the MD at TD Power Systems. An interesting snippet about him. He has 3 decades of experience in manufacturing electrical rotating machines. That's the most simple way to put things. And he's also the ex-general manager at Kirloskar Electric from 1990 to 2000. So imagine the experience he's having. So we'll be joined in by Nikhil Kumar, but just after a short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit, Business Leadership Awards. Honoring Excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to KYC, and now we are joined in by Nikhil Kumar, the Managing Director of TD Power Systems. Good afternoon, Nikhil. It's always a pleasure to have you. A very strong quarterly numbers also coming in and bullishness on the order inflow front as well. Just want to understand a little bit more about it. Does this continue in Q1, Q2 as well? You spoke about that 650 crore mark of the order inflow. Your views on that?
I see a very strong pipeline. I mean, we have a very strong pipeline. And the basic drivers that are creating this demand or creating this order inflow are very much intact. In fact, we are seeing no loss of momentum in the factors that are driving the demand. That means basically it's coming out of the data center, AI data center business. It's coming out of grid stabilization. It's coming out of basic power generation, shift towards renewables, hydro, geothermal. And so we are seeing in all these sectors very, very high demand. And so the pipeline is very strong. And as I mentioned in the earnings call last week, that we are very confident about revising upward our guidance to 2,400 crores plus. And I've said that there's going to be a possibility, a very strong possibility to further upgrade that guidance. So at the moment, it's very buoyant.
Nikhil, just numbers, we need to revise it again. What was the number for the guidance which you have currently given? And of course, there will be, of course, in the future, you will try to upgrade that as well. But what's the exact number?
Yeah, so the initial guidance given last year was 2,200 crores for this financial year. And last week, I gave an upgrade to 2,400 crores. And I'm looking at a very strong chance that we'll be further upgrading this beyond 2,400.
Right. So beyond 2,400 odd crore rupees, that's the guidance might come in the future. Well, pretty interesting on that. Just wanted to understand a little bit more details about it, because a lot of peers also of yours, especially in the gas turbine segment, a lot of undersupply, is there in the industry. The demand has been very strong. The revenue visibility looks in years. How are you seeing that?
Yeah, a generator is driven by a turbine, right? So in the end, we have to do what our prime mover customer, and I say prime mover, I mean either a gas turbine, steam turbine, or an engine. We do what our customers ask us to do. And they are all adding a lot of capacity. On an average, I can say people are in the turbine business and engine business are doubling capacity. Some of them are going to go for 3 times the capacity. And so they are going to be adding this capacity gradually over the next 2 or 3 years. And so the demand forecast, what they have given to us based on their capacity addition and what they see from the market, is showing towards a very high growth for us too. And that's why I think that this cycle is going to run for many years.
Okay, this cycle will run for many years. Of course, there is always a positive talk about it, but there are some concerns also. We keep on getting orders. There's an execution risk also for your industry. So what is this execution risk? And maybe, what are the things which you are mitigating to make sure that that doesn't happen?
Execution risk is a real risk. I mean, we are operating today in a very, very uncertain geopolitical situation.
So there are always problems with shipping or problems with undersupply of certain key commodities, or so managing this execution risk is critical. So far, we're doing okay. But what's around the corner, we don't know. So we try to protect ourselves by inventory, by holding large inventory of critical raw materials and things like that to the extent possible. But if right now everything is manageable, but who knows what's around the corner? And still, we take an active role in thinking, okay, what can come next, and try to do whatever we can. And that's worked for us so far. But yeah, you're right. There is an execution risk overall.
That's pretty much there. One side order inflows, there is other side execution risk. But the margins is also something I'm looking at, because everything else ticks the boxes in my analysis. But the margin, little bit pressure is there. Compare it in a sequential basis or even year-on-year basis. Do you think any kind of margin guidance you can give me, or in case there is an uncertainty, do you think that uncertainty or the pressure on margins can flow through in Q1 or Q2 or even H1 FY27?
I'm pretty confident that we'll be able to maintain our EBITDA margins for this year, despite all the pressure that we have. So something like 17.75 to 18.5% EBITDA margins is realistic, and we will maintain that. So while there are headwinds on the raw material side, we do have inventory, but we also have tailwinds on the currency side. So there is a compensating factor to some extent. In general, I stick to the numbers that I've given to you just a few minutes ago.
Right, that number is there, and of course 80% of all the businesses come in exports, so there are offsetting elements as well, as what Nikhil has pointed out. But Nikhil, there's an interesting take for the large generators. Just could you explain us how different it is in terms of the business model, margins, and the investment plans for it? I presume you have given 3 months of time when you will start announcing your investments in this larger segment also. So just make us understand what are the demand trends, how's the margin profile, and when is the investment coming up?
So the larger generator space is less competitive space, but it's a more difficult space to enter into. We have been gradually seeding this market for the past few years, so it's not that we're planning to enter it right now. We have been seeding the market, and I think we're reaching the point when now we see the demand expansion taking place for our products, acceptance is improving, and now we find that we don't have the capacity to make what the market is expecting from us over the next few years. Of course, we have some time. We're looking at demand increasing dramatically from 28 onwards, and we need to now take some certain decisions to be able to meet those requirements. So of course, there is always a risk factor, but we, after discounting the risk, we still need to put some capacity. So we are debating that very intensely in-house, internally with our board and with the management teams, and we'll be taking a decision very soon. But we need to put significant amount of capacity. But this is also good from a point of view of de-risking our existing business. Once you have the larger sizes too, then you have a wide range of products. You're catering to different segments of the market, and if one goes down, then the other one goes up, and you have a balanced portfolio.
Right. Hedging, de-risking, we already discussed that, but just a little bit on the numbers from the current capacity utilization levels and any capex which has been earmarked.
For this year, we have planned 50 crores. And next year, again, we'll plan 50 crores for the existing range of machines, not including what we are planning for the large machines. I have mentioned in the earnings call that with this 50 plus 50 investment, we will have a production capacity somewhere around 3,000 to 3,200 crore, which should be enough for us to go up to FY28. And then we have to, if the demand situation continues like this, then we have to see what's next. But probably we will again look at incremental capacity additions and not look at any big bang approach. I'm generally going to be very conservative on adding capacity. That's my general approach. I'm not going to be gung-ho about just putting in a new plant and things like that. I need to really plan this in a way that makes sense. Let me put it that way.
Nikhil, that's a very interesting point you have taken, and there is a lot of chatter and you could say exuberance in your industry, but a promoter talking in a conservative manner is something which is actually very helpful, and that's what we get in our KYC segment also. But let's look at the future segment. Two interesting words were very interesting to be looked at from your investor presentation. I like the advanced automation and robotics. Is this space a bit different, or is it just your upgradation of your existing facilities, or some more R&D is happening here? We need to understand a little bit more on that.
In general, we took a decision about 5 years ago to automate whatever we can, to install robots in the process wherever we can. And we are doing this year on year. Every year, we're adding something like 3-4 robots or automation into different parts of the processes. Now we have more than 20 different parts of the plant. And every year, we're going to keep doing this incrementally, so that you say now 5 years from now, then we'll have another 20-30 robots in the factory. This is, looking at, costs are going up. Bangalore is no longer cheap to manufacture. You need to look at the future. You need to also, for the volume and scale that we're talking about, we need to have consistent quality. And we also need to keep our manufacturing plants at state-of-the-art level, since we're competing and selling our machines to the best in the world. So it's very, very important for TDPS to be at top of the game. And that's another reason why we are investing heavily in robotics and automation.
Right. So that's a view coming in. It was a very interesting conversation, Nikhil, with you. And you have given us a very interesting blueprint and also conservative despite the industry tailwinds happening. It's always a pleasure to talk with you, Nikhil, and best of luck for the future.
Thank you so much for your time.
Yeah. So that's the management of TD Power Systems. A very bullish commentary, but remember, he has a cautious tone as well. Quite a rare, kind of a promoter persona, to be honest. But for these interesting companies and interesting takeaways from these companies, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury, Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what.
Benchmarks take cues from weak Wall Street handover, high oil prices and uncertain geopolitical backdrop. Nifty hovers near 23,400 level. Sensex declines over 400 points. PSU banks and defense remain the biggest pain points, while IT remains resilient. Rupee hits a fresh record low of close to 96 rupees 32 paise against the dollar. Pressure building fast for the Indian currency, with oil above $110 and rising West Asia tensions hitting the sentiment. Oil is on the boil again. Brent above $111, WTI nearing $108 as tensions with Iran escalate. This after US President Donald Trump sharpens the warning, saying the clock is ticking on a deal to reopen the Strait of Hormuz. Elevated crude prices on rising supply drag Indian oil marketing stocks lower. Vodafone Idea under pressure despite Aditya Birla Group's plans to invest $500 million in Vodafone Idea. Now, the telco said that the board approved the issuance of fully convertible warrants of 4,730 crore rupees on preferential basis to the promoter. Hello and welcome to Markets at 12. I'm Nisha Podar, and yes, it's a weekday of trade today because of the simmering tensions between US and Iran over the weekend, and that's really showing on the markets, with also global cues not being supportive, especially the oil prices rising is bad news coming in for the Indian markets. So not really trending. It's got a resistance at 23,500 levels, and therefore Nifty 50.7% down at the moment. And the bigger drag is really coming in from the banking space, where Nifty Bank is down by 1.3 odd percent, and that is really taking the lead when it comes to the overall market momentum. But if you really take a look at the sectoral plays, there is pressure built all across. It's the broader markets like mid caps which are underperforming the key markets, and on the other hand, IT is the only sector which is in the green and showing some bit of momentum, also because it got dragged down quite a bit. But apart from that, PSU banks, defense, metal, all these sectors are really dragging heavily, and overall momentum is looking weak. When we look at the particular heavyweights which are really impacting the Indian market, of course, the IT sectors, Infi is really adding momentum. Tech Mahindra is there. From the big boys, Bharti Airtel and Reliance Industries are only showing some bit of green, and Bharti Airtel, of course, the biggest contributor. So that's the overall picture of the market, and there is clear sentiment of the global trend and global cues, and rupee also remember is touching its lowest point. So all across weakness when it comes to the cues coming in. Let's take it straight to a management. Muthoot FinCorp is seeing strong momentum. Gold loans really continue to lead, while MSME lending really expands steadily. When we talk about this company, profit has more than tripled, backed by 56% AUM growth and also improving asset quality with digital onboarding now at scale. Management outlook remains firmly positive. Shaji Varghese, who's the CEO of Muthoot FinCorp, joins us for more on this particular show. Shaji, always a pleasure welcoming you on NDTV Profit. My first question to you is, given the current scenario, the kind of restrictions now on gold that has been put in with escalating prices on one hand and higher customs duty, also there's restriction on imports. How is this going to really impact your business and volume?
Yeah, thank you, Nisha, for having me over. Now, this current import increase is nowhere impacting the gold loan business per se, because we are not into import finance at all. Now, we know it's estimated to have around 30,000 tons of jewelry savings in the households in India. So we finance against the household jewelry. So it's nowhere, has any connection on the consumer gold loan financing at all. Now, on the other side, it is estimated that only around 35 to 40% of the gold loan financing is still part of the formal sector with the regulatory entities by RBI. So the opportunity stays there. It continues. There is nowhere impacted in this business.
Right. When we talk about Muthoot FinCorp, you've also announced 4,000 crore rupees of IPO. Can you give us more details on how much of that is going to be OFS and how much will come into the company? What is the timeline that we're looking at?
Yeah, okay. See, look, it is expected to be fully primary. We don't expect any OFS here. Now, we don't have any private equity investor or somebody is looking for a sale as of now. This is fully owned by the Muthoot family. So the proceeds will be used towards the business expansion. As you are also aware, now RBI also has removed the licensing, restrictions which we had in the past. Gold loan companies having more than 1,000 branches in the past needed to have explicit license. That is also removed now. So it is purely for the business growth, and this will also help us to expand our footprint faster than before. So we don't expect any OFS here.
Right. So when you're talking about 4,000 crore rupees, that's a substantial amount of money. What are the proceeds that you are looking at and the growth potential that lies ahead? Why will the investors really invest in this IPO?
Okay, so the gold loan sector actually is, our take is going through a structural, shift. In the past, gold loan used to be looked at as a last resort for the lower income families. Now with more and more, banks and institutions participating, this has now become a very dependable, source of credit, and is also helping the market to expand. Now, recently, regulator also has, enabled a far better environment for gold loan companies to operate, including bringing in harmonization between NBFCs and the banks on the other side. Now also enabled for the liability side as well, including co-lending and DA as well. So the overall environment is far more conducive for growth ever than before. All of us know there is a bit of supply constraint on the unsecured space as well. And on the other side, the formalization is happening rapidly. So we often hear, of the 60 million, almost 6 crore of Indian retail, shops, only around 20% still have access to credit. So gold loan is a good route to, reach credit for them. So we expect the growth momentum to continue for a longer while.
All right, growth momentum to continue. When we talk about the MSME, with the current geopolitical tension, the inflation that is seen on the ground with raw material and transportation prices, how are you seeing the collection efficiency and the momentum in the MSME space?
See, we are yet to see the impact of that on the ground, maybe because it is not fully passed on. In our leading business, which is gold loan, we are yet to see any impact in that direction. So even when we look at our loan to value, which is sub 60%, so we don't expect, even if there is a bit of stress on the way it will impact our portfolio or portfolio performance, we expect the gold loan portfolio to continue to perform. That's our take on this business, because it's all secured with very high LTV cushion.
Right. Your return on asset has substantially increased on a YOY basis. Your consolidated AUM has also risen substantially, as has been the case with the gold loan related sector currently.
Right.
But also wanted to know, Shaji Varghese, what are the challenges that you foresee on the ground in this particular part of business, and also the competitive intensity? How are you going to surmount that?
Okay. On the competition front, what's really happening is now more and more banks and the large NBFCs are also participating in this business. This is actually helping the sector to grow substantially and more importantly for formalization. There was a bit of social taboo in this business that only when there is no other source of credit, many in the past used to avail gold loan. Now with more banks and financial institutions participating, this is now become a well accepted source of credit, which means the sector is growing with competition. And the real competition in the space is not the banks and the NBFCs, but the unorganized sector. So more participation, more competition is actually helping the sector to grow. So we are in a different situation that a lot of other lending businesses. So the competition is good in this space, and on the other side there are a lot of regulatory tailwinds as well as available. So overall, more participation from other institutions, especially banks, are going to help the sector.
Right. So my final question on the IPO, what's the timeline set and how are you going to progress on this one?
See, on Saturday, board has approved, the journey for, IPO. As you know, it has its own procedural requirements and subject to a lot of approvals. Now we will formally engage bankers and lawyers. So while I'm not in a position to precisely confirm on a timeline, but we would like to, having the approval in place, and we would like to move as soon as possible. So I'm not in a position to precisely tell the timeline because some of the approvals are beyond me to commit. But we would like to move fast.
All right, you would like to move fast and capture the momentum that the sector is really giving you. Thank you so much, Shaji Varghese, for joining us on NDTV Profit, and all the best for the IPO as well. Thank you.
Yeah, thank you, Nisha. Thank you.
All right, moving on to the pharma space, and here we are talking about Gland Pharma, robust performance on both domestic as well as global fronts, and Gland Pharma delivered a healthy Q4, and there you go, the stock is up 14.5%. Varsha is here to break it down for us. Varsha, what's really working for the company from the results perspective and future momentum?
Well, strong US traction, which was led by new launches and GPO contract wing. There was a higher contribution from CDMO projects as well. Favorable product mix supported margin expansion for the company, and the operating leverage, of course, worked in favor of the company. Now, onto the geography-wise performance, US was up 24% year-on-year. Revenue, Europe-based business was up 15%, and India was up almost 28%. Talking about the Cenexi business, that's the turnaround or the key highlight when it comes to Gland Pharma. Just do note that Cenexi was acquired by Gland Pharma in 2024, which was up 4% year-on-year in Q4, showing gradual recovery. Improvement was driven by better utilization, new product ramp-up, and of course FY27 revenue growth overall is expected at around 12 to 13%, which has been guided by the management, which will be driven by launches and of course the CDMO ramp-up. Growth is expected to accelerate to 15% in FY28 and 20% in FY29, and margins are expected to sustain at around 25 to 26% at consolidated level, and the base business margin was guided at 33 to 35%. So US business, Cenexi, and good outlook are some of the key reasons why we are seeing that buzz in the stock.
All right, thank you so much, Varsha, for that. But we'll stay with the pharma sector, which is a beaten down sector today. We are focusing on Aarti Drugs. Take a look at that particular counter. It's 2% down in trade today. For a weekly basis, it is down about 5.5%. But if you really take a look at the 1 month chart, it's only in the last 10 days that it has seen a sharp decline. But the stock price had reached 400 levels ahead of the numbers and now has really seen a substantial amount of probable profit booking. Let me welcome on the show Adish Patil, who is the CFO of Aarti Drugs. Adish, always a pleasure to welcome you on NDTV Profit. Of course, on a sequential basis, the company has got strength when it comes to the numbers. On a sequential basis, the revenues are up 20%. EBITDA is sharply up on operating leverage gains. What's really impacting you on a QQ basis, and is this momentum going to be sustainable for the present quarter?
Hi, good afternoon. Thank you for having me. So yes, we feel that the sequential improvement will continue in Q1. In fact, the quarters ahead of us should be good because our greenfield facility at Saika, which we started in quarter of December, in December quarter the utilization was just below 30%. In March quarter it was just above 40%. It could have been a bit higher, but for the war in West Asia, there was few disruptions in that facility. But as of today, in Q1, we are running with a run rate of around 60% utilization for that facility. So better the utilization of that facility, obviously it will reflect on the EBITDA margins of the company as a whole. Second place of improvement we expect would be salicylic acid, which has been a laggard for us in last entire year. We will be coming up with the derivative plant of that salicylic acid by the end of Q1. And plus the regulatory market penetration. So all this put together, we believe that the EBITDA margins trajectory should be better, and it should definitely maintain what it is right now.
So with salicylic acid as well as your new facility coming, adding to the momentum, adding more expansion from 60%. In this particular quarter, can you give us a guidance on which of these 2-3 factors that you have been talking about, they will start operating much better because we are already halfway through this quarter. You have a good picture for the guidance for this quarter.
Yes. So the ramp up of Saika facility, that would be one factor which is almost sure shot. So that will definitely reflect in Q1 to some extent. Penetration into regulated markets, that is an ongoing job. It will happen slowly, but when it picks up, it will pick up pretty fast. But probably it will take around 6, 9, or 12 months because that is a slow process. But it is going on from the USFDA plant.
Right. How much higher, expansion in terms of capacity that you are penciling in for this quarter?
So we are aiming that from the 41% utilization in March quarter, we are expecting to go above 60% in Q1.
All right. So that 20% from the last quarter will really add in. When we talk about the inventory and the price dynamics, can you give us a sense on what will offset what, and if inventory, bought at a lower cost while the prices, because of various inflationary pressures, have also been pushed down, both put together, how is the math really working out for the margin play in this quarter?
Yeah. So when the war started, first thing what happened, the gas-based raw materials, there was acute shortages in the month of March. And that in turn, and some of the companies also invoked force majeure and cancelled earlier contracts with the existing pending orders and revised it to new rates. So because of that, the API prices also went up for which utilize such kind of raw materials. For example, metformin prices went up, few antibiotics also went up. So we were able to completely pass on the increase in the price, at least for the short run. But in the month of March, the only impact was because of the gas-based products and not because of the crude-based products, because the crude was not that high in the month of March, and the availability of the raw materials was also not a problem. But going forward, if the crude prices remain elevated at this level, 110 or more than that, for a very long period of time, then it will create some kind of demand pressure for the antibiotic product portfolio, especially in the domestic market, not for the export market, but for the domestic market. And that is the only challenge what we foresee. Other than that, the things look pretty good as of now.
Right. So the particular antibiotic, portfolio and the pressure points because of gas and crude all put together, that is going to really put pressure. All in all, how do you guide this particular quarter? My last question to you, will it be, considering that the tension in geopolitics really continues, Considering that, how will you end this quarter? Better than the last quarter?
Ideally, it should be better because of higher utilization of the Saika Greenfield facility. The only thing what we need to check is that the demands don't slow down for the next 1.5 months because of elevated API prices. That is the only worry. Apart from that, we feel that it should be at least similar or better than the Q4 of FY26.
All right. So you are expecting to maintain or improve the performance from the given sequential strong quarter that has been really performed. Thank you so much, Adish, and all the best for the present quarter. Thank you.
Thank you so much.
All right, moving on to an important development when it comes to the cotton prices, and they are at elevated levels, and that is putting an impact on the overall sector. And the textile body has also asked for a removal of 11% duty and wants to make the import of cotton more competitive for their survival. Let me welcome on the show Dinesh Nolka, who's the CMD and CEO of Nitin Spinners. Dinesh, good to have you on NDTV Profit. First of all, give me a sense on how much of the pressure point is really coming in on the yarn prices because of the elevated raw cotton prices.
Thank you, Nisha, for having me on the show. At this point of time, what we are seeing is that the cotton prices, which has increased over the last 2.5 months, has been passed on. But looking into the kind of increase which we are having, and then the shortage of the raw cotton which we are having in the country, we are expecting further increase in the cotton prices. So as to have a raw material security, we want that the custom duty is removed and we are able to import freely from all around the world. So that is one of the concerns which we have. As far as at this point of time, it has been passed on, but long term, it will have impact on the downstream sectors as well.
Right. So I also wanted to understand, Dinesh, that the import duty being reduced, how much of that will really help? Also considering that crude oil prices, transportation prices and supply chain constraints are also there. So how much of an impact will it make if the import duty is reduced?
This raw material constitutes a major part of our costs. If you see from the revenue angle, nearly 60% plus of the costs is raw material only, and 11% duty will ensure that we are having the similar kind of competitiveness which other countries are having, like Vietnam, Bangladesh, China, where there is no duty on the raw materials. So that will help us in making it more competitive for us. Of course, logistics and other costs are also important, but given in the overall context, they are minuscule in comparison to the cotton.
So Dinesh, also coming from a listed company, how is the cotton to yarn spread at the current moment? And with the escalation in prices, how is it expected to be, considering if no change in provisions given on raw cotton surety is given by the government?
Raw cotton to yarn spread, depending on the counts which is being manufactured on the basis of average 30s count, is running at about 120 to 125 rupees, which is reasonable looking into all the costs involved and others, and better than what it was in the last year. But we have to also look forward from here, where the minimum support price of raw cotton has been already increased by the government of India. Plus, we are seeing that there is no duty removal and there could be a shortage of raw cotton, which can escalate the raw cotton prices, the yarn prices, and which may not consequently turn into the final yarn prices also.
Right. And also, how is the differential really panning out between the domestic prices and also landed cost of imported cotton?
Landed cost with duty is definitely higher. If we have if the duty is removed, I think then the landed cost of cotton will be more or less same. Landed cost of imported cottons will be slightly less than the Indian cotton at the moment.
Right. And also, Nitin, Spinners, is right now looking at this particular push from the textile body as well. Dinesh, give me two important sense before I let you go. First, of course, the cause for escalation, and do you see the domestic prices reducing at some point because of any measures? And the second is also how much is our availability in terms of our own production versus the deficit that is there in terms of the demand in the market?
Let me first answer your second question, which is the deficit. Definitely, there is a deficit of cotton available in India. Our cotton crop is only about 290 lakh bales, whereas the demand is about 320 to 330 lakh bales. So plus we are also looking forward for a growth in the textile industry as being perceived by the textile ministry as well as the government of India. So we will be definitely short of raw material. And this shortage of raw material could actually cause the increase in the prices in India. If we have import duty removal, then we will have a parity with the international markets, and this could actually lead to a balancing act. Anyway, today the farmers are very well protected because of the minimum support price. The cotton prices are already running much above the minimum support price of this year. So there is no issues from that side. So we are looking forward that this measure by the government of India will actually help the textile industry to balance between the domestic and exports. Anyway, the downstream industry like fabrics and others are not able to directly import the raw cotton under advanced license. So they may have further cost escalations if this is not done.
All right, strong case made for this dispensation to come. And has the government given you a positive support on this one? Is that likely to happen, yes or no?
The textile ministry is very positive about this. They want the raw material parity to be there, but it depends on the finance ministry and the agriculture ministry, of course.
All right. Thank you so much, Dinesh, for joining in and, breaking down this important issue for us. Thank you so much for joining in. And with that, completely out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो बंटवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury, Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey standing at the NDTV Profit market bit with all the action. Sharad, I mean, the way markets have opened up, we have come somewhere given up those gains. However, there was that very mild recovery from the day's lowest levels. But clearly that downtick does continue and the mood is not very positive.
Exactly, you're right. Good afternoon, Hiral, and you're right. Rupee touched its fresh record low levels also today. That's also dampening the sentiment. Of course, nothing positive coming in from the weekend. There's a big gap down opening. Asian markets are also in the red. But the market is trying to make a recovery. But will it sustain or not? That's the big question. And the same story repeats for Nifty Bank as well. Let's just pull out the Nifty Bank's chart. And I had mentioned earlier also that the Nifty Bank's technicals is much weaker than Nifty also. That's why the recovery is not that strong when it comes to Nifty Bank. But what are the factors you should be considering today for the first week of the trade? The first and foremost, that both of them still remain volatile. And is there a recovery inside? That's the big question to be asked. But of course, we'll be watching out for the technical levels. Let's look at the other key factors which should be very important in the trade itself. These are the important support range. That's where the bounce has come in, 23,200 to 23,300. And for Nifty Bank also, let's see what the support lies. That's around 52,400 to almost 52,800. Apart from this, also let's look at where the action is coming in. IT, that's the only pack which is doing well. Of course, it was it was sold last week. So short covering some positions are there and some fresh long build-ups, especially in the mid-cap. Rupee again hits its fresh record low levels, and that's where the concern is coming in going ahead as well. But apart from that, the global yields are rising. So are the Indian bond yields also, the highest levels we have seen since the last 2 years. The risk of sentiment continues in the market. And that's why there is still a pressure and the negative sentiment. Oil is rising on the stalled US-Iran talks. No major developments are happening. The war fatigue is also going up. And the earnings, we are at the fag end of the earnings now. We have IOC, IGL and Astral. All of them reporting the Q4 earnings. So we'll be tracking them as well. But overall, right now, Hiral, the sentiment is still negative.
Absolutely. The sentiment is negative, but you've seen that recovery from the day's lowest levels that's happened in terms of markets. Where we end is the key. It is earnings heavy week once again. You have Skipper, which has reported numbers. Let's pull up that one on the screens and see what the counter is doing in trade, because overall, if you see in terms of the numbers, it's a very interesting set that has been delivered so far. And if I have to just take the viewers through in terms of what they have reported, it is a strong number in terms of record numbers in certain aspects. Let me just pull up that one on the screens. If you can just give me the graphics for the numbers there. Revenues up 30%, EBITDA margins have expanded as well, and the profits have gone up 62%. So that's what we're staring at. Let's get in. Sharan Bansal, director at Skipper, who joins in. Sharan, good afternoon and welcome to the show. This is Hiral on this side, and it's always a pleasure to speak to you. My question to you is, a record performance is what we've seen in terms of fourth quarter for FY26, where your quarterly revenues have hit an all-time high. Your profits have surged nearly, 70%. From here on, what is the focus going to be? Because a lot of conversations are telling us that modernization and top-line revenue growth to 15% for FY27 is what you're seeing. And that becomes balanced against an aggressive 30% bottom-line profit growth target. How are you reading into this?
Hi, Hiral. Yes, we have delivered a very good set of numbers last year. With overall 20% growth in bottom line and a 40% plus growth in 20% growth in top line and 40% plus growth in bottom line. For this year, we have guided for a healthy 15% growth in top line and a 30% growth in bottom line. This is primarily on account of lower than expected order inflows last year. The industry saw muted ordering from the central ministry, but overall we still managed to get about 5,600 crore order inflow last year, which was not bad, but slightly lower than our own expectation. However, that is still strong enough to, and we ended up with a closing order book of 8,500 crores as of March 26. That gives us good revenue visibility over the next 18 to 24 months. So that's why a 15% top line growth this year is very comfortable. The bottom line growth is more aggressive because we have been able to increase margins last year also. We hope to do that this year as well, and also bring down finance cost at the same time. Going forward this year, certainly our order inflow targets are much higher, as because we see the bidding pipeline has increased substantially compared to last year. So certainly I think going forward the next year again, we can target the 20% plus revenue growth from next year onwards.
Absolutely. I know we are talking about the new order that has come in, but the reason I wanted to ask you this question is to put things into perspective in terms of what's actually transpired in FY26 and how you're looking at FY27 with one of the orders that has come in. And we're talking about what, 1,265 odd crores for T&D projects. Now help us understand, when you're talking about inflow like this right now, what is the kind of timelines that you're looking at in terms of revenue recognition?
Yes, new order of 1265 crores is a combination of domestic orders where we've secured 765 kV double circuit projects in the Pune to Loikan and Pune to Karjan area, and also some export orders in our LATAM markets. The revenue recognition of these orders would be between 2 to 3 years, and of course we have a bidding pipeline of also 33,000 crores plus, out of which we expect a significant portion of those to get converted during the year.
Right, Sharan, this is Sharad here. Of course, speaking on the domestic order front also, especially in the Eastern India, where we are seeing a lot of infra projects actually getting live back. How do you see this outlook going ahead?
Hi Sharad. We are certainly quite bullish on the Eastern India opportunity now, as you rightly mentioned, that we should see a good revival of infra projects now in Eastern India with change of government here in Bengal. That should certainly bode well for power transmission projects as well. So we are excited about those, but probably those will come into the bidding pipeline in the following year. As of now, the bidding pipeline mostly consists of projects in Western India and Southern India, which is healthy, as I mentioned. And again, we're quite hopeful of a good order inflow this year.
Okay. Sharan, in terms of the order inflow as well, you do have exposure when it comes to Middle East as well. Now, with the West Asia crisis, not only you, but sectors, I would say, across are bleeding to some extent in terms of impact. If you have to look at the order book right now, what percentage of your order book is in terms of exports and specifically regions which are under trouble? And how are you trying to navigate through that?
Yes, good question, Hiral. Overall, exports have not been very good for us last year. Our export as a percentage of our order book is just about 10%. So we and Middle East is about 30-35% of that export book. So you can say overall in our order book, maybe Middle East counts about 4%. So it's not a very big number for us. But yes, it's an important market. We certainly are looking forward to some resolution coming and the order inflows to start from that geography again. However, having said that, we are present in a number of other markets this quarter also. Among the recent orders, we also got a decent order from LATAM. We are quite hopeful of securing more orders from the African market. And of course, North America and Australia continue to be a focus market for us in terms of developed geographies, where also very interesting project opportunities are there. So the effort of broad basing our exports will continue on. And again, we are not dependent on the Middle East market per se.
So, small portion, but which is growing as well. So it is going to be important for investors as well. Thank you so much for joining in, Sharan. Always a pleasure to speak to you. But moving on, let's quickly take a look at what's on our watch list. Gland Pharma. Good Q4, strong US traction, strong moves coming in on that counter. Shipping companies, GE Shipping and SCI are in focus as well. You have a Cochin Shipyard which has reported a mixed set of numbers. Hind Copper again reacting to numbers, as well as they've executed an NDA with Codelco. Amber Enterprises, their FY27 guidance is below expectations, and they're expecting a dent in terms of their margins are concerned, and that's the reason why the stock is taking a beating. KEC International reacting to numbers along with the Alembic Pharma. ICICI Prudential, where Prudential will be cutting their stake to under 10% on the back of the other deal that is happening. AFCON is also under pressure because tenders worth 4,500 crores have got cancelled. You have Delivery, Power Grid, Tata Steel. All of these are actually reacting to Q4 numbers as we speak. So that's with regards to our watch list. But Sharad, over to you. In terms of the rapid fire.
Well, yes, we are joined in by Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you. We'll start our rapid fire. Now, of course, Shipping Corporation and GE Shipping make it to my list. There are a lot of volatility in the global markets. Is there any chance of good further up move in these counters, or do you think they will still stay in that consolidation range?
Very good afternoon to you, Sharad. Well, absolutely a very strong run-up that we have seen in both the counters. So structures still look strong. As far as SCI is concerned, Shipping Corporation of India, I think it is likely to move towards 365 to 370 in the near term, keeping a stop loss below 325. Buy and decline should be the strategy. And similarly, GE Shipping, we have already seen a spurt of over 10%, so not advisable to change the momentum at current level because the risk and reward is not looking favorable. Better strategy would be to wait for some meaningful decline, then probably it can be added for a short-term play towards 1720 to 1750.
Right, not going a bit farther from ships, I'm just talking about a shipyard company, and that is Cochin Shipyard. Your views on it? Any alpha can be made here? Of course, we are seeing some, numbers impact also coming in. But anything on the charts which is looking attractive here?
Well, Cochin Shipyard, in fact, has been under pressure since a long time. So not advisable to take any contraband because the structure still appears on a negative side from a short-term perspective. It is trading below its 200-day moving average as well. So as long as it trades below 1600, the structure appears on a weaker side for 1450 to 1400 on the lower side. So avoid taking any contraband at current level.
Right, and any trade being made for Hind Copper?
Well, see, we have seen a sharp correction in the copper prices, but the numbers were good in Hindustan Copper. So comparatively, the structure is looking better, and if at all you get any dip towards 570, that can be used as a buying opportunity. Keeping a stop loss below 540, we can expect a gradual uptick towards 590 to 600 once again in this particular counter.
Right, and your views on Alembic Pharma? We have seen a little bit of defensive buying sometime in the small cap pharma names, but especially for Alembic Pharma, any views here?
Well, as far as pharma is concerned, you have better options available. Alembic Pharma at current level is not looking that promising. We have seen some bit of short-term structure disruption. So we may see a follow-up on the lower side to continue towards 700 to 690. So as of now, it's an avoid. But yes, you have better options like Biocon, DVs, granules within the pharma pack that can be looked at. But APL is an avoid.
Infra, further fall you can expect. The stock is down after the cancellation of order announcement was come in, and of course the company came out with its exchange filing, and they said that overall their railway orders is still there. But do you think any further fall is there in this counter, and if yes, stop losses?
Well, quite possible that we may see follow-up on the lower side to continue. If at all it breaks 307, so that's the immediate support of 50 EMA. If that is taken off on the lower side, then the target on the lower side could extend towards 280, 260. So 280 to 260 can be seen if it breaks below 307. And on the upside, if it takes out 325, then there could be possibility of some bit of a pullback move.
Right, and a weaker set of numbers from Power Grid. Do you think a little bit more fall is there, or it's going to come back to this consolidation phase?
Good part is that it is still trading above its 200 and 100-day moving average. So quite possible that we may see stock taking support somewhere around 285. And some bit of consolidation is something that we can expect. I'm not expecting any V-shape kind of recovery. But yes, in the range of 285 to 300, that's the short-term trading range we can expect counter to oscillate. But the broader structure looks sideways.
And how the positional setup looks like for KEC International?
KEC positionally, the structure is looking extremely weak, kind of a sell-on-right structure. We have seen a continuation of a lower top and lower bottom formation as well. So looks like it is heading towards 470 to 450 on the lower side, and avoid taking any contraband because the short-term structure looks weak.
Well, of course, that's the end of the rapid fire segment, but Hiral has a list of Google trending stocks. What is the Hiral?
Let's quickly pull up what's trending. I'm sure it's a lot more than we are anticipating today, because the kind of markets that we are in, Amber Enterprises, Keynes Technologies, both of them, because Keynes was beaten down last week and Amber, which has joined the list. Godfrey Phillips on the back of numbers, Delivery also on the back of numbers, and you have a Bharat Forge, which is in focus. Anything that you like on the charts from these counters?
Hiral, in fact, whatever list that you have just mentioned, all the stocks are looking on a negative side. First of all, EMS space, Keynes, Amber, both the counters have a weak setup. And if you see Delivery, where we have seen a big crack today, so that particular counter is also looking weak on the chart. Quite possible that Bharat Forge may find some support near about 1830, 1820 zone, but still there is some more room left on the lower side. But yes, if it falls in the range of 1820 to 1800, that can be a good entry point, because we have already seen a very good run up. This looks like merely a profit taking or retracement. So Bharat Forge could be one particular counter that can be looked at on declines. But apart from that, all the other stocks are looking on a weaker side.
Okay. Bharat Forge, that's the only one. The others are all, yes, in a weak setup today. Thank you so much for joining in. Always a pleasure, Nilesh, to speak to you as well. But moving on, the government has actually capped compressor imports targeting the mass sub 2-ton segment that drives over 85% of the demand. Earlier today, we spoke to Blue Star's MD on this development. Let's listen into what he had to say.
Primary sales is somewhat slower than what was anticipated, because the dealers had inventory, and I had told you that they bought it in anticipation of energy label change. Subsequently, fearing huge price increase, they stocked themselves up. With the secondary movement very good, the primary sales have begun. I would say not to the expectation of the industry or Blue Star for that matter, and I would still think that it is not very bad, but it is not easy walk at all. The important factor being our ability to pass on the next level of price increase. As you're aware, 13% price hike is supposed to be affected. In fact, some 5 to 8% has happened. The balance 5 will have to happen. And furthermore, cost increase is happening due to exchange rate as well as components which are based on petroleum derivatives like plastics, etc. Therefore, it is not an easy summer. The volumes will happen, the margins will be under pressure, and it will be definitely better than last year. But I don't think we are yet celebrating anything at all.
Okay, so price hikes, but affordability becomes a concern as well. But moving on, Tata Steel's Q4 results, wherein the company saw a better quarter because steel prices have improved, sales have been strong in the domestic market, and the overseas business performance has been better than before. Jasmeet is here with us to take us through the factors impacting the quarter and the management commentary, because the stock has been under pressure today. Jasmeet, what are you picking up?
Well, Hiral, thank you for that. As rightly said, the company has witnessed a really good quarter, and even the brokerages have hiked the target price for this particular counter. Let's quickly understand what has happened in this particular quarter. Well, company did post its best ever quarterly result as per the Q4 when you look at the Indian business altogether. Further, we also note that the company also sees a higher steel realization in this quarter, further improved spread, which impacted the profit and also boosted it altogether. Now, if you look at the international business of the company, the overall UK losses have narrowed, while the Netherlands business has turned EBITDA positive, which is again a key positive for the company. Well, lastly, if you look at the net debt position of the company, which has declined quarter after quarter, and it's at low levels currently, and the free cash flow also generation remains strong for the counter. Now, when you look at the key brokerages, we have something like Goldman Sachs and Tata Steel. They maintain a neutral stance on this particular counter, while they also hike the target price to rupees 218 from earlier 210. While they say the margins were a miss as per their estimates, but apart from that, the realization uptick across regions was a key positive for the company. While the second one is Morgan Stanley and Tata Steel. Well, they maintain overweight on this particular counter with target price of 215. Now, what they say is they see a good result while good outlook. Further, they also say the company posted a strong result across both domestic and overseas business, which remains a key thing to watch out going ahead. Well, lastly, I have Citi on Tata Steel. Well, this brokerage remains a bit bearish. They maintain sell, but they have said I hiked the target price to rupees 200 from earlier rupees 180. While they said the overall realization on QOQ basis was strong, but in the Q1 is something to watch out for. How does the realization shift for the company, which is a key concern.
Okay, so that's with regards to where Tata Steel goes, with regards to what brokerages are making out of it. Nilesh, what are charts indicating for Tata Steel and in fact even the other steel companies?
Well, Hiral, we have already seen a very strong run-up across all metal counters. So this looks like merely a profit taking in the bull run, and quite possible that we may see some consolidation before we see another leg on the upside. But yes, having said that, the broader structure continues to remain bullish. We are still very much constructive on metal index as a whole. So we expect Nifty Metal Index to move towards 13,500 to 13,800 in the near term. So today could be a good day to make a fresh entry, keeping a stop loss below 200. Tata Steel can be added on declines for a potential target of 220 to 225.
Right. Interesting company, ICICI Pru Life. Let's get that on the screen as well. The stock is taking a pressure, and of course the news flow is that Prudential PLC, the UK insurance company, will be acquiring 75% stake in your Bharti AXA. But why this is important is because already you could say Prudent is having 22% stake in ICICI Pru Life, and as per the IRDA norms, they have to get their stake below that 10% mark. So because of that, it's sentimentally negative, and the stock is taking a beating. Nilesh, a further downside in this stock, or do you think it's a good time to nibble in?
Sharad, interestingly, today the counter has taken a very good support at 488. And we have seen a similar kind of low that was made in the month of April this year. That was somewhere around 490. So a kind of a double bottom pattern looks like shaping up. And if it breaks below 488, then only we can expect a further downtick to continue. But as of now, looks like a relief rally is something that we can expect towards 520 to 530 on immediate basis. But the broader structure, however, is not looking promising. Even though if we see any pullback, that might get sold into, because it has major resistance at 560. So it is important that it should take out 560 level. Then probably we can expect a short-term bottom. But yes, from current level, we can expect a relief rally.
Okay, so that's with regards to where ICICI Pru goes. But moving on, Amber Enterprises, that came in as a surprise with the way earnings had panned out. The stock is now down nearly 14 to 15%. Now, the EBITDA actually beat, street estimates, but that was mainly driven by the consumer durable segment. The electronics division performance was weaker than expected. However, if you talk about FY27, that's what the street is not really happy about, because the guidance has been lower than everyone was estimating. Electronics, Sidwal FY27 growth has been seen at 30 to 40%. The key drags have been, one, your FY27 guidance. Second, the margins are expected to be softer in FY27, and that is what the management has indicated in the conference call. And that's the reason why you're seeing that downtick. In addition to that, if you talk about the stock, if you pull up the intraday or even a 1 month or a 2 month chart, it's actually run up 11% ahead of earnings. So that's the reason why negative news has led to this kind of a reaction in terms of the stock price. And if you're talking about higher valuations as compared to peers, that has been another concern that the street has been looking at. So all of these factors have not really worked in favor of Amber Enterprises, and likewise, you've seen what happened to Keynes Technologies last week as well. You pull up a PG Electroplast, you pull up Sirma, because Sirma numbers were pretty decent at the face of it. So all of these companies, along with the Dixon, have been in focus in the last couple of trading days. In fact, let's also listen into what the management had to say.
Whereas other contracts like defense contracts or telecom contracts or the data center air conditioning contracts, which are now getting signed, those are the contracts which have gotten pass on through. And that's the reason why we gave a just update to everybody that this is temporary, of course. You would have seen in last 7 years we have been able to pass on. And we will continue to pass on, but since it is momentary, but we thought that we should be, it's our duty to inform everybody that next 1 or 2 quarters should be, you should see this hit coming in.
So that's with regards to where Amber Enterprises goes. Nilesh, how are you looking at the EMS place? Because there is a major downtick that's coming across the spectrum. Are you seeing any strength that could be building up from here on with the kind of corrections that we are seeing? If you talk about Amber, you talk about Keynes, PG Electroplast, Dixon, Sirma, anything that you like, or any sell calls there?
Hiral, first of all, within this space, we have already seen a very good, in fact, outperformance in Amber Enterprise. But if we see today's action, we have seen a crack post numbers. And with that correction, the counter has broken below is 200 as well as the 50-day moving average. So the overall broader structure across all EMS counters, be it Amber, Dixon, Keynes, or Sigma. So overall, the setup looks sideways to negative. So no contra bet to be taken at current level till the time we see any sort of a reversal signal on the chart. But overall, we expect some consolidation to continue. The weakest counter looks like Keynes and Dixon. Both the stocks are still looking weak. One can go short if at all you get any pullback. So sell on right structure in Keynes and Dixon. But on the other hand, Amber is still looking better place. And as long as it holds above 7,000, there could be possibility that we may see a pullback move towards 7,500 to 7,700.
Right. Apart from that, let's talk about delivery also. Largely, the numbers looked decent, but if you get to the details about it, there are a lot of adjustments there, and Street is not liking that, and that's why the sell-off is happening in this counter also. Nilesh, your final views, a quick view on this counter. Do you see this to, fall more here, or it's a good time to lap up?
Sharad, if you see in last 1 year, counter has faced multiple resistances at 490 level. So 490 is acting as a steady wall. And a good part is that even after today's correction, the counter is still trading above is 200, 100 and 50-day moving average, which are placed in the range of 440 to 430. So as long as it manages to sustain above those levels, there could be possibility of some bit of rebound going forward. And if it breaks below the same, then only we can expect a follow-up on the lower side to continue. But at current level, if somebody is already holding the long position, can keep a stop loss at 440 and stay put for a pullback move towards 460 to 470.
Thanks a lot, Nilesh, for that, joining us and giving your important views on it. But folks, we are out of time right now. And from me, Hiral, and the entire team which has put together trending stocks, it's a buy. Keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards, honoring excellence coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come.
Benchmarks take cues from weak Wall Street handover, high oil prices and uncertain geopolitical backdrop. Nifty hovers close to 23,600. PSU banks and defense remain the biggest pain points, while IT remains resilient. Meanwhile, oil is on the boil yet again. Brent above $111 a barrel, WTI close to $108 a barrel, as well as tensions with Iran escalate. This after US President Trump sharpens the warning, saying the clock is ticking on a deal to reopen the Strait of Hormuz. Elevated crude prices on rising supply drag Indian oil marketing company stocks as well lower. Voda Idea under pressure despite Aditya Birla Group's plans to invest $500 million in Vodafone Idea. The telco said that the board approved issuance of fully convertible warrants of 4,730 crore rupees on preferential basis. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. In fact, Nifty is very close to today's highs as well. You've seen a sharp recovery coming in the market right now. And when you talk about Sensex, that's also, back in the green right now with that 50-point uptick also coming in. So that's Sensex for you right now. But when you talk about the entire sectoral picture, that's still very sharply tilted in the favor of red. So when you talk about PSU banks, those are your top sectoral losers in terms of the sectors: defense, auto, realty, energy, metal, all of these, including oil and gas, on the back foot, with OMCs also under pressure on the back of elevated crude prices, with Brent hovering close to $111 a barrel. When you talk about Nifty IT as well as pharma, those are the only two sectors holding on to some bit of resilience, especially IT, with that 2.5% also uptick coming in for the index. Now, when you talk about the entire Nifty 50 complex, when you talk about the entire losers from outside the Nifty 50 complex as well, you're looking at something like an Amber Enterprises, KC International. But when you talk about the Nifty 50 complex as well, Power Grid, Tata Steel, SBI, Trent, and Eternal, those are some of the counters that are on the back foot. Now, what's doing well for itself is something like a Tech Mahindra, Bharti Airtel as well. Now, in terms of the market cap as well, it's won the race versus HDFC Bank's second most valued company. That's Bharti Airtel for you, with that 2.5% uptick also right now. And Infosys, JSW Steel, Wipro, HCL Tech, also some of these other counters that are in focus right now. But with that in mind, let's also get you a very important update and talk about the entire silver complex as well. Talk about silver prices, but also the news and developments on that front, because within days of levying high customs duties on precious metals, the government imposed import curbs on silver. Rishabh Bhatnagar standing by with some more details before we get you some more insights.
Absolutely. You have yet another step that has been taken by the government in order to tighten the import of precious metals. And this is, of course, with the forex concerns that have been raised with respect to the war, of course, being the context of all of this. You have the import of high purity silver bars that has gone from free to restricted now. This essentially means that importers will have to require licenses and approvals to bring in these specified silver products into the country. And what essentially this is that this move covers roughly more than 90% of the silver that actually ends up entering India. So this is a massive move in that sense, and a lot of the free movement of the silver metal will now be restricted. What we're also seeing is, of course, that this is a part of this is the next step after the import duty was hiked from 6 to 15%. You already had a 9% duty sort of arbitrage that the importers already have to pay. But on top of that, there are additional licenses and approvals that are required now. What we're picking up is that there was a similar move for gold imports as well. Gold imports were brought in by DGF to sort of more tightened monitoring to check whether anything that's entering is also being adequately used. So that's what we're seeing when it comes to silver as well. Remember, India imports 80% of its silver requirement. Key supplies obviously coming from the UAE, UK, as well as China. So these will be the impacted geographies when it comes to imports. So that's what we're picking up on the latest move by the government when it comes to curbing the imports of precious metals and also the related forex concerns.
No, absolutely, and thank you so much, Rishabh, for putting all of this into perspective. As promised, let's also listen into a slice of the conversation that I earlier had with Kishore Nane, head commodity and currency at Motilal Oswal Financial Services, where he talks about all of this, the impact of all of the curbs, the couple of curbs coming in when it comes to silver, the demand picture, as well as the alternatives, and how do they stack up. What do you think about the latest two curbs that have come in? Number one is the import curbs that you have, and the movement of free to restricted category import status. That's also something that is definitely making it to investors' radar. How are you reading into two of these changes?
Good morning, and thank you for having me. I think the first thing is when the government changed the duty structure because of a significant outflow of forex from the precious metal sector. I think, silver demand surged significantly last year as both gold and silver due to the safe haven demand and overall kind of an investment drive which went through. So typically when India imports around 4,500 tons and around $4.5 to $5 billion of worth of silver. So the year which we closed in March, our imports were close to around $12.8 billion, which is around 150% higher than average. So naturally, their government was worried about the forex, and so the duty has been increased. So which created an arbitrage opportunity. So there is a significant duty difference of around 15%, 16%, which generally drives significant arbitrage for people who are actually doing imports through SEPA route, through IIBX, etc. I think to curb that, actually, government went on to put restrictions, which actually give them a direct control on the quantity of the silver imported at any point of time. And definitely they want to allow the legitimate imports for the industry purposes, who could be the legitimate users. They can go through the banking route through an approval process. So that they would be addressing. There'll be a little bit of paperwork, but I think that still is not closed, but routed through the government agencies.
No, absolutely. And just to give the viewers a little bit of context into what Mr. Nane was also talking about, when you talk about the month of April itself, you're talking about silver imports jumping about 157% on a year-on-year basis. So that's definitely something that this particular curve is going to be acting against. But, what's consequently also going to be happening, Mr. Nane, is that the demand might stand to get impacted. How are you really penciling in that impact as well?
See, demand is two segments. So one is the industrial demand and the investment demand. So, silver is not particularly fancy with the jewelry segment, but it's basically an investment kind of demand. So that's a smaller sector. So around 68% of silver is into industrial consumption. Either it is photovoltaic cells or EVs or renewables, and some of these green energy sectors consume a lot of silver. Some of consumer durables consume a lot of silver, and the electronic sector. I think these are the three primary sectors where silver is consumed. And our production is much lower, and we rely on imports for around 78 to 82% of our consumption. So definitely the industry needs them, and the government wants to address that, segregate these two demands. They want to discourage the investment and speculative element of the demand, but at the same time keep the legitimate industrial usage in the check. And probably when the duty is misaligned, especially when we have around 15% duty difference between the global price and Indian price, there is a lot of illegitimate sources also could be coming into play. So probably government wants to also monitor that. So at the same time, continue to be having a little of pressure on the investment demand. So that's where this thing again, compared to gold, silver is much smaller as far as investment is concerned on the quantity or even the value front also.
No, absolutely. And, just taking a leaf of what you just said as well, when you talk about the industrial applications, do you think that this is going to be causing a seismic shift in the way that, companies really approach industrial applications of silver? Because it's got applications across sectors. You're talking about solar, you're talking about batteries, EVs, water purifiers, and a whole host of these, right? So given that the prices are also really rising now, and you do have that entire import curve picture also being coupled with that, do you think that there's going to be a seismic shift in terms of the way that we look at all of this?
I don't think there will be a large shift because what we call is thrifting demand, especially the demand which we lose for the price. So if you go to solar, the photovoltaic cells, typically the amount of silver used in a typical solar plate has come down from around 40 grams, 45 grams to around 25 grams now. So typically what they do is the application layer of silver, the quantity of the silver apply is being reduced with an improved technology, with improved application techniques, etc. But actually you cannot replace silver with something else in these uses. Coming to EVs and some of these electronics, silver brings unique qualities to the product. Actually, the amount of electric resistance silver has, the remaining metals will not be able to do. In some of the large applications, in few places like mirrors, etc., the aluminum can replace, but silver is not really replaceable. But the amount of quantity of silver used, especially in, as you said, consumer electronics, etc., could be reduced. But I think most of these applications have been done in the last 3-4 years, where the silver prices went up actually, and companies improved their ability to reduce the demand usage of silver. And I think more or less that is now done, and you will not be able to replace a significant amount of silver. Maybe around 10-15% of low value applications can go away from the usage.
Yes. No, absolutely. And just very quickly before we let you go, just wanted to get a quick check in terms of where you see prices headed. Are there any levels that you're watching out for, or any trajectory that you're really mapping out here?
I think, as far as price is concerned, in our Indian markets, actually, we have not seen any impact because India doesn't decide prices of silver and gold both. So we are typically price receivers. Globally, it will have a slightly negative impact because India is such a large country to import both gold and silver. So the approach of the government actually sends a negative signals, and also to some extent this lower investment demand actually brings down the whole demand. So short term, again, there is no impact of this current news on the prices, but I think overall the prices will be in range bound territory for the next couple of months. The biggest factor which will influence whether the precious metals price will go up or not is going to be the interest rates. The new Fed chairman is taking over. How fast he'll be able to address this. Second is, if the inflation is going to be sticky and longer it's going to play, probably the rate cuts might not be expected very soon. So that actually is a much more negative for precious metals than this.
All right, then there you go. So that's a word coming in there in terms of range-bound price levels that you should be expecting when it comes to silver prices. Of course, there's no impact coming in from this particular import curve, but that's not much of an impact, at least that's been penciled in right now. But let's also move on and talk about oil prices. Oil is climbing yet again. You're looking at Brent above $111 a barrel, as you can very clearly see on your screens as well. So extending last week's surge really as tensions with Iran stay elevated. Even now, the war premium seems to have re-entered the barrel. And when you talk about Trump, he's turned up the pressure. warning Tehran that the clock is ticking on a deal to reopen the Strait of Hormuz. So you do have oil that is surging right now, but with that in mind, let's also move on and talk to you about Solex Energy. Now, that particular counter is in focus on the back of a decent set of numbers. You're looking at a sharp revenue uptake. And let's connect with the management to talk a little more about the earnings fine print and the growth roadmap going forward as well. Chetan Shah, Chairman and Managing Director, Solex Energy, is joining us on the show right now. Mr. Shah, very good afternoon to you, and thank you so much for taking time out and joining us. First things first, I wanted to try and understand what you think about the key levers for this sort of sharp revenue growth that you've seen this quarter.
Good evening and good afternoon. So basically, this year we had, expansion in our production capacity across all the manufacturing lines. That was one of our key levers. So with expanded capacity, we have been able to produce more, and which resulted into the revenue. We are focused on a faster ramp up and stabilization of newly commissioned production facilities to improve operational efficiency and output. That was one of the factors. Strong execution of our existing order books. So that was one of our key in very challenging period, we have been able to execute all our major orders in this financial year. The total revenue from for FY26 stood at 1621, that is 1,621 crore, registered a robust year-on-year growth of 144%. So looking ahead, we projected revenue of approximately 2,600 crores for FY27, supported by the capacity expansion, increased market share, and the maximum utilization of capacity. So basically, if I have to answer in one line for the revenue growth, is the utilization of our expanded capacity at the very highest level.
Right. Mr. Shah, this is Varsha, this side, pleasure to have you. Sir, the last time we spoke, we were expecting around 1,700 to 1,800 crores of revenue in FY26, though it came around 1,618. Now, according to your investor presentation, you're targeting 4x revenue growth in FY27. Just wanted to understand what gives you a confidence of achieving the 4x growth when it comes to 27. And second question will be, of course, margins. Will you maintain net margins at around 6 to 8%?
Yeah, so basically for FY27, our target is 2,600 crores, which currently we did previous year we did at 1,621 crores. So basically, current geopolitical situation, we are just being very conservative on a conservative side, and we are cautious in terms of giving our internal targets are very high. But for the sake of considering the geopolitical situation and all the safety clause concern, we are targeting 2,600 crores. But yes, we will be able to maintain our margins from 6 to 8%. This is what we have projected last year also. So we have given 6+% PAT, and next year also we'll be in between 6 to 8%.
No, absolutely. And I also wanted to get a sense of what you think about your order book as well going forward. You seem to have great visibility there. Talk to us about that as well. Give us some more color.
So we are majorly operating into the IPP, independent power producer segment. And so we do have a clarity on our production and the execution of orders for quarter on quarter. So the quarter 3 and quarter 4 for FY27 will be very high. Quarter 1 and quarter 2, as usual, it's a monsoon season, so it will be on the lower side. So we are very conservative on Q1, Q2, but Q3, Q4 will be very encouraging. And we do have a clear visibility for the order book and execution. And this will be 3,600 crore orders which we do have it. So out of which in this financial year, we will execute order almost about to the tune of 2,500 crores.
Right. And this sounds promising, but when does this starts actually contributing to your revenue? And what proportion of revenue are you expecting in a percentage term when it comes to BESS?
So if you are basically, when it comes to the previous year performance, you have seen that we have done 800 plus crore revenue in last quarter only, Q4 only. So it was because of the extended monsoon that we had last year. This year also we are keeping those provisions, but like Q3, Q4 will be the major contributor to our revenue of about a target of 2,600 crores.
Absolutely, and thank you so much for taking time out and joining us this afternoon. So there you go, that's the entire roadmap as well going forward when it comes to Solex Energy. Now, they did have a very good quarter, and going forward as well with their Vision 2030, it does look good for them with the stock as well, 5.5% uptick there when you talk about this particular counter. But let's also talk about the word coming in from the SEBI that is stepping up its guard as AI tools really evolve and new risks emerge for market systems. In fact, the chairman's also talked about the primary concern that is not AI per se, but the cybersecurity vulnerabilities that it could expose, warning that any breach in market systems could pose a serious threat when it comes to market integrity. Let's go across and listen in to the word coming in from the chairman, Tuhin Kanta Pandey.
No, the AI tools which are there mostly recently have come, that is in relation to the cyber security. So if the markets have, as you know, everyone has a software, and if there are certain cyber security is threatened, that means if vulnerabilities is found in the software very, very quickly, then, there is a problem that we will be attacked, and those attacks may be successful, then that is bringing risk to the market integrity. So proactively we have to see that whatever the softwares we are deploying, even through third-party vendors, they are protected. There is an aggressive patch management, aggressive use of conventional tools to find that if there are any vulnerabilities that exist, they should be immediately patched up.
All right, then there you go. So that's the word coming in as far as the AI threat is concerned. But let's also talk about a major move after the government approved 100% FDI in insurance sector. British insurance giant Prudential PLC is going to be acquiring 75% stake in Bharti Enterprises for 3,500 crore rupees. And you're looking, is this a precursor to growing interest of global players in Indian market? Now, will this really impact ICICI Pru as well? Manas Agarwal, research analyst, vice president, Sanford C. Bernstein, joining us on the show right now. Thank you so much, Mr. Agarwal, for taking time out and joining us this afternoon. First things first, I wanted to try and understand what you think about all of the changes that we're seeing coming in this particular space and this particular deal as a whole.
First up, thank you for having me. On your particular question, I think Prudential has been in India with ICICI Bank in the ICICI Pru Life entity. They've faced struggles in terms of growth and value creation because ICICI Bank has, for various reasons, reduced their distribution support. So I think this is Prudential deciding that I want to take money off the table in their existing exposure, take a new exposure in a smaller entity where they get control. They're not at the mercy of their partner, and therefore continue to have exposure to the India market, but have more control from an operational perspective and take some money back to the holdco level.
Good afternoon, Manas. This is Sharad here. So this is one of the first deals, or the announcement after that FDI increasing from 74% to 100%. Now, how does this change? Earlier there were JVs. Now outright ownership is coming in. Do you see this trend going ahead?
So we've heard about a lot of foreign insurers now exploring India from a new entry perspective. I think the big touching point was that they were not able to exercise control. So if you see this deal also, right, they've taken 75. Why that is important is then the other shareholder is at 25, and there is a difference between 25 and 26 in terms of 25 is not able to block any meaningful proposal. A 26% shareholder can enforce some amount of control or rather veto. So I think this does open up room for more control deals from global life insurers or global insurers in general. So we do expect more and more interest how they solve for distribution without a large local partner. Probably in this case, the answer is Bharti. But there's a reason why historically we've seen banks partner with global insurers. So that will be interesting to see.
We have heard about it. A lot of instances are there, historically speaking as well. But what makes this space very interesting, from a point of view of an MNC, looking at India's insurance segment, and I'm just not talking about the life insurance, I'm talking about health insurance, even asset management. How do you see this space going?
So I think India is still in its nascent stages of product penetration, be it asset management, be it insurance of health, non-health, whatever you may look at it. So they see the opportunity size. It's now a large enough market for them to operate in. They see potential growth and value creation over the longer run. How they crack distribution is the question, because we've seen asset managers at least come in without JV partners and not succeed. Asset managers who've come in with local partners in a JV have succeeded. And insurance as well, we've seen banks plus global players, JVs, do well. iPruLife was probably an example where the bank withdrew full support, and therefore we've had some issues, probably reflecting in where Prudential has taken this step to take a 75% stake in Bharti AXA General.
Right, we discussed about that, but historically speaking, there have been instances also where the foreign MNCs, they do change their partners and they go in somewhere else. Also, we have discussed about Alliance, how things have moved, and also, AXA as well. So how do you see this? Is there a little bit of uncertainty also comes in because now the rules are changed? So can we expect a little bit of shake-up already existing in the Indian space?
I think that is a theoretical possibility. I think the two large players who had concerns around control, based on whatever the media has reported in the past, were Allianz and Prudential. Both have juggled their India exposure in some shape or form. So I think for now, nothing that is expected. But can more players take this approach? That is a possibility. In terms of the life insurers, if I was to go through, most of the foreign partners have already exited in the listed entities. Generally, you still have partnerships, but they seem like stable partnerships. So hard to envisage, but is it possible? Yes.
Yes, and of course, there are some changes also happening in the accounting, the way the movement is happening for the insurances, and we are trying to become as close as possible to the global standards also. So is that also coming with a very positive, momentum for these insurance companies as a view from the MNC?
It obviously helps. It's not that the India businesses were not reporting IFRS compliant numbers to their parents for either internal reporting purposes or consolidation purposes. But yes, it does help that accounting in India and outside India will not be as different as it is today. I think investors also need to understand that a lot is going to change in terms of accounting, and that may not have an impact on their assessment of profitability / valuation for a lot of these listed franchisees.
No, absolutely. And thank you so much for taking time out and joining us this afternoon. So there you go. That's what this deal really means. And that's how you should be looking at the entire insurance space as a whole as well. That's all the time that we have on the show, though. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayan Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. But before that, first let's see what's on the show today. Firstly, we'll be speaking with the management of Hester Bioscience. If you look at the company's EBITDA and PAT growth, it was led by the poultry division, and a consolidated performance was also quite good based on better operational execution. When it comes to KD Green, that is one counter that remains in focus. The stock is down nearly 21%, but the company is targeting a big domestic volume push. What could be the way forward is something that we'll try to decode with the fundamental guest on the show today. Finotex Chemical also continues to remain in focus. The stock is up nearly 26% in the last 1 month. Oil-filled business is fueling the growth for the company in the fourth quarter, and the domestic demand continues to remain quite strong for this counter. And lastly, we'll be also speaking about Sakar Health, given the fact that the company has reported a strong Q4 numbers, and apart from the oncology department, which has led the growth, which were the other factors that aided the company in the fourth quarter of FY26, is something that we'll get to you on the show today. Now, if you look at the market, a stellar recovery from the day's lowest point. The day's low was at around 20,300. Currently we are sitting around 23,600. The 650-700 level is acting as some resistance, but again, a stellar recovery from the day's low point is something that we have seen when it comes to the benchmark. If you look at the sectoral indices, the PSU names are struggling in trade. The consumer durable, media, PSU bank and the PSU index are struggling in trade. But on the gainer side, we have Nifty IT, Nifty Pharma and the private banks that have actually led the gains even for the benchmark index in trade today. But Varsha, when it comes to the small cap names, which are the key stocks that are buzzing there?
Well, let me start with one which is actually buzzing on the back of good volume, I would say. This is GC Ventures. If you see, the volumes are trading at around 14 times of its 30-day average. The stock is up almost 16 to 17%, if I'm not wrong, in trade today. Well, also, Jindal Reel is also in focus again, buzzing on the back of volumes though. Responsive Industries is also up. There you go. Jindal Reel is up almost 12%. Responsive Industries, if you can, it's up almost 9%, of course, on the back of volumes. Finotex Chemical is buzzing on the back of strong, Q4 numbers that the company has seen. Good growth over here. Stock is up almost 18% in trade. Even Sakar Health, well, an interesting play because this company is moving towards, oncology segment, which has a higher margin, and hence market is actually, very bullish when it comes to this counter. Strong Q4 numbers as well. The stock is up 7% in trade. While on the loser side, though, you have Bajaj Electricals, which is, sulking in trade, I would say. Again, you have Bodil Chemicals, which is also under pressure when it comes to this, small cap segment. Well, it's up almost 2%. It has gained that. Well, SH Kelkar is also in focus, and Garuda Construction is also in focus when it comes to pressure. Garuda is down almost 6% in trade. So, a lot of companies are actually, buzzing on the back of volumes, I would say. But one stock which, actually I was talking about is Sakar Health. I would say. Please pull up that chart. It's up almost 7%. Now the Q4 revenue, first let's talk about the Q4 revenue, which was driven by oncology growth and demand traction. Of course, sequential growth was stable with steady execution across markets. Onto the key drivers. Well, this company revolves around CDMO, own brands, exports and also licensing. And the key drivers were for Q4, of course, the oncology business, which emerged as a key growth driver with rising scale. There was a strong demand across geographies, which boosted revenue growth, and the improvement in the operating leverage was also, on a I would say positive side. The oncology is a core story when it comes to Sakar Health, and hence investors are betting on this segment because if you see, this is the main growth engine. But overall, Sakar Health is buzzing in trade. But one stock which is in focus is of course Tata Steel. A good set of numbers, but our colleague Nisha spoke to the management on the growth prospects. Do listen in.
All right, Tata Steel's numbers are strong set of numbers and all-round improvement when it comes to the global business as well, while India business, which is the largest and the heaviest part of their overall portfolio, that remains strong. Let me welcome on the show the management, Mr. TV Narendran, joining in from Tata Steel to give us more sense about this quarter and the quarter that we are currently in. Mr. Narendran, always a pleasure to speak to you. Now, congratulations on a good set of numbers, and there is all-round improvement as well. But how much of it really is coming in because of the global uncertainty and metal prices going up, and that really impacting the realizations per ton, even in UK as well as Netherlands, while India remains strong?
Yeah. Thanks, Nisha, for having me on the show. Yeah, we are in an industry which is always buffeted by geopolitical events, trade issues, etc. And we've had a fair share of challenges over the last few years. So we had actually focused on our operational stability, our cost takeouts, and a lot of that is manifesting itself into the numbers that you've seen. So while we've been helped by prices, I think the cost takeout targets that we had indicated at the beginning of the year, which was about 11,500 crores, is pretty much on track. I think we did about 95% of that. So that certainly helped. The second thing which has helped is Europe taking action to protect itself, because Europe suffered because of the trade actions by the US and also because of imports coming into Europe from elsewhere. So they've brought in quotas, they've brought in safeguard duties, and now more recently announced the CBAM, which will take effect later this year. UK has been a bit late in putting in safeguards and quotas, but I think they did that in March. So both in UK and Europe, we've seen prices go up in the last quarter, which is good. And in India, of course, prices had been creeping up since December. It had gone back to the levels that it was maybe a year back, and now it's looking slightly better because, again, there are cost pressures on the industry, so industry is trying to pass on some of those costs. But the weaker rupee and China steel prices going up a bit in the last 2-3 weeks has also helped reduce the threat of imports into India. So overall, it's been positive. The demand has also been good in India.
That's right. And when we talk about realizations per ton, can you give us a breakup? Because now looks like, Mr. Narendran, that, steel globally, even though the prices are really driven by global prices, but then the factors impacting each of the areas are really becoming much more regional at play. When we talk about UK, Netherlands and India, would you agree with me and give us a sense on the UK as well as Netherlands business as well?
So yes, what you're saying is right, because I think each geography, which is a major consumption center and has local production, is trying to protect itself, right? Started with the US, and now you're seeing that happen in Europe. Europe, maybe 3-4 years back, was really not so bothered about imports coming in from elsewhere. But now they want to make sure that they have a strong steel industry, because they want to focus on investing in Europe on infrastructure, on defense, etc. And they want to have a local manufacturing industry and a local steel industry. Same with the UK. So you are seeing both the governments in UK and in the EU and other basically countries in the EU taking action. So what you're saying is right. I think there needs to be, and there is emerging regional strategy, which basically is making sure that
what we call Atmanirbharta, or what they call strategic autonomy, is preserved. So that local industry is strong and is available for the local government. And we see that in India, we see that elsewhere. So I think that's a positive trend for the industry. But, on a longer term, I think what sometimes people don't realize, if you look at steel prices today, international prices, it's still less than $600, which was the price 15 years back. So this is an industry which operates, in a very, very difficult environment. And 15 years back, steel prices, hot rolled coil prices were $600. Today, it's less than $600 in the international market.
So, Mr. Narendran, you made a very, very valid point. I think very long back, 2 decades back, you had bought Chorus at a higher price than $600 per ton, probably. Yes, please go on.
No, so that's the nature of the industry. So we always have to be competitive. People always say steel prices are going up compared to the lowest steel prices that they've seen. But when you look at it as a long-term average, it's been pretty, it's cyclical, but the average has been pretty flat. So I think that's the nature of the beast for us.
Right. When it comes to UK, the narrowing of the losses, how sustainable is that, and how do you see the break-even point now turning positive? And second, from the UK point of view, also the FTA agreement that the Indian government has signed, what is the benefit that Tata Steel can have? The 2 points on UK business.
So UK, we expect things to keep getting better quarter on quarter. So we saw it get better year on year. We were still negative EBITDA, but about 150 million pounds better EBITDA in FY26 compared to FY25. Quarter on quarter, we saw an improvement, and you will see Q1 better than Q4, and you will see Q2 better than Q1. More specifically, we expect it to be break even certainly by Q3, and we're trying to see if we can be EBITDA break even by Q2, given that the steel prices have got better. The FTA, honestly, for us as Tata Steel in the UK, we were more concerned about the quotas that the UK government would have. And I think that's positive for us, because what had happened in the UK is while the consumption of steel dropped, the quotas were where they were a few years back. So the import quotas were larger than the consumption of certain products. And that was a point with the UK government which they've addressed. So the UK-India FTA, for us is not a big thing from India, but the policy action taken by the UK government is helping us in UK.
Right. And what is the outlook on the picture in Netherlands when it comes to uncertainty around it and even the price points?
So the prices are positive. There is some uncertainty because of the regulatory challenges that we are facing. But, as I've highlighted in the past, the Dutch business has always been self-sufficient. We've never had to support it from India in the last 18 years. All the support from India has gone to the UK business. We expect the Dutch business to continue to be that way going forward. Maybe the margins will get a bit compressed compared to what we were expecting because of some of the regulatory impact, but it will always be EBITDA positive and can take care of itself. I think the key point is investing for new facilities. That will depend really on how do we see the regulatory conditions for the future and the conversations we will have in that context with the government, as well as the support that we can expect.
Right. And finally, Mr. Narendran, of course, Indian market is a very competitive market, and your close competitor has also laid out an expansion plan to become one of the largest production in steel in the world. How are your expansion plans? I see only brownfield downstream.
Yeah. So, I think one is the Indian market is growing. There's space for everyone. Each company will have its own strategy. We want to be, rather than overall market share, we are looking at specific segments where we have a number one and we want to be number one. We will invest in product mix, invest in downstream, invest in our costs, the whole value chain. So some of our acquisitions, whether it's Tata BlueScope or TMLL, a logistics company, all that is focused on how to manage costs better, how to manage the product mix better. So we will be a bit nuanced in the way we look at it. We have the optionality because of all the sites that we have acquired and built. So we have the optionality even today to go to 45 to 50 million tons. If the Maharashtra project takes off, that will add another 5 to 10 million tons to our optionality. So the optionality is there, but the pace of growth will depend on multiple issues.
Yes.
And will be more and more focused on downstream, value added, high-end markets. and look at number one market share in all those segments.
All right, Mr. Narendran, I already see some chink in the armor. It has been a very intensely competitive space, and I see that coming back in some time. Thank you so much, and all the best for the next quarter. Thank you.
Thank you. Thank you, Nisha. Thanks.
Well, this was Tata Steel outlining the growth prospects for next 2 to 3 years, I would say. But Sakar Health, as I was speaking about, well, the core driver for this company is actually the oncology, which people and investors are betting on. The oncology margin, if you see, are 2x more than the general formulation, and they have 55 oncology molecules developed, 32 are ready for launch. So, quite growth people are expecting when it comes to Sakar Health. But Avinash, welcome. Let's actually welcome Avinash Gorakshekhar, who is the founder and head research at Avinash Mentor Research Services. Avinash, welcome at NDTV Profit. I was just speaking about Sakar Health. If you see in the past 2 days, company has given good returns to its shareholder, and oncology growth is the next leg of growth for the company, is what will drive company further. Just wanted to understand your view when it comes to this counter, considering of course the fundamentals and the huge run up that the company has seen. Is it right time for the new investors to enter in, or you should sell off your position?
No, I think, Varsha, Sakar has been one of our old recommendations, and we had actually bet on the oncology project. Clearly, operating leverage now seems to be coming out from this project, which, in the last 2 years, the company has invested more than 150 crores here. And I think they've also decided to, outsource and give their, patent to a European company also. So that's probably the reason the markets is very excited that probably FY27 and 28 are going to be very strong years in terms of profitability. As everyone is aware, oncology enjoys EBITDA margins of almost 30 to 35%. And it's a very strong domain where Sakar has spent a lot of time in developing the modules and putting a world-class facility. So my sense is, somebody who's buying the stock now should take at least a 12 to 18 month view. The stock has risen significantly. So I think a significant upside can happen only once we get the FY27 and 28 numbers. So till that time, the stock will consolidate. The stock has moved up from almost 640 to almost 745 in a very short period of time. So I think many large institutions, large, ultra HNIs have now started buying it. So the going is definitely good, but I think one should buy it in a staggered way to get a better risk reward over the next, say, 12 to 15 months.
All right, understood. Well, viewers, it's time for a quick break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal. Welcome back. You're watching Small Cap Buzzers. Let's start our first conversation with Rajiv Gandhi, the MD and CEO of Hester Bioscience. Sir, a stellar fourth quarter is what we are looking at. From 13 crore EBITDA has jumped to 37 crore. What aided those factors? From what I can see, it's the poultry division which has led the growth.
We have had a good quarter, and that has, of course, made the whole year even look good. The poultry division has definitely done a good business. At the same time, there have been many other factors which have led to this high profitability over here. The product mix. We've been focusing since the last 2 years on changing the product mix so that we are more trying to sell products which are of higher profitability, etc. So that's something which we have done. And another thing also, that there have been many internal changes which we did make along the year, and everything has culminated into a good Q4. Internal changes in leadership team, as I said, product relooking at the product portfolio, looking at certain geographies within India, pushing a little bit on the exports and the tender business. So it's a basket of things that has led to all this to happen in Q4.
Right. Mr. Gandhi, hello. Varsha this side. Welcome at NDTV Profit. You know, FY26, there were some concerns when it comes to tender-related delays, I think, in your animal health business.
Yes.
Just wanted to understand, how is FY27 looking like? If you could give us a ballpark number of your revenue, which you are expecting in FY27, and of course, what will be the margins that investors should expect?
Rather than talking on the top line, I would like to say that as far as the bottom line is concerned and the percentage is concerned, we are confident of at the least maintaining this percentage, of course, with a growth also in the top line. But my commitment is more towards the bottom line. Coming to the tender business, which you first mentioned, Hester Biosciences supplies the PPR vaccine against the immunization of PPR in sheep and goat in India. And the tender procurement by the government of India was a little slow, which led to a whole delayed business picking up in Q4. We have already got the new tenders for which the supplies will start from this quarter itself. And this year we see a much better growth as far as the tender business is concerned, as well as the trade business.
100 crore top line, I believe this is for the first time that the company has managed to achieve this, or must be at least after multiple quarters. Can we expect similar run rate even going forward, sir?
It is our endeavor to keep this run rate and even better it. What I commit is in the bottom line, yes. In the top line, the least is that we will be at the minimum as what we are in the top line. But I'm reasonably sure we will be able to better this.
Then, given that you are giving some commitments, I would want to ask, what is the internal growth targets that the management is eyeing for FY27?
Well, your questions are absolutely too specific on the growth rates. And we have had 2-3 years with which we have struggled a lot. And I can express my confidence in taking it forward. And at a minimum, at least I think we would have a 15 to 20% growth.
All right, so 15 to 20% growth. Sir, but okay, I know I'm stretching this point, but you said 15 to 20% of growth. But if you see your bottom line, which has doubled from FY25 to 26, so I mean, are you expecting doubling of your
percentage? Yes, the percentage of the bottom line would be at the least what it has been shown in this financial year, for sure.
Understood. And also, sir, I just wanted to understand the product mix. So, almost 70% your revenue was from poultry business. Now, considering the animal health also, where you want to take that contribution to?
It is our endeavor that both our divisions contribute more or less equally. In fact, we are even looking at various geographies so that all our businesses have a spread and we are not dependent on any one product line, on any one region. We have reasons to believe that the large animal, the animal health division would grow this year, and the percentage of poultry, which is around 70 at this time, would definitely go down. If you really take a history of all animal health companies, the animal health division, or the division which covers the large animals as against the poultry, is always bigger than the poultry. So in the long run, the animal health division would overtake poultry. But in this current financial year, we see it moving towards both the divisions going neck to neck.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Hester Bioscience. Avinash, quickly your view on this counter. Strong growth target, 15 to 20% growth is what the management is eyeing.
No, I think, Zomit, the company is on a very strong wicket. In fact, it's one of the pioneers to develop, vaccines and typically be a front leader in the poultry industry. And in fact, we have seen very strong numbers even from competitors like Venki, which reported a very strong number performance. So I think the current year is going to be very strong, both for the poultry and the animal healthcare business. My sense is that even at these levels, if somebody were to take a 12 to 18 month call, probably buy the stock in a staggered manner, because liquidity in this stock is little limited. But definitely a lot of value could come in if the investor is willing to wait for the next 12 to 18 months. Structurally, very strong prospects for the coming financial year.
Right. Sharad, coming to you on what's been buzzing on the F&O side.
Well, yes, largely let's see the long build-up of the stocks, which is in focus. And you can see there the technical sell-off is still continuing. These are the stocks which should be in your radar. But IT is something which is showing respite. Let's show the long build-up stocks, what's actually happening here. And if you could just show the stocks where the momentum is happening. And yes, we have Solar Industries and Persistence back on the earnings. And of course, the reversal in the mid-cap IT. Apart from the long build-up, let's also look at a short build-up. That's Amber Enterprises stock is down 15%, and EMS is getting pasted here. It's down 5% as well. Apart from the long unwinding, we have Delivery and PFC making it to the list. Remember, the merger date is something which we are actually tracking this as well with REC. And lastly, I'd like to point out the short covering, and this is also largely IT names. Of course, remove IT, most of the sectors are seeing selling pressure.
Right. Let's go to our next small cap stock, that is KD Green. What's been buzzing here? Let's get in Jasmeet to understand what does the company do and what's the way forward here.
Well, thank you for that. The KD Green is a part of the bigger group, that's KD Group, which is a conglomerate in the business altogether. And let's quickly understand the business structure of the KD Green as a group. Well, the KD Green has currently 4 flagship companies under it. The first one is KD Infra, which manufactures steel fabrication. Then we have Green AAC, which manufactures the AAC blocks. Well, also we have KD Ecosystem, which is into vehicle scrappage system. And lastly, Shivam Pipes, which makes basically the TMT bars and the piece electronic poles as well. Now, why this company remains focuses on the back of that big domestic push a company is planning in terms of all its business. Now, in terms of business model, the company is targeting a big push for the domestic markets to grow further. We also add that the company is catering to power, solar, infra and construction along with AAC. While lastly, on the good outlook, the revenue remains a strong good outlook for next 2 to 3 years, and we do see a good momentum in the stock as well.
Right. Avinash, your view on KD Green?
Yeah, Somit, this is a recently listed stock. In fact, the company has come to the stock market via a reverse merger. Earlier, the company was known as Mangrove Industries. Now the new name is KD Green. And as your colleague Jasmeet mentioned, it is the flagship company of the KD Group. They manufacture AC blocks, they manufacture TMT bars, as well as pipes. And basically, their growth prospects are very largely linked to the power and solar sectors. In fact, the management has indicated that probably this year they could look at a top line of at least 500 crores. And definitely, I think once all the integration is complete, you could see a very strong year in FY27. So I think, investors who want to take a long-term call and, get into this story much earlier than others would definitely try to nimble into the stock. But yes, It will require a little bit of more visibility and liquidity. That is the only issue as of now.
Right. Well, thank you so much, Avinash, for joining in and having a conversation with us. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, this is a show that gets all your stock-related queries answered. You can either call us or WhatsApp us on the numbers that are flashing on your screen up there and ask all your stock-related queries. With regards to where the markets go as of now, off from, of course, the day's low point as we speak for the benchmarks. The Nifty 50 is right now just trading around that 0.06 odd percent levels. We are above the 23,600 levels now. The sharp recovery during the day is what we've seen for the Nifty 50, almost at its day's high point. Let's try to pull up the heat map and see as to what are the counters that have kind of turned in terms of where the performance goes and what has actually turned into green now. A lot of IT names in focus. You have Tech Mahindra topping that chart now, about 4% of an upside, followed by Infosys. All of these names did see a lot of beating down in the last couple of sessions. Bharti Airtel also up 1.8%. JSW Steel, Kotak Mahindra Bank, Sun Pharma, etc. also doing fairly well. But on the flip side, you have Power Grid, which is down by about 3.7%. Tata Steel, though realizations improved, strong Q4, but seeing a downtick for around 3%. SBI, Trent, Bajaj Auto, Maruti Suzuki are some other names that are also under pressure. Let's try to pull up the Bank Nifty and see as to where that is trading at right now and whether recovery has been seen in Bank Nifty also. And yes, there has been a recovery. Now we're trading around 53,500 levels where it comes to Bank Nifty, just about 150 points for downtick. So almost 1,000 points recovery is what we've seen in where the Bank Nifty is concerned, down by about 0.3 odd percent. Let's try to pull up the sectoral heat map and see if things have changed there as well, because overall we saw heavy profit booking in terms of where defense goes and metal goes, realty goes. So still under pressure, but there has been recovery with regards to all of these names as well. PSU Bank down by about 2%, media down by about 2%, auto still continues to be under pressure, down by about 1.8%, but IT top gainer on the charts today, up by about 2%, followed by pharma as well. So that's with regards to where the sectors go. The mid cap 150 and the small cap 250, if we can try to pull that up as well and see as to what the broad end of spectrum is looking like. Recovery is there from the day's low point for the mid cap 150, now trading around 0.5% lower, but the small cap 250 is still, a tad bit under pressure. There has been recovery here also, but still down tick of 1.6% is what we are seeing. Let's try to pull up the advanced decline ratio as well, and then the BSE 500 to see as to what the broader end of spectrum is looking like. Right now, we've got around 2,000 odd declines versus that of 560 odd advances. So still, the ratio is skewed towards the seller as we speak. The BSE 500, of course, a lot of these names buzzing on the back of numbers. Gland Pharma, for example, up 14% on the back of strong Q4 numbers. GE Shipping up 11%. Raymond, Coforge, Tech Mahindra, Persistence. A lot of IT names is what we're seeing in terms of where the green side goes. But on the flip side, Amber Enterprises, I think FY27 guidance cut in terms of where margins go is not something that the street is appreciating, and that's why the stock is down 15%. KC International on the back of Q4 numbers again. Alembic Pharma did come out with its number during market hours on Friday, but I think the stock is seeing reaction today. Symphony again on the back of numbers. So, all of these names are buzzing on the back of where Q4 numbers go. But, let's start taking your stock-related queries, and to, answer them, we're now joined by Vishnukant Upadhyay, who's the AVP Research Advisory at Master Capital Services, and we'll also shortly be joined by Siddharth Khemka, who's the Head of Research Wealth Management at Motilal Oswal, who will be joining us soon. But the first question that we have is coming in on RR Cable, and this is from Shiv Kumar, who's writing us from Bengaluru. Wants to know as to what should be the 1 year outlook for this one, and what should be the target and stop loss that one can expect in terms of where RR Cable goes. Vishnukant, I'll come to you on this one. Your view on the stock?
Hi, very good afternoon. Well, so the stock is looking quite good, and I'm expecting